Okay, so in our previous class, we completed the discussion on marathon of direct taxes, and today we'll be discussing indirect taxes marathon. So, so we'll start with the first topic. What do you mean by tax? Tax is important source of revenue to the government. There are two types of taxes, which is direct taxes, indirect taxes. Direct taxes, incident impact is on same person, whereas indirect taxes, incident impact is on two different person. Direct taxes are progressive in nature, indirect taxes are regressive in nature. Direct taxes is a tax on income, and indirect tax is a tax on goods and services. Direct taxes burden cannot be shifted, whereas indirect taxes burden can be shifted. Now, features of indirect taxes: RCB will win, sir. R for important source of revenue to the government. C for taxes on commodities and services. B for shifting of burden. W for wider tax base. I for inflation in nature. N for no perception of direct pinch, and S for it promotes social welfare. R for it is regressive in nature. Then, what are the constitutional provisions with respect to taxation? Article 265 says no tax can be levied or collected unless there is an authority of law. And Article 246 says, 245 says central government has the power to make law for whole or any part of India, and state government has the power to make law for whole or any part of that particular state. We have an article called as Article 246, which has a schedule called as Schedule number 7. In that schedule number 7, there are three lists: union list, state list, and concurrent list. Now, what are these lists talking about? Union list, whatever is there with respect to all those points, who can make the law? The central government can make the law. State list, whatever is there with respect to that, who can make the law? State government. And concurrent list, whatever is there with respect to all those points, central government and state government can jointly make the law. Now, there was not even a single article in the entire constitution. There was not even one single article in the entire constitution which gave the power to both central government and state government to come jointly together and make it tax law. Therefore, what did they do? They made an amendment in our constitution. An amendment was made in the constitution, and they introduced Constitution's 101st Amendment Act. Okay, by this constitution, see, why did they make amendment in constitution? Because there was nothing in the entire constitution which gave the power to both central government and state government to jointly come and make a tax law. Therefore, they made an amendment in constitution, and Constitution's 101st Amendment Act was passed. By this Amendment Act, they introduced different article in the constitution. Now, we all know, if I want to make any act in India, first I should present a bill in the parliament. So, a bill will be present in the parliament, and it will be approved by Lok Sabha and Rajya Sabha, and then president will sign it, it will become an act. So, the bill which was presented for introducing this Constitution 101st Amendment Act was Constitution 122nd Amendment Bill. It was this bill which was presented, because of which Constitution 101st Amendment Act came into existence. Now, this Constitution 101st Amendment Act spoke about three important articles which are important from GST point of view. Which are these three articles? Article 246A, 269A, and 279A. Article 246A is that article, very important article. It is that article which gave the power to both central government and state government to jointly come together and make a tax law. It was this article which told that, hey central government, hey state government, you both come and make a tax law. Article 269A was the article. Okay, Article 246A, we will continue this series. Article 246A, why is it important, sir? Because it is that article which gave the power to both central government and state government to come jointly together and make a tax law. And it also told that central government has the exclusive power to make a law in respect of interstate supply. For interstate supply, who has the power? Central government. Then we saw the concept of GST. What we understood under the concept of GST? That GST is a tax on value addition. Only if there is a value addition, GST will be levied. Then GST eliminates cascading effect, meaning because of introduction of GST, now there is no more tax on tax. And then in GST there is continuous tax credit available at each and every stage of supply chain. At each and every stage of supply chain, the tax credit will be given to you on continuous basis. And GST burden is on final consumer. The burden of payment of GST is on whom, sir? It is on final consumer. And GST is a consumption based tax. Now, before we had something called as origin based tax, but GST is a consumption based tax, and it follows destination based principle. Okay, important. All these points are important. GST is a consumption-based tax. What principle does it follow? Destination-based principle. And India follows dual GST model. Which model is India following? India is following dual GST model. All these points are very important. Article 246A, Constitution's 101st Amendment Act, Constitution 122nd Amendment Bill. India follows dual GST model. GST is a consumption-based tax, and we follow destination-based principle. Under GST law, sales are also called as outward supply, and purchases are also called as inward supply. The tax which you pay on your sales is called as output tax. The tax which you pay on your purchases are called as input tax. Now, there is something called as nature of supply. Nature of supply means what, sir? Whether a supply is treated as interstate supply or intrastate supply. What is the nature of supply? Now, supply basically has two natures. One is interstate supply, another one is intrastate supply. What do you mean by intrastate supply? If you supply goods or services within the same state or same union territory. Actual definition we will see later in place of supply topic. But as of now, understand that if you supply something within the same states or within the same union territory, it is intra. And if you supply goods or services between two different states, between two different union territory, or between one state and one union territory, it is called as interstate supply. Now, whenever it is an intrastate supply, the tax which you have to pay is called as CGST and SGST. Whenever it is an intrastate supply, you will have to pay CGST or UTGST. Meaning, if you supply within the same state, CGST, SGST, within the same union territory, CGST and UTGST. However, in case of interstate supply means you are supplying goods or services to a different states, to different union territory, two different union territory, two different states, or one state and one union territory. In such cases, no, you levy a tax called as IGST. Now, union territory. Now, please note, in India, there are totally 8 union territories. But for the purpose of GST law, there are 3 union territories which are called as state. Like Union Territory of Puducherry, Delhi and Jammu and Kashmir. There are 3 union territories, Union Territory of Pondicherry or Puducherry, Delhi and Jammu and Kashmir. These are treated as state for the purpose of GST law. So if you supply within these places, then you will have to pay a tax called as CGST and SGST. Whereas other union territories like Chandigarh, Lakshadweep, Andaman, Nicobar, Diu Daman, Dadar Nagar Haveli and Ladakh, these union territories are treated as union territories only. So if you supply within these places, you will have to pay a tax called as CGST and UTGST. If you supply between states, between union territory, it is always IGST. But if it is within, then CGST, SGST or CGST, UTGST. CGST, SGST will come if it is in 3 union territories, which is Puducherry, Delhi and Jammu and Kashmir. Why? Because they can form their own government. Now, what are the deficiencies of indirect taxes? The deficiencies or disadvantages of indirect taxes are existing indirect taxes. Existing indirect taxes means what? The indirect taxes which was there before GST came into existence. Now, certain transactions were taxed as both goods and services. Some transactions were treated as goods also, and they were treated as services also, and they were taxed. Multiple taxes were collected by the same state government. One single state government was collecting multiple different types of taxes. Okay, one single state government. CENVAT was not integrated with state level VAT. The central value added tax, they were levying CENVAT when you supply from one state to another state. CENVAT was levied or CST was levied. That was not integrated, that was not linked with the VAT which was levied by state government. And the tax on services also was not integrated with tax on goods. And CST was not VATable. There are advantages of GST. There are different advantages of GST depending upon which sector it is. GST is removing cascading effect. Because of GST, there is ease of compliance. There is uniform tax structure. And it improves competitiveness. It is beneficial to manufacturers, exporters. It is simple. It has better control for leakage of taxes. Higher revenue efficiency is there. It is boosting Make in India initiatives. It reduces overall burden for a taxpayer, and it is very transparent. Now, another important question which they can ask is, what are the taxes which got subsumed with GST? What are the different taxes which got subsumed with GST or merged with GST? The central taxes, and there are central taxes and state taxes. The central taxes which got subsumed with GST are central excise duty, central sales tax, services tax, CVD and special CVD. Then we have excise duty on medical and toilet preparations, and all other types of surcharge collected by the central government for supply of goods and services. There are state taxes. That state taxes which got merged with GST are VAT or sales tax, entertainment tax except those collected by local bodies, tax on lottery, betting and gambling, purchase tax or also called as entry tax, and luxury tax. All other surcharge and cess which are collected by state government for supply of goods or services. Now, are there any taxes which did not get merged with GST? Yes. Excise duty on alcoholic liquor for human consumption did not get merged with GST. Basic custom duty which is collected for importation or exportation of goods. Then property tax or stamp duty, electricity duty and entertainment taxes collected by local body. These are the different taxes which did not get merged with GST. Now, on tobacco and tobacco products, GST as well as pre-GST taxes will be levied. On tobacco and tobacco products, GST as well as the taxes which was collected before GST, that is central excise duty, will be levied. On opium, Indian high, narcotic drugs and all, GST as well as pre-GST taxes, which is state excise duties, will be collected. Alcoholic liquor for human consumption, GST will never be collected. And on HP man, high-speed diesel, petroleum crude, motor spirit, aviation turbine fuel and natural gas, on these 5 products, GST will be collected from a future date as may be notified by government. As on today, no GST is collected on this 5 products. Next, GST Common Portal. Another important point, GST Common Portal. What is GST Common Portal, sir? GST Common Portal, it is a website which is designed and developed or managed by a company called as GSTN. GSTN is a Section 8 company, non-profit organization. GSTN full form is what, sir? Goods and Services Tax Network. Now, for CS student, the question which they ask in examination for this point is, write a short note on GSTN. Okay. Now, then, GSTN, how do I access this GSTN, sir? gst.gov.in. Now, how a taxpayer can access it to internet and tax official can access it through intranet. The functions of GST Common Portal, it helps you in filing of your returns. It helps you in filing registration applications. It helps you in generation of payment challan, acts as clearing house for settlement of IGST, and it generates business intelligence. Then we have Article 269A, which talks about levy and collection of GST on interstate supply. Whenever you make an interstate supply, you will have to pay GST. That GST which you have to pay is called as IGST. This IGST which is there, it will be collected. This IGST which will be there, it will be collected by central government and it will be distributed by central government or apportioned by central government to the central government as well as consumer state. Central government has the power to formulate the policy on place of supply and other provisions related to interstate supply. Now, Article 279A is also important, or they may ask a question about what is GST Council, write a short note on GST Council, or what are the recommendations which can be given by GST Council. GST Council was constituted, so this Constitution 101st Amendment Act, when it came into existence, they told that within 1 month of this act, GST Council should be formulated by President of India. And yes, it was formulated also. The provision came into existence on 12th of September and GST Council was formulated on 15th of September. Now, this GST Council consists of a chairperson who is the Finance Minister of India, and it will also consist of other members who are the union ministers or central ministers who are in charge of revenue and finance, and ministers of finance or taxation or any other person as may be nominated by state government. Now, these members should select one among themselves to be vice chairperson. Now, GST councils give recommendation on taxes, surcharge and cess to be subsumed or not subsumed with GST. They will give recommendations with respect to what are the GST rate on goods and services which are required to be levied. What are the goods and services on which GST should not be levied at all, which will be exempt. Principles for determining the nature of supply and place of supply. How do I classify different goods and services and what is the threshold limit for taking registration under GST. All these different recommendations can be given by them. What will be the date from which GST will be levied on HP man? Or what are the special provision which I have to make for special category states? There are totally 11 special category states, which is Sikkim, Nagaland, Manipur, Assam, Arunachal Pradesh, Meghalaya, Tripura, Himachal Pradesh, Uttarakhand, Mizoram, and Jammu and Kashmir. Yes, Nagaland, ma'am, through Michael Johnson. Now, sir, how is a decision made at GST Council, sir? The decision is made by having a meeting. Now, the minimum number of members who are required to be present in the meeting is half of total number of members. So, the decision in GST Council is taken by simple majority of not less than 3/4 of weighted votes of members present and voting. So, they are going to take majority. Majority is more than 50% is majority of not less than. What is majority for this purpose? 3/4, meaning 75% of weighted votes of members who are present and voting. The weight which is assigned to central government is 1/3 and weight assigned to state government is 2/3. Next, okay, wait, the first topic. Now, what I'll do is I'll show because there is a compulsory question which will come from this theoretical topic also. For CS as well as CMA, what is the topic which is going to question is going to come on and tell you. Ding, 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 ding. CMA material, not downloaded. CMA Inter study material. My paper is Group 1, Indirect Tax. Now, of course, you guys will be knowing that they have given weightage over here only. Concept of GST will come for 5 marks. Okay, concept of GST will come for 5 marks. Customs will come for 10 marks. In question paper? It's from concept of GST. No. First question is concept of GST. Second question comes from Goods and Service Tax Law ka first chapter. Whatever I have discussed in my class, the first chapter which is there, no. That includes 4.1, 2, 3, 4 and 5.1. It includes 5.1 also. So this all combined together will be 14 marks. Yeah. Now, from this concept of GST, first I am discussing for CMA students. What is the question which can be asked, sir? What are the features of GST? Okay, what are the features of GST? RCB will win, sir. Who will win the IPL this year? RCB will win, sir. R for important source of revenue to the government. C for taxes on commodities and services. B for shifting of burden, etc. You know this point. Now, most important question is they are going to ask is normally tested question is difference between direct and indirect taxes. And please note, when they are asking this difference, this is what you are supposed to write. First, what is the meaning of direct taxes, indirect taxes? What is the nature? Progressive in nature, regressive in nature. Incident and what do you mean by progressive in nature? Higher taxes is levied on a person earning higher income. Regressive in nature means all persons will bear equal tax on goods and services consumed by them irrespective of their ability. Incidence and impact, same on all the, it will same falls on the same person. The person who is earning only has to pay the taxes. Here it is on 2 different person. Income tax and GST is example. Tax evasion is possible under income tax, but tax evasion is normally not possible in GST. Inflation, direct tax helps in reduction of inflation. Indirect taxes will increase the price of product, therefore it will increase inflation also. Burden can be shifted, cannot be shifted. Taxable event is taxable income of an assessee, supply of goods or services. Then entry number 82 is important. Entry number 82 is important. Entry number 46 is important. Entry number 83 is important because that helps in levying income tax. List 1, list 2, list 3 is nothing but union list, state list, concurrent list. There are different names for that, okay? After that, you can ignore all these points. Constitutional validity. You should know what is Constitution 101st Amendment Act. And from which date did GST come into existence? July 1st, 2017. Now, introduction, you should be knowing about GST Council. Article 279A, GST Council. What is GST Council? What recommendations can be made by GST Council? 17, 17. Next level fighting only are doing 17 were you all even born that time? Levy and collection. GSTN is important. GSTN is important, very important. Same question is important for CS student also. Many times it is asked. GSTN is nothing but GST Common Portal. What are the functions? What are the functions? And what can be done in GST Council website? Important question. Silent features of GSTN. Okay. Need of GST in India. Need of GST in India is nothing but disadvantages of pre-GST law. What are the taxes subsumed with GST? What are the taxes not subsumed with GST? Very important question. Benefits of GST, again important question. Features of GST to we know. Now GST compensation cess is also there in first topic. It is there for CMA also, CS also. GST compensation cess. See, now what happened was, see, before the taxes which was collected by government was consumption, the destination based tax. Sorry, origin based tax. Origin based tax means what, sir? Tax will be paid to that government where the goods are originating from, where the goods are coming from. That government will get the tax. But GST is a type of tax where the tax is given to whom? That government where the goods are destined to, destination based tax. Now because of that reason, whatever was collected before GST law, that revenue was going to which state? That state was selling the goods. Now therefore there were many states in India which were very rich, like Maharashtra or Tamil Nadu, etc., because the goods were sold from that places. Okay, because more manufacturing industries were there. Now these people will definitely object for GST because they are going to lose the revenue by GST, because GST says it is destination based principle. So they are going to lose the revenue under GST law. To compensate the loss of revenue by these people, they introduced an act called a tax called as GST compensation cess. So GST compensation cess was introduced and it is levied on products which are demerit products, meaning which are high value products or which are products like pan masala, tobacco products, etc. On this, they are also called as sin goods. They are levied on these sin goods, and this tax will be levied up to a period of 31st of March 2026. Now they may ask you, what is the growth rate for this? 14% is the growth rate. What they'll do is they'll take the tax revenue for the base year. Base year is the year before GST law. GST started in 17-18. Before it was 16-17. That will be taken as base year. From there, whatever taxes they were collecting in that year, add 14% every year. That much amount they would have collected if GST would have not been introduced. Yeah, that is all about this chapter. Levy and collection, this is another topic. Interstate supply, intrastate supply, we know. Concept of mixed supply, composite supply, that will learn in supply topic. Now same to same, if I want to talk from CS point of view, their book is black and white. Life is also black and white, Papa. Too much is there. When you see their syllabus, no, too much information is there, because for them in finals it is optional subject. They don't have to take everything. They have included in intermediate only, Papa. Okay, so for them, what were the taxes which got subsumed with GST, pre-GST law? Yeah, so this is what are the limitations of GST. One question which is important, meaning what are the limitations of GST or what are the disadvantages of old GST regime, existing GST regime. Then journey of GST they will not ask. Then we have what is outside GST, meaning what are the taxes which is not subsumed with GST law. Then Taxes subsumed with GST, very important. Then same this article 246A, the same articles which we have discussed in the written notes. What is GST Council? Very important. GST Council. What is important is what are the recommendations can GST Council give? That is important for both of you. First chapter is this much only. In second chapter comes the GSTN. What do you mean by GST? They have given GST is a destination based tax. Then GSTN, GST Common Portal. And India follows dual GST model. What do you mean by dual GST model? Write a short note on dual GST model. Then what are the taxes collected? This is okay, fine. Integrated tax is fine. What is domestic supply, interstate supply, intrastate supply? That is all fine. It is all okay. You can ignore all these points. You can ignore the definitions because chapter wise you will see definitions. UT GST law also you can ignore. And one point is that GST compensation cess. All these points, CS students, you can completely ignore because these are all covered in future chapters. And write a short note on GST compensation cess or GST compensation to state act. So here you will have to write a short note. Just write the silent features of this act. Only this around 5 points. If you remember, that's sufficient. Okay. Now we will see question paper once. After this, all the chapters are same, exactly copy paste chapters. Now we are going to see what's up. See, what is the question asked? What is the difference between direct taxes, indirect taxes? This is from part 1. I mean the 4 point something. And what are the key benefits of GST for business and industry and for consumer? Please note, in examination they ask this question only, theory question straight away. See, just imagine if you know the difference, don't you think it will take hardly 2 minutes for you to write the answers? Then, in the next paper, what was the question asked, sir? Discuss the difficulties of pre-GST regime which were removed under GST. So what are the difficulties of pre-GST regime? Whatever they have given over here, you should write that one. Hey, we have covered this multiple tax. Hey, they have given, see, multiple taxes were collected, imposition of taxes was a serious problem, VAT was levied on value included with excise duty, etc. Then input tax credit was not there, cascading effect was there. But you should write this point only in examination, okay? I mean, and second question is what, sir? Discuss members of GST Council. Also 5 recommendations. Hey, whatever I am telling, they are asking that only. I am only framing the question paper. Everything I am only framing. Explain the concept of indirect taxes. What are the features of indirect tax? Write a short note on meaning, function and silent features of GSTN, which is GST Common Portal. Hey, whatever I am telling, are they asking that only or not? Yes, sir. Because that is only there in that topic. What else will they ask? What is the difference between direct and indirect taxes? Discuss the concept of mixed supply, composite supply, that you will see now. Yeah, okay. Shall we start with the actual discussion on GST? Now see, just by discussing that first chapter we have discussed in the classroom, you will get almost 14 marks or 15 marks, whatever marks you want, if you study, of course. Next, supply under GST. Supply under GST. Rajani, Maja is there. Ranjini, sorry. Ranjini is? After direct tax, she joined. After direct tax. Indirect tax, she was there. After tax. Ritika is also like that only. Shruti? Supply under GST. Supply under GST. Supply under GST. Now actual GST starts from this chapter. Now we have different acts under GST law, but for your examination mainly you are supposed to study CGST Act and some parts of IGST, which is one chapter called as Place of Supply. Place of supply is there. That one chapter is from IGST Act. All other things which is there, you are studying only from CGST Act. So unless until mentioned, what is the section which I am going to refer is which act, sir? CGST Act. Section 1 talks about title, extent and commencement. Section 1 of which act, sir? CGST Act talks about title, extent and commencement. Title of the act is what? The title of the act is Central Goods and Services Tax Act. It extends to whole of India and it has commenced from which day, sir? GST has commenced from 1st of July 2017 and in the state of Jammu and Kashmir it started on 8th of July 2017. Definitions are there in section 2 which you will see whenever required, and section 3 to section 6 is not there in the law at all. I mean law in the sense for you in the syllabus it is not there. Okay, which talks about officers, their hierarchy, roles and responsibilities and powers. Then section 7 which is supply under GST. Supply under GST means what, sir? Supply under GST means supply under GST. Now there is something called as taxable event. Taxable event is the reason because of which you are paying the taxes. Don't you feel when we do marathon, it feels that syllabus is so small only. Correct? No, I mean yesterday income tax we completed in one day only. We completed everything. We completed. Did not miss anything. What is there? Today we will complete in 2-3 hours. We will complete GST. GST I need only 90 minutes to complete GST revision. Because we are discussing, it will take time. 90 minutes is not, I mean 1.5 hours only. Full GST is IPOA. Taxable event means what, sir? It is the reason because of which tax is payable. You are paying GST because of what reason, sir? The taxable event under GST law is supply of goods or services or both. The taxable event under GST law is supply of goods or services or both. Now the meaning of supply is given in section number 7. So very important is our discussion on section number 7. Section 7 subsection 1 clause A says supply includes all form of supply of goods or services or both, such as sale, transfer, barter, exchange, lease, license, rental, disposal, made or agreed to be made by a person for a consideration in the course or furtherance of business. Meaning, if I want to call something as a supply as per 7(1)(a), then 5 things are required to be there. What are those 5 things? That supply should be of goods or services. That supply should be made or agreed to be made. That supply should be by a person. It should be for a consideration in the course or furtherance of business. Now, what do you mean by goods? Goods means every kind of movable property other than money and securities. Meaning whatever is movable on this earth is treated as goods, except money and securities. Even though money and securities are movable, they are not treated as goods other than money and securities, but includes actionable claims, growing crops, things attached to or forming part of land, which can be further supplied. Goods also includes the growing crops. It includes actionable claims, growing crops, the things which are attached to land or which are forming part of land, minerals and all, which can be further supplied. If you can supply them, then it is also treated as goods. What do you mean by services? See, this definition and all they will not ask you. One definition which they normally ask is definition of either consideration they will ask you, but one major definition which they normally ask is aggregate turnover. Aggregate turnover, that is normally asked, but other definitions are just something which you have to know. Yeah, goods means every kind of movable property other than money and securities, but includes actionable claims, growing crops, things attached to or forming part of land. And services means what, sir? Anything which is not goods, money and securities. Anything which is not goods, money and securities are treated as services. But services shall include activity in relation to use of money or conversion of money, for which they are charging a separate consideration. Okay, services means anything other than goods, money and securities, but it shall also include what, sir? Activity in relation. See, money and securities are not treated as goods, but if there is any activity in relation to use of money or conversion of money, then it will be treated as service. If there is a separate consideration charge, a only activity in relation to use of money is not service. For example, I gave you 1 lakh rupees, you gave me back 1 lakh rupees after 6 months. Is it a service? Lawmaker says no. If I charge 5,000 rupees interest from you, yes, it is a service. If a separate consideration is charged, then it is a service. What is a consideration? Consideration includes payment in money or otherwise. Consideration means what, sir? The payment which you are making in money or otherwise by the recipient or any other person. That payment can be made by whom, sir? Recipient or any other person, it does not matter. But it shall not include the subsidy given by central government or state government. Provided that refundable deposits will not be treated as consideration unless they are adjusted as consideration. Then consideration includes monetary value of any act or forbearance. Monetary value of any act or forbearance by the recipient or any other person. Whatever services any person is giving to you, take the monetary value of that. If someone is doing an act to you, what is the monetary value of that particular act? Okay. Consideration includes payment in money or otherwise by the recipient or any other person, but it shall not include subsidy given by central government, state government. Similarly, monetary value of any act or forbearance by the recipient or any other person, but it shall not include subsidy given by central government or state government. Provided that refundable deposits which are there, they will not be treated as consideration. Anything which is refundable is not a consideration. Why? Because you are going to give it back. Correct. No, refundable deposits are not treated as consideration unless they are adjusted as consideration. Unless they are adjusted as consideration. Now, recipient to arrow marks. Recipient, check for a particular transaction of supply of goods or services whether consideration is there or consideration is not there. If for a transaction, if consideration is there, for example, I am taking marathon. Is there any fee which you are paying? For the classes you are paying the fees. Correct? No, for the classes you are paying the fees, so consideration is there. So the normal classes which I am taking, consideration is there. Therefore, for that, who is treated as recipient? The person who is paying the consideration. Okay, whoever has paid the consideration, you have paid your fees, your parents have paid your fees, that person is treated as recipient. It does not matter who is coming and attending the class. Who has paid the fees, that person is recipient. If consideration is not there, for example, this free classes I am taking. Marathon is, let us say it is free classes which I are taking. Now in such cases, who is the recipient, sir? The person to whom the goods are delivered, the person to whom the services are rendered. Whom am I giving the services to? I am giving it to you. Therefore, you are the recipient. So, recipient, consideration is there, consideration is not there. If consideration is there for both supply of goods and services, the person who is paying that consideration will be treated as a recipient. And if consideration is not there for supply of goods, the person to whom the goods are delivered, and for supply of services, the person to whom the services are rendered. Next, most important section is section 7, subsequent clause B, which talks about importation of services. Now, if you are importing any services, and if the services are imported for a consideration, it does not matter for what purpose are you importing, whether personal purpose or business purpose, they will be treated as supply. If you are importing any services, and if the services are imported for a consideration, whether that services is imported by you for your business purpose or for your personal purpose, it does not matter, because it is importation of services, it will be treated as supply, without giving an effect for what purpose you are importing. But what is the logic, sir? You should import the services and it should be for a consideration. Now, what do you mean by importation of services? Now, if there are three points, if these 3 points are there, all the 3 points are there, then I will call something as importation of services. Importation of services is something wherein the supplier of services is outside India. The person who is giving the services to me is where, sir? Outside India. The recipient of the services is in India. And the place of supply of services is where, sir? He is also in India. Meaning the person who is giving the services should be outside India. And the person who is receiving the services should be in India. And the place of supply should also be in India. You okay, not okay? Like normally every day or every night, I don't know, Praveen takes services from outside India. Someone is there. Okay, where? I don't know. Russia, Thailand. Okay, from Thailand he is taking services. Okay, he is taking services. So supplier is there outside India. Recipient is there in India, and place of supply is in India. What is this treated as importation of services? Now, is he paying any consideration for it? Are you paying any consideration, sir? Yes or no? Yes, he is paying some consideration. Now, because he's paying some consideration for that services, can I say, though he is importing the services for his personal purpose, though he is importing the services for his personal purpose, it is treated as supply. It is treated as supply, meaning he will have to pay GST. Yeah, okay, not okay? Section 7. Now, some people are asking whether you are paying GST or not, but one person is asking, can I also join you? Hey, that way. Venkat, chat chippy waiting, Venkata. Now, section 7, subsection 1, clause C, talk important. Section 7, subsection 1, clause C says, what are the activities which will be treated as supply even if there is no consideration? See, we saw 2 points, 7.1c, 7.1a and 7.1b. Both the points told consideration should be there if you want to call something as a supply. This section 7, subsection 1, clause A said, supply includes all form of supply of goods or services or both such as sale, transfer, barter, exchange, lease, license, rental, disposal made or agreed to be made by a person for a consideration in the course or furtherance of business. Correct? So 7.1a says consideration should be there and 7.1b is there. 7.1b told importation of services for a consideration. So both 7.1a and 7.1b is telling that consideration is required to be there if you want to call something as a supply. 7.1c says, I will give you list of something, for those will be treated as supply even if there is no consideration. Meaning 7.1c will talk about few activities or transactions which are always a supply even if there is no consideration. Now, section 7, subsection 1, clause C says, activities specified in schedule 1. There are some activities which are listed where say in schedule 1. These activities will be treated as supply even if there is no consideration involved. Even if there is no consideration involved. What are those activities? Point number 1. There can be only a separate theory question on these activities. Okay. Point number 1 is permanent transfer or disposal of business asset on which input tax credit has been availed. Permanent transfer or disposal of business asset on which input tax rate has been availed. So if you are permanently transferring a business asset, for example, let us say this whatever this is called as this mic only. Yeah, let us say this mic is of no use to us. I am permanently transferring it. There is a dustbin. I am throwing it in that dustbin. It did not go in dustbin. Okay, you want to stay with me? It is not going. It wants to stay with me. Okay, so if I permanently transfer this or if I permanently dispose of this without consideration, I am throwing it in the dustbin. Dustbin will pay me money. Correct? No, it will not pay any money to me. Now I am permanently transferring or disposing of this business asset. It is a business asset for me on which I have taken input tax credit. When I purchase this, I have availed input tax credit. Now, though I am not getting any consideration, lawmaker says it is a supply. Sir, how will you pay GST, sir? That you will study in value of supply. Okay. Then, supply of goods or services or both. Okay. Supply of goods or services or both between related person. Between related person or between deemed distinct person referred to in 25.4 or 25.5 if it is made in the course or furtherance of business. If you are supplying what, sir? Goods or services to your related person or to your deemed distinct person, if that supply is made by you to your related person free of cost, I will call it as a supply even if there is no consideration, provided it should be in the course or furtherance of your business. Now tell me, is my mother-in-law my relative? Is my mother-in-law my relative? A mother-in-law relative or not? Is she my relative? GST law says no, she is not relative. Now please note, don't mix income tax with GST. Okay. Income tax and GST should not be mixed. GST law says mother-in-law is not relative. Who is a relative under GST law? For me, my spouse is relative, my children are relative, and my dependent, whoever it is, dependent relative is relative. If someone is dependent on me, like dependent brother, sister, father, mother, etc. Normally, who's my relative? My spouse, Venkat, my spouse, and my children. They are always related. Okay, so now, if I supply any goods or services to my related person or to my distinct person, deemed distinct person, what it means we'll see. If it is made in the course of business, only then it will be treated as supply, even if there is no consideration. Now, anything which I give to someone for free is supply without consideration only. So for my employee, I am giving something to him for free. I am giving a gift. Every year during Diwali I give something, Christmas I give something, Eid I give something, Pongal I give something, Yugadi I give something, I give gift to them. Okay, I keep on giving the gift. Lawmaker says, provided that any gift given by employer to the employee, if the value of the gift is not exceeding 50,000, it is not a supply. 50,000 rupees gift I can give to my employee, single employee, in a year. Okay, so limit of 50,000 is per employee per financial year. Sir, what if it is more than 50,000? Fully taxable. Now, deemed distinct person. Deemed distinct person means what, sir? Deemed distinct person means these are assumed to be distinct person. These are Kardapani distinct person. In Tamil, what is it deemed called as, you know? Huh? Tamil. Yensi Karda. Nenchi Karda or Kardapani. What is Kardapani? Then Gube, you know. Not pure. I speak purely Gube. I speak pure Tamil only. Kardamani distinct person. Kardamani only, no?
Kardam means dark beach, sir.
Karda Padigar, what I am telling that only. Okay. You are correct, sir. Varsha is telling. Yeah, Varsha. I know. You only taught me Varsha. Varsha only taught me this. In our classroom only, I know. You have Varsha in your class also?
No, sir.
Oh. Yeah. Oh, Varsha, were you Alan sir's favorite student? They are telling here, they are telling. Why Alan sir spoke about her in your classroom? Oh. Maja is there. Bills, you are exchanging, Varsha. Deemed distinct person. I don't take name of any student in my answer. Yeah. My permanent. Yeah, Sari shop is there, so why will I take anybody's name? Deemed distinct person. Yeah, 500 crore per turnover. You want to?
How will you make you buy?
You come in Sari tomorrow. Nice. Okay, deemed distinct person. Are you actually more than everyone? Venkat is feeling very happy. Oh wow, I see him in Sari and Venkat. Deemed distinct person. Deemed distinct person. Deemed distinct person, section 25.4 and 25.5. Now 25.4 and 25.5 is a topic from your registration chapter. Deemed distinct person means they are assumed to be distinct person. They are actually not distinct, but we are assuming them to be different. Meaning, what is section 25.4 telling? Section 25.4 says a person who has obtained more than one registration. If any person has obtained more than one registration in a state or more than one state. So if I take registration, more than one registration, whether in Karnataka only I am taking more than one registration or I am taking more than one registration in Karnataka, Tamil Nadu, different states I am taking different registration. So if a person is taking more than one registration, then he shall in respect of each of those registration be deemed as distinct person. He will be called as distinct person for each of those registration. Okay. Section 25.5 says, meaning section 25.4, what is the criteria for differentiating registration? 25.5 says, where a person has an establishment registered in a state and also has another establishment in another state or union territory, this establishment will be deemed as distinct person. Sir, I didn't understand this. If you are a person who is having an establishment in a state which is registered, I have a Priya Sarees in Karnataka which is registered. So established in a state which is registered, and I also have Priya Sarees in Tamil Nadu. Whether it is registered or not, it does not matter. These people will be deemed as distinct person. If Tamil Nadu and Karnataka both are registered separately, they are always distinct person as per 25.4. But if Karnataka is registered, Tamil Nadu is not registered, then also they are distinct person as per 25(5). Now please note, who is the owner of all these businesses? Dilip. There is a single owner for all these businesses. The owner is same, but still they are telling we are going to call it as different or distinct person. Hey, what does this mean? Basically, this means if I supply something for free from my Karnataka branch office to my Coimbatore branch office, lawmaker says it is a supply. It is a supply if I supply something for free. Why? Because in the eyes of GST law, they are different person. For GST purpose, they are different person. Next, supply of goods by principal to his agent or vice versa. Who had come to give services over here? Venkat had come on. Praveen, oh, you both only. Oh, wow. So the feelings is coming. Supply of goods by principal to his agent or vice versa. See, look at the smile which Venkat has in his face. Full blushing. I mean, if you actually observe from here, more than his sweatshirt, his face is red. Nice, nice. All insurance, you are missing something, no problem. Para 3, point number 3. Supply of goods by principal to his agent or vice versa. If you are supplying goods, who is supplying goods to whom? If you are supplying goods, principal is supplying the goods to agent, or ulta is happening, vice versa is happening, wherein the agent is undertaking to further supply those goods on behalf of principal in his own name. Whose name? Agent ka own name. Then whatever is supplied for free is deemed as treated as supply. Please note, what is this point telling? Let us say Priya Sarees wants to do business in Mumbai also. Okay, so Priya Sarees is appointing Karina Sarees as their agent. So I am going to supply sarees for free to Karina. Karina, if she has to sell my sarees in Mumbai, I will have to supply some sarees to her. I am supplying those sarees to Karina for free. Now lawmaker says, Dilip, whatever you have supplied for free, I will call it as a supply. When will I call it as a supply? If when Karina is selling the sarees to the customer, Karina is giving the invoice to the customer in her name. Basically, she is selling my sarees. Okay, so if I give the invoice directly to the customer, whatever I have given to Karina is not a supply. But if Karina is supplying it to the customer, and for that supply, Karina is giving the invoice to the customer in the name of Karina only, then whatever I give to Karina for free is a supply. Then importation of service. Please note, importation of service is very important. Okay, importation of service as its whole. 7.1b talks about importation of services, and point number 4 talks about importation of services. Importation of services by a person from his relative outside India or from his another establishment located outside India, if it is made in the course or furtherance of business. Meaning, if you are importing any services, from whom are you importing the services? From your related person who is located outside India. You have your relative who is located outside India, you are importing services from him. Or you have your own branch office outside India, you are importing services from that branch office. Now, even that, if that services are imported by you for free, that will be treated as supply if you have imported the services for your business purpose. So basically, importation of services, crux if you see, if you are importing services for a consideration, it is always a supply. See, if you are importing of services with consideration, whether it is for business purpose or personal purpose, whether it is from a related person or non-related person, it is always a supply. Who says this? 7.1b says, because it talks about importation of services with consideration. But if I am importing services without consideration, then to call it as a supply, I should import it for business purpose and from my related person. Then only it will be treated as supply, or else it will not be treated as supply. Okay, section 7.1a. Section 7.1a. This is again time pass, not required. Section 7.1a says what, sir? Notwithstanding to any other provisions of the Act or any other law for the time being in force. Meaning, not following what is there under GST law or any other law for the time being in force. If there is any activity by a person to its own members for a consideration, then it shall be treated as supply. Meaning, if there is any activity or transaction by a person to its own members. So if I am supplying goods or services to my own members, meaning this AOP BOI is there, like Resident Welfare Association is there. The members of Resident Welfare Association is the people who are owner the flats. So the Residential Welfare Association is giving services to these flat owners. For that services, they are supposed to charge GST. Okay, because it is a supply. Section 7.2, again an important section. Negative list of supply or no supply. Negative list of supply or no supply. Transactions which are neither treated as supply of goods nor it is treated as supply of services. Section 7.2. So government notified. Government has notified two things. This is not relevant, but Schedule 3 activities is very important. Government has notified two things. Activities performed by Panchayat or municipality under Article 243G or 243W and grant of liquor license by state government. These two things are treated as not a supply. These two things are not a supply, meaning even, see, Panchayat is undertaking various different activities for which Panchayat is going to charge money from you. Okay, though it is in the course of their business, they will not charge GST from you. Why? Because it is not regarded as supply. Similarly, liquor license will be given by state government, for which they are going to charge money from you. Lawmaker says, what is this? Moye moye bara. Moye moye. Nice it was. Schedule number. The answers like this only, no? You have you. I never knew. Okay. I saw my daughter. So one day in school there will be friends who will be watching all these things. Okay. So one day she's coming in front of me and doing moe. Ananda, what happened to this Tarkori Gove? Why are you doing like this? And I had no idea. Before I knew that this word moe, but she has also never seen that reel. Okay. She does not meaning we don't give her phone, but she's telling, okay. Now for me, somewhere I have heard this tone. She does not know how to pronounce also properly. I just 3-4 year old. So she does not know how to pronounce. I have heard this tone. I have heard this tone. One day when I was scrolling, then that same song came. Then she came. Again. Maja is there in life. Yeah. Schedule 3 activities. Schedule 3 activities. Schedule 3 activities important. They can ask a question on these activities. What are Schedule 3 activities? These are activities which are not a supply at all. Services given by employee to the employer in the course of employment. Whatever services who is giving to whom? Employee is giving to employer in the course of employment. Services given by court or tribunal. Please note, whenever you are going to a court, no court is going to charge some money from you called as hearing fees, not a supply. Services given by MLA, MP, President, Prime Minister, Chairperson of GST Council, etc. Services by way of funeral, burial, cremation, mortuary, including transportation of deceased, dead body related services, not a supply. Then sale of land, not a supply at all. If you sell a land, GST will never be levied. Similarly, sale of building subject to para 5B of Schedule 2. Now, para 5B of Schedule 2 says, if you sell a building, sale of building, if there is a consideration for the sale of building, when is that consideration received? If it is received before completion certificate or before first occupancy, then it is a supply. Meaning I am selling building to someone, I am selling a land to someone, GST is never applicable. It is not a supply at all. But if I am selling a building to someone, I will check when is the consideration received. If the consideration is received before completion certificate or before first occupancy, yes, it is a supply. Because building is not yet constructed at all. See, after construction, you are supposed to take completion certificate. Before completion certificate only, you are selling it. So it is a supply. But if it is sold after completion certificate, after first occupancy, it is not a supply. Then actionable claims except lottery, betting and gambling, online money games, casino and horse racing. Meaning, actionable claims is not a supply. If you are dealing in actionable claims, it is not a supply. But if that actionable claim is lottery, betting, gambling, online money games, casino and horse racing, it is a supply. Transfer of actionable claims except specified actionable claims. Which are the specified actionable claims? Lottery, betting, gambling, online money games, horses. For example, if I purchase a lottery ticket, is GST applicable? Yes, GST is applicable because it is under exclusion. Supply of goods from one non-taxable territory to another non-taxable territory without the goods entering into India. Meaning, I am supplying goods from Japan to France. I am supplying goods from Japan to France without bringing the goods to India. So India is a taxable territory. Any place other than India is non-taxable territory. So Japan is a non-taxable territory. So I am supplying goods from one non-taxable territory to France, which is another non-taxable territory, without bringing the goods to India. Warehouse sales. Warehouse sales. What is warehouse sales? See, whenever you are importing something from outside India to India, no, under customs, whenever you are importing something from outside India to India, under customs law, you can put those imported goods in the warehouse. See, sometimes what happens, whenever I am importing something, I have to pay something called as custom duty. But if I don't have the money to pay custom duty, I can keep these imported goods in customs warehouse. So if I keep the goods in customs warehouse, then I can keep these goods without payment of custom duty. Now, the goods are there in customs warehouse. I found a customer who is ready to buy the goods. So I sold the goods to that customer without taking the actual delivery. See what happens, once you purchase a phone, you are required to take a delivery. The phone should be with you. Correct. I have purchased the phone without taking the actual delivery at all. Meaning, I have purchased the phone without taking the actual delivery at all. Meaning what, sir? I have purchased the phone and that phone is now with, let us say that the store where I have made the purchases. Okay, now I should go to the store and pick up. But before going and picking this phone from the warehouse, I found someone who is ready to purchase this phone from me for a higher price. So I sold it to him. This is called as warehouse sale. Under customs law, it is very common, warehouse sales or high sea sales. High sea sales means what, sir? Goods have not reached India at all. Now, before the goods are reaching in India, somewhere in the water only, when the goods were there, someone over here told, I want to purchase your goods, Dilip. This is called as high sea sales. Now, here there are two more points added. Yesterday, we saw that amendment, there are two more points added. What are those two more points, sir? Amendment
Insurance.
Yeah, insurance, reinsurance and co-insurance point is added. There are 2 points added. One is with respect to reinsurance, another one is with respect to co-insurance. So services of co-insurance or reinsurance is not treated as supply, and services of insurance company to a reinsurance against ceding commission is also not a supply. These are 2 points newly added. So activity is not treated as supply is done. Please note, separate theory question can be asked. What is the theory question which they can ask you in examination? What is negative list of supply? Or also called as, this question can be asked either as what is negative list of supply, or what are schedule 3 activities, or what are the activities which are not treated as supply at all, or list down the transactions which are neither treated as supply of goods nor supply of services. Now section 7 capital 1A. What is 7.1 capital A telling? There are list of activities given in schedule number 2. This is schedule number 2. They are all supply only. They are all supply, but schedule number 2 will tell you whether it is supply of goods or supply of services. What are these different activities? If I'm see basic crux, I'll tell you instead of reading this entire thing. Crux is, do you know the definition of goods and service? Goods means every kind of movable property. Services means anything other than goods. Okay. So now whatever is not movable, that will you'll directly put it to service. Okay. That is one point. Similarly, if there is a transfer of title or ownership, check whether there is a transfer of title or ownership, or there is no transfer of title or ownership. Transfer of title or ownership means what, sir? This water bottle, I am the owner. I am giving it to you. You are paying the money for it. Who will become the owner? You will become the owner. Correct. So I am transferring the ownership of this water bottle. I am transferring from my side. The ownership is going to you. So the transfer of ownership or transfer of title in this water bottle. In such cases, it will be treated as supply of goods. I am giving this water bottle to you for 1 day. Transfer of right in goods, not ownership. For example, in school days, fancy dress competition is there. Yesterday was Children's Day. Normally in our school, in Children's Day only they used to celebrate this fancy dress competition. They are supposed to go. Okay. So at that time, no, many people used to go to a costume store and purchase banana costume, mango costume, and they used to go like Bube. So in such cases, when you are purchasing that costume for 1 day, okay. Now in that case, what are you doing, sir? You are going and purchasing the costume only for 1 day. So in such cases, I have to give it back to him. Is it sale of costume to me? Is it supply of goods or supply of services? Supply of services. 1 day he is going to give me, I am going to give it back to him. So that is the crux over here. Okay, if there is a transfer in title or ownership, supply of goods. If transfer is in right of goods, it is supply of services. Now, section 8, section 7 is done. Section 8 is the next section which talks about taxability of composite and mixed supply. Section 8 talks about what, sir? Taxability of composite and mixed supply. There is something called as composite supply and something called as mixed supply. What is composite supply? Supply of goods or services or both, which are supply of two or more taxable. What is a composite supply? Important point. This is supply of, I think one of the attempt question is asked, no, one paper we saw, composite supply. Yes, supply of two or more taxable goods or services or both, which are naturally bundled in ordinary course of business. You are supplying two or more goods or services which are naturally bundled in ordinary course of business, which are supplied in conjunction with another. Meaning they are supplied together, supplied in conjunction with another, one of which is principal supply. Among this, one of them is principal supply. That is called as composite supply. Sir, what is the mixed supply? Mixed supply means supply of two or more individual goods or services or both. Supply of two or more individual goods or services or both, which are not naturally bundled in ordinary course of business. Meaning there are individual products which are not naturally bundled, but they are supplied to you together, which are not naturally bundled in ordinary course of business, but are supplied in conjunction with another for a single price, and which is not a composite supply, is called as mixed supply. Now, there is something called as composite supply, something called as mixed supply. Section 8 talks about taxability of composite and mixed supply. If it is a composite supply, section 8A says it is taxable at the rate of principal supply. And if it is a mixed supply, section 8B says it is taxed at highest rate. Composite supply is taxed at the rate of principal supply, mixed supply is taxed at highest rate. So for example, brush with paste, composite or mixed? Brush with paste, mixed supply, meaning I am purchasing a paste, they are giving me brush free. Composite supply or mixed supply? Mixed supply, why, sir? Normally, all the people who are supplying paste, are they supplying brush also with them? No. So it is not naturally bundled. For example, if I am purchasing a specs, they are giving that specs box free. Composite. I am purchasing Maggie, they are giving spoons free. Not everyone is doing that. Washing powder is given with the bucket. Mixed supply or composite supply? Mixed. Washing machine. Okay. I am purchasing a wine bottle. They are giving 2 glasses also. I can drink like this also. I am purchasing a TV. They are giving remote free. Composite supply. Laptop with charger. Composite supply. Section 9. Next topic. Charge under GST. Charge under GST. Charge under GST. Section 9 is the charging section of GST Act. Section 9 of CGST Act is equal to Section 9 of SGST Act, is equal to Section 7 of UTGST Act, is equal to Section 5 of IGST Act. Meaning they are all charging sections only of respective acts. We are going to study CGST Act charging section. Other things you will only tell me. What will be the change in other acts? Instead of CGST, the word SGST will be used. Instead of CGST, the word UTGST will be used. Instead of CGST, the word IGST will be used. And here, intrastate supply they will talk. Here also intrastate supply, intrastate supply. Here they will talk interstate supply. We'll see anyways. Under GST law, sales are called as outward supply. Purchases are called as inward supply. You pay input tax. Payment under GST. The payment can be made in two ways, either forward charge mechanism or reverse charge mechanism. What do you mean by the word forward charge mechanism? The supplier of goods and services is the person who is going to make the payment of taxes to the government. For example, you come to Priya Sarees, you purchase a sari. You come to Priya Sarees, you purchase a sari. I sell the sari to you. Correct? No? You will pay the money to me along with GST. I will pay that GST to government. So this is forward charge. Normally, whatever you are doing in daily life, it is all forward charge only. You are going and purchasing anything, forward charge. So forward charge, what will happen? The supplier of goods and services has to make the payment of taxes to government. But in case of reverse charge, what will happen? The receiver of goods and services has to make the payment of taxes to government. For example, advocate is giving legal services to Priya Sarees. Now, Priya Sarees, being a receiver of legal services, has to make the payment of taxes to government. Now, section 9. See, basically, section 9 by itself does not have any weightage. Section 9, 1, 2, 3, 4. But section 9, subsection 5 is an important section. Okay, all other sections under 9 is not important. Meaning, just for knowledge purpose, you should know, yes, this section is there. Section 9, subsection 1 says, subject to the provision of subsection 2, there shall be levied a tax called as Central Goods and Services Tax. Meaning, they are telling they are going to levy a tax called as CGST. There shall be levied a tax called as Central Goods and Services Tax on all intrastate supply of goods or services or both, except on alcoholic liquor for human consumption. Meaning, they are going to levy a tax called as CGST. When are they going to levy CGST? Whenever you make intrastate supply of goods or services or both. And on what value will they levy? On a value determined under section 15. And at such rates as may be notified by the government but not exceeding 20%. Meaning, they will levy CGST whenever you make an intrastate supply. Whenever you make an intrastate supply of goods or services, they are going to levy CGST. They are going to levy CGST on all goods and services except on alcoholic liquor for human consumption. And on a value determined under section 15, at such rates as may be notified by the government not exceeding 20%. And it shall be collected in such manner as may be prescribed and paid by whom, sir? Taxable person. Who has to pay the taxes? Taxable person has to pay the taxes. Who has to pay the taxes? Taxable person. Okay. Now please note, same provision under IGST law, what will be the change? Subject to the provision of subsection 2, there shall be levied a tax called as IGST on all interstate supply of goods or services or both, except on alcoholic liquor for human consumption on a value determined under section 15 at such rates as may be notified by the government not exceeding 40%. Under IGST, it will be double. And it shall be collected in such manner as may prescribed and paid by taxable person. Okay, we have different rates under GST Act, like we have 14%, 2.5%, 9%, 6%, etc. Now, in examination, if they give you only GST rate is 18%, that means they are talking about IGST rate. So, CGST and SGST will be half of this, 9% will be CGST and 9% will be SGST. In the examination, if they give you only SGST rate is 6%, that means IGST rate is 12%. Okay, in examination, you should be very careful. If they have given only GST rate, that means they are talking about IGST rate. If they are giving you CGST rate, that means double is IGST. Now, who has to pay the taxes? Taxable person has to pay the taxes. Tax is required to be paid by a person called as taxable person. Who is a taxable person, sir? Taxable person is a person who is registered or who is liable for registration. Now, even if you are a person who is not registered, you will be called as taxable person if you are liable for registration. Now, see, basically, under GST, a person can be either registered or he may be non-unregistered person. Unregistered person means he has not taken registration at all. But registered person means a person who has taken registration under GST law. But in between them, there is one more person called as taxable person. Now, who is a taxable person? That person who is registered or he is liable for registration. Meaning, under GST law, all registered person has to pay the taxes because they are taxable person. An unregistered person also have to pay the taxes if they are liable for registration. Section 9.2 says, CGST on intrastate supply of HP man shall be levied from the date notified by the government on the recommendation of council. Meaning, on intrastate supply of HP man, 5 products: high speed diesel, petroleum crude, motor speed, aviation turbine fuel and natural gas. On these 5 products, GST is not levied as on today. But can GST be levied on these products? Yes, on a future date as may be notified by government. Section 9.3 and 9.4 talks about RCM. Cases where tax is required to be paid by the recipient under reverse charge. CGST on intrastate supply of notified goods and services shall be paid by recipient of such goods and services under reverse charge. Meaning 9.3 says I am going to give you the list of goods and services. On these goods and services, who has to pay the taxes, sir? The receiver will have to pay the taxes under reverse. Then section 9 subsection 4 also talks about reverse charge only, but 9.4 says what, sir? CGST on intrastate supply of notified goods and services, if it is received by a notified registered person from an unregistered person, shall be paid by that notified registered person under reverse charge. Now, what is important under section 9.5 is section 9 series. What is important is section 9 subsection 5. What is section 9.5 talking about? Supply through e-commerce operator. Section 9.5 is talking about what, sir? Supply through e-commerce operator. What does it say? If notified services are supplied through e-commerce operator, the tax on that supply is required to be paid by e-commerce operator. So I am going to give you a list of some services only. If these services are supplied by you through an e-commerce operator, please note, I am teaching you. So services are supplied directly by me. Correct? Services are supplied directly by me. Now you are I am selling you Priya Sari. You are coming to Priya Saris. I am selling the sari to you. So can I say it is supplied through Dilip only or supplied through Priya Saris? Saris of Priya Saris are listed on Flipkart. You are purchasing the sari from Flipkart. So if you are purchasing the sari from Flipkart, that means it is a supply through e-commerce operator. Have you understood what is the meaning of supply through e-commerce operator? Correct. Now what is this point meaning? If notified services, they are going to give you list of some services. If these services are supplied by you through an e-commerce operator, then who will have to pay the taxes? E-commerce operator. You see, normally the tax is required to be paid by service provider, but they will give the list of some services to us. For that services, who has to pay the taxes? The e-commerce operator has to pay the taxes. Sir, who is an e-commerce operator, sir? E-commerce operator means any person who is owning, operating, maintaining, managing electronic platform. Any person who is owning, operating, maintaining, managing electronic platform for electronic commerce. So if I have an electronic platform which I am owning, maintaining, operating, managing, why am I doing this, sir? For electronic commerce, then I will be called as e-commerce operator. Now, what are the services notified under section 9.5? Meaning only these 4 items are covered under 9.5. Which are those 4 items, sir? Passenger transport service provider. Okay, passenger transport service provider. Or you are a person who is involved in the business of providing services of accommodation in hotel, in guest house. Or you are a person who is giving services of housekeeping. Or you are giving restaurant services. So only 5 services are covered. 4 services, sorry. Passenger transportation services, which is nothing but example is Ola, Uber, passenger transport services. Meaning, if you want to go from one place to another place, then you can go on the road, do hand like this, one auto will stand. Correct? Now you tell that auto driver that, sir, I want to go to this place. So in this case, services, are they provided through e-commerce operator? No, it is not provided through e-commerce operator. Now you take out your mobile phone, you select your present location, you open Ola application, you select your present location, you enter your drop location. Now that person is coming to you, he is picking you up and he is dropping you to that location. Now can I say the services is provided by that cab driver through e-commerce operator, which is Ola. Correct. So what are the services covered, sir? Transportation of passenger services, accommodation in hotel, in guest house services, housekeeping services, and restaurant services. Meaning if these services are supplied by you through e-commerce operator, who has to pay the taxes? Not the provider of services, but the e-commerce operator. So if I am ordering food through Zomato, who is giving the services to me? Zomato or the restaurant? No. Restaurant is giving the services to me. Who is supplying the food to me? Restaurant is supplying the food to me. Zomato is just an e-commerce operator through whom I am purchasing it. Correct. So transportation of passengers, accommodation in hotel, in guest house, and restaurant services. For these 4 services, if they are supplied through e-commerce operator, who will have to pay the taxes, sir? E-commerce operator. Okay, e-commerce operator will have to pay the taxes. Sir, what if the e-commerce operator does not have any office in India? Ola does not have any office in India, sir. Meaning, what if the e-commerce operator does not have physical presence in taxable territory, which is India, sir? Lawmaker says no problem. In such cases, any person who is representing the e-commerce operator in taxable territory will have to pay the taxes. Meaning, you yourself don't have any office in India, no problem. Is there any representative of yours in India? Yes, that representative will have to pay the taxes. Sir, what if the representative is also not there? Meaning they don't have any physical presence as well as representative. Lawmaker says provided further that if the e-commerce operator does not have physical presence in taxable territory and if there is no representative of such e-commerce operator in taxable territory, then they shall appoint a person in taxable territory to pay the taxes. They'll have to appoint someone to pay that tax. Now, here, important point. See, normally, who has to pay taxes in case of these 4 services? E-commerce operator. But they say in case of accommodation in hotel in guest house, housekeeping services and restaurant service. In case of these 3 services, if the supplier is registered, if the person who is supplying the services to you, if he is registered under GST, the supplier will have to pay the taxes and not the e-commerce operator. Sir, what do you mean by this? For example, I am going and booking an hotel in Taj Hotel. I am booking a room in Taj Hotel. I have an option to directly go and book. If I directly go and book, who has to pay the taxes? Now, because there is no e-commerce operator in this, tax is required to be paid by service provider, which is hotel. I am going and booking hotel through Taj ka mobile application. Now, is there an e-commerce operator? Yes, but it is the hotel only. There is no separate e-commerce operator. So, who will pay the taxes? 9(5) is not applicable over here. Hotel only has to pay the taxes. I am booking hotel room through Make My Trip. I am booking hotel room through Make My Trip. Now there is e-commerce operator. Now there is 9(5) also applicable. Who has to pay the taxes? E-commerce operator, which is Make My Trip, has to pay the taxes. I am booking the hotel through Make My Trip, but the hotel is registered under GST law. If the hotel is registered under GST law, though 9(5) is applicable, hotel will not pay the taxes. The service provider, the Make My Trip will not pay the taxes. The service provider, which is hotel, will only pay the taxes. Okay? Is this point clear to you all? If the services are provided through e-commerce operator, then who has to pay? Normally e-commerce operator. But in case of hotel, housekeeping and restaurant services, if the service provider is registered, then the service provider has to pay the taxes. Now, the services which are covered under reverse charge. Section 9 subsection 3 talks about the services covered under, section 9 subsection 3 talks about reverse charge. Cases where the receiver has to pay the taxes. So there are some services which are on which the receiver has to pay the taxes under reverse charge. Now, which are those services? We are listed over here. First, services given by goods transport agency to 7 notified persons. GTA is giving services to whom, sir? 7 notified person. For the services given by GTA to this 7 notified person, who has to pay the taxes, sir? The 7 notified persons will have to pay the taxes under reverse charge. These 7 notified persons. Who are the 7 notified persons? If a GTA is giving services to a factory, society, cooperative society, body corporate, registered person, firm including LLP, or casual taxable person, then these people will have to pay the taxes under reverse charge. Okay? If they are the recipient, they have to pay the taxes under reverse charge. Now, what do you mean by a GTA? GTA means any person who is involved in the business of transportation of goods by road and who issues a consignment note. And compulsorily he should issue what, sir? He should issue something called as consignment note. So, if you are a person who is involved in the business of transportation of goods by road and if you issue a consignment note, you are called as GTA. Now, if you are giving services to these 7 people, if they are located in taxable territory, they will have to pay the taxes. Now, of course, this is also there. GTA also has an option to pay the taxes under forward charge. Meaning, normally GTA services are taxable under reverse charge. But GTA, they themselves wants to pay the taxes under forward charge. Can they do so? Lawmaker says yes. If the GTA wants to pay the tax under forward charge, it can always do. Where for that GTA will have to take registration and they'll have to inform the recipient that they want to pay the taxes in forward charge, and they will have to issue a tax invoice. Legal services, important services. GTA and legal services are important. Legal services given by an advocate to a business entity. If an advocate is giving his services to whom, sir? Business entity, the business entity will have to pay taxes under reverse charge. Now the question is, who is a business entity? Now because it's any person who is doing business is business entity. In GST law, they have not given definition of business entity. Therefore, any person who is doing business is called as business entity. Now, if advocate is giving legal services to a business entity, then the tax is payable under reverse charge. See, normally in exemption chapter, we are going to learn about this. Advocate is giving legal services to government, it is exempt. Advocate is giving legal services to non-business entity, exempt. Advocate is giving legal services to another advocate, exempt. Whereas advocate is giving services to business entity, it is taxable under reverse charge. Just now we studied that point. Correct? No? Now, when will it be taxable? To check whether the business entity has to pay tax under reverse charge or not, you check whether the aggregate turnover of business entity is more than the registration limit. The limit for taking registration in the GST law is 10 lakhs, 20 lakhs and 40 lakhs. So if the turnover of business entity is more than this registration limit, then yes, it is taxable under reverse charge. But if the turnover of business entity is less than the registration limit, then that services will be exempt. Similarly, arbitral tribunal is giving services to a business entity who has to pay the taxes. Business entity has to pay the taxes under reverse charge. Now, there is an amendment in this point which says what, sir? Services given by any person other than body corporate. Services given by any person other than body corporate to a body corporate or a partnership firm. The body corporate or a partnership firm has to pay the taxes under reverse charge. So if any person is giving services to a body corporate, if any person is giving services to a body corporate, who has to pay the taxes? Body corporate has to pay, or any person is giving what services, by the way? If any person is giving sponsorship services to a body corporate or a partnership firm, that body corporate or a partnership firm who is receiving the services has to pay the taxes under reverse charge. Next, services given by government. Government is giving services to business entity. Government is giving services to whom, sir? Business entity. When I say government, how many people are there? 4 people. Government means central government, state government, union territory, local authority. When government is giving services to a business entity, then the tax is required to be paid by such business entity under reverse charge, excluding for these services. Meaning for these services, RCM will never apply. Which are the services for which reverse charge will never apply? Services of renting of immobile property. Which services, sir? Services of renting of immobile property. Services by Department of Post. Services given by Indian Railway. Services in respect of aircraft and vessel inside or outside port or airport. Services of transportation of passenger and services of transportation of goods. So for these services, it is always taxable under forward charge. Then renting of immobile property services given by government to a registered person. That registered person who is receiving the services has to pay the taxes under reverse charge. Renting of residential dwelling to a registered person. If the residential dwelling is rented to a registered person, then the registered person who is receiving that residential dwelling should be paying taxes under reverse charge. Here there is one more point added, section 5A, B, which says renting of immobile property by unregistered person to any registered person. Then that new point added, we discussed yesterday in marathon. So if you are renting a immobile property, who is renting? Any unregistered person is rented to a registered person. The registered person has to pay the taxes under reverse charge. Now, director of the company is giving services to the company. The director of the company is giving services to the company. The company will have to pay the taxes under reverse charge. See, director can be of two types: employee director, non-employee director. Employee director means that director is employee of the company. Services given by employee to the employer in the course of employment is not a supply. Because it is not a supply, it is not GST is applicable. But if services are given by a non-employee director, if the services are given by non-employee director, then that's to the company, then the services given by that non-employee director will be treated as supply and therefore GST will apply. Now you should also be very careful while seeing the services. The services which is given by the director, whether it is given in the capacity of director or it is given in personal capacity. If it is given in personal capacity, it is always taxed under forward charge. Only if they are giving services in the capacity of director, it is taxable under reverse charge. Now, when it is an employee director, you see for the payment which is made, TDS is deducted under which section of income tax? If the TDS is deducted under section 192 of Income Tax Act, then no supply, but why sir? Because it is a salary. But if for an employee director, if the TDS is deducted under 194J for the payment made to him, it is a supply and just therefore GST will apply. Always forward charge because you are not giving in professional or director capacity. Now see this question. Examine brief. Which person is liable to pay GST in following independent cases? Where supplier and recipient both are located in taxable territory, ignore aggregate turnover and exemption available. Vikas is an insurance agent. Hey, we have not covered, wait, one second. Yeah. We covered till director. After director, services given by insurance agent, recovery agent, or services given by individual direct selling agent, or business facilitator, or agent of business facilitator. So there are totally 5 people which are same. Meaning insurance agent is giving services to insurance company. Insurance company is taking the services from insurance agent. Now insurance company is only less in India, whereas insurance agents are many. So services given by insurance agent to insurance company, who has to pay the taxes? Insurance company has to pay the taxes because it is very easy for government to go talk to insurance company when compared to insurance agent. Recovery agent is giving services to a banking company. Now if you take a loan for purchase of your car and if you don't pay the car EMI, then who will come to you? Recovery agent will come to you, and recovery agent will come to you and take money from you. I mean, he will take the car only from you if you don't pay EMI. So that person is called as a recovery agent. He is giving services to the bank. Who has to pay the taxes? Bank has to pay taxes under reverse charge. Now a music composer or an artist or a photographer is giving services to music company or producer. For example, A.R. Rahman is giving services to T-Series. A.R. Rahman, music composer, giving services to T-Series music company. So for whatever services are given by him, A.R. Rahman is going to charge some money. Who has to pay the taxes? T-Series has to pay the taxes under reverse charge. Supply of services by an author by way of, so now author is writing a book and he is giving that book to a publisher. Who has to pay the taxes? Publisher. For example, I have written a book, Life of a Husband. Okay, now there is a publishing house which is publishing that book. So book is written by me. I am giving the rights of that book to someone to publish that book. Now who has to pay the taxes, sir? That publishing house has to pay the taxes under reverse charge. Then security service. Security services means supply of security guards. You see in the malls, you see these security guards. Okay, these security guards are not employees of mall. There is some company which is supplying security guards to the mall. So supply of security services provided to a registered person. So if security services are given by any person other than a body corporate to a registered person, then the registered person will have to pay the taxes under reverse charge. Renting of motor vehicle. If you are taking any motor vehicle on rent, who is giving the services? Any person other than body corporate to a body corporate, then the body corporate who is receiving that renting of motor vehicle services has to pay the taxes under reverse charge. Similarly, lending of securities. Please note, sale of securities is not a supply. I am lending the securities. Lending means I am giving it on rent. Lending on securities by lender to borrower, the borrower will have to pay taxes under reverse charge. Now it is done. Yeah. Vikas is an insurance agent registered under GST, received a commission of 12 lakh rupees from insurance company which is registered. Who has to pay the taxes? Insurance company has to pay the taxes under reverse charge. Mukesh is a business facilitator, received commission of 1,95,000 for services provided to urban nationalized bank with saving bank account. Who has to pay the taxes? Bank has to pay the taxes. Now please note, under exemption chapter you are going to learn this. If the branch is in rural area, no RC, it is exempt. Gukesh is an independent director of XYZ Limited. Is independent director an employee? No, he is not an employee. Has received sitting fees amounting to 1 lakh rupees for attending board meeting. Who has to pay the taxes? All are reverse charge cases. Go base. Now see how they have answered. In case of services supplied by insurance agent to insurance company, GST is liable to be paid under reverse charge by insurance company. Therefore, GST is required to be paid by insurance company. Wow. And very simple points are 3 questions, 3 answers. T series is a music company registered under Siri. Control your emotions. How true is that there is no place for emotion in running and Siri? We'll see. Right, yeah. Hey Siri, we should say. Are you a Google Siri? I Hey Siri, are you a Google? Hey Tarpuri, Google. Okay. Are you a Tarpuri? Yeah, no, but it will tell that Dilip, you are a Tarpuri. T series is a music company registered in India, paid an advance of 5 lakh rupees to Mr. Vikas, a music composer, for copyright of his original musical work on 5/9/24. This is with respect to time of supply. We will see that chapter later. I mean, time of supply, section 12. This is a different topic. We'll see later. You want exactly same question they are given. Composition scheme, they have not asked any question only. What is composite supply, mixed supply? Do you know? Composition scheme, they have asked one question over here. One paper I have missed. No, okay, correct. Yeah. Next is what, sir? Next is composition scheme. Section 10. Section 10 talks about composition levy. Composition levy means what, sir? One benefit they have given, wherein you have to file lesser returns, pay tax at lesser rate, etc. Turn on. Composition scheme. Section 10. Composition levy. Eligibility. Section 10 subsection 1. Eligibility. Rainbow cake, yeah. Hey, we have seen that. No? Section 10 subsection 1. Eligibility. Who is eligibility? Section 10 subsection 1. Who is eligible to become a composition dealer, sir? A registered person. A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores. Who can become a composition dealer? A registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores. He may opt to pay tax at composite rates instead of paying the tax at regular rate. Meaning he may, it is not compulsion for them. He may opt to pay tax at composite rates instead of paying the tax at regular rates. Now, what are the composite rates? If you are a manufacturer, it is 0.5% of turnover in the state. If you are a restaurant or outdoor catering service provider, 2.5% of turnover in the state. And for all other dealers of goods, it is 0.5% of taxable turnover in the state. Very important. The rate is important. Normally for manufacturer and restaurant, it is turnover of the state, meaning whatever total turnover they have made in that state. But for other dealers of goods, it is taxable turnover only. When I say turnover, it will include taxable as well as exempt turnover. When I say taxable turnover, I should take only taxable turnover. Okay, what is the limit for composition scheme? 1.5 crores is normally the limit. But if I am doing business in special category states, there are totally how many special category states? Now, normally there are 11 special category states, but for 8 special category states, the limit of 75 lakhs is applicable. If I am doing business in 8 special category states, which are these, sir? Num must means Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim and Tripura. If I am doing business in these 8 special category states, for me the limit of 75 lakh will apply instead of 1.5 crores. Are you okay? Yeah? Now, what do you mean by aggregate turnover? One of the most important definition, you should remember this definition along with definition, section number. Along with section number, you should know. Section 2, clause 6, aggregate turnover. What do you mean by aggregate turnover? Aggregate turnover means aggregate value. Aggregate value means total value. Total value of what? Total value of all taxable supplies made by you. Total value of all exempt supplies made by you. Total value of all export of goods or services. Aggregate turnover means aggregate value. Aggregate value means total value. Total value of all the taxable supplies which you are making. What do you mean by taxable supplies? That supply which are taxable under GST law. Now, it does not matter whether you are making the supply within the state or outside state. It does not matter. It is always included in aggregate turnover. Aggregate turnover includes exempt supply. Sir, what is an exempt supply? Exempt supply means the supplies which are nil rated, the supplies which are wholly exempt, and it includes non-taxable supplies. Exempt supply means supplies which are nil rated, supplies which are wholly exempt, and it includes non-taxable supplies. Okay, so aggregate turnover will include taxable supplies, exempt supplies, export of goods or services. Export of goods or services are also treated as included in aggregate turnover. Export of goods or services are also called. There is one more name for export of goods or services, which is what, sir? Zero rated supply. See, section 16 of IGST Act. Section 16 of which act? IGST Act gives the meaning of zero rated supplies, which says if there is an export of goods or services and if there is a supply made to an SEZ unit or SEZ developer, then it will be called as zero rated supply. Or it is an export of goods or services also there. Then lastly, what, sir? Very important. Majorly students will make mistake in this point. Interstate supply to a person having same PAN. If I have my branch office in another state, if I supply to that branch office in other state, that turnover should be included in aggregate turnover. Interstate supply to a person having same PAN. Now, this aggregate turnover, when you are calculating, this calculation should be done on all India basis. So, what do you mean by all India basis? In entire India, how many ever branches you have? In the entire India, how many ever branches you have to take the turnover of all the branches for determining the aggregate turnover. But it shall not include taxes under GST and inward supply liable for reverse charge. When I say turnover, that means I am talking about my sales. So if there is any purchases, it is not in my aggregate turnover, it is not my sales. So even though there are some purchases on which you as a recipient have to pay the taxes under reverse charge, that is not your aggregate turnover. I'll repeat once again. Aggregate turnover means aggregate value of all taxable supplies, exempt supplies, export of goods or services, interstate supply to a person having same PAN. Whenever you are calculating aggregate turnover, calculate it on all India basis, and while calculating aggregate turnover, do not include taxes under GST and inward supply liable for reverse charge. Now, I want to become a composition dealer. Wait, I'll come back to this point. Aggregate turnover, we saw composition dealer. Eligibility. Who is eligible? A registered person is eligible whose aggregate turnover in the preceding financial year did not exceed 1.5 crores. He can opt to pay tax at composite rate instead of paying the tax at regular rates. Okay, instead of paying the tax at regular rates, he can opt to pay tax at composite rates. Now, the limit is 1.5 crores normally. But for 8 special category states, the limit is 75 lakhs. Correct? Now, these 8 special category states are Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim and Tripura. Now, if I am a person who has an office in or a branch in special category states and non-special category states, what is the limit applicable to me? 75 lakhs or 1.5 crores? For entire India, the limit applicable to me will be 75 lakhs. So if a registered person has a place of business in special category states, then for the entire India, the limit of special category states shall apply. Now, normally, interest income, you are going to study this in exemption chapter. Normally, interest income is an exempt income. Now, interest income also therefore should be included in aggregate turnover, because aggregate turnover definition says taxable supplies, exempt supplies. So, exempt supplies should also be included, but they have specifically told interest income should not be included or added while computing the value of service as per second proviso, while calculating the value of aggregate turnover, and while checking the turnover of the state or union territory to check the eligibility of a composition dealer. Now, can a composition dealer under section 10 subsection 1 supply services? Lawmaker says only restaurant services he can supply, not any other services. So what if I supply any other services? They say you can supply services only to an extent of this limit, provided further that a registered person who is otherwise eligible to pay tax under section 10(1) can supply services up to 10% of turnover of state or union territory, or 5 lakhs, whichever is higher. Meaning this is the maximum amount of services you can supply. The aggregate turnover shall not include taxes under GST. Meaning, if I give you a turnover, let us say my turnover is 1.5 crores, it includes GST at 18%. Tell me what is aggregate turnover? 1.5 crores includes GST at 18%. What is the value before GST? One crore something is telling. How do I do 1.5 crores divided by 1.18 or 118%? So 1 crore 27 lakhs 11,864. Section 10 subsection 2 talks about conditions. Meaning section 10 subsection 2 says if you want to become a composition dealer as per section 10 subsection 1, these are the conditions which you have to fulfill. A registered person shall be eligible to opt for composition scheme under section 10 subsection 1 if he is not engaged in supply of services except those mentioned in section 10 subsection 1. Except the services mentioned in 10(1), you should not be engaged in supply of any other services. Then he should not be engaged in making non-taxable supplies. You should not supply those services which are not taxable. Then he should not be engaged in making interstate outward supply. Please note, you should not supply services other than those mentioned in 10(1). Now, what is mentioned in, if I am supplying only services, Dilip as a chartered accountant, can he become a composition dealer? No. Dilip has Priya sarees and he is also having a house which he has given on rent. Can he become a composition dealer? Yes, if the rent, the supply of services within the limit of 10 lakhs or, sorry, not 10 lakhs, 5 lakhs or 10% of turnover, whichever is higher. Okay, whichever is higher. He should not be engaged in non-taxable supply. So if I am a composition dealer, I should not make non-taxable supply. For example, I am a composition dealer and I want to start Priya Petroleum. Can I start Priya Petroleum? A petroleum is non-taxable. I have Priya Bar and Restaurant. Can I become a composition dealer? No, because bar is non-alcoholic liquor for human consumption, non-taxable supply. He should not be engaged in making interstate outward supply. I should not make supply to another state. However, he can make interstate inward supply. He can purchase goods from other states. He is not engaged in making supply through an e-commerce operator who is required to collect taxes under section 52. I should not supply through an e-commerce operator who is required to collect taxes under section 52. Now, if I supply through Flipkart, Then Flipkart is an e-commerce operator covered under section 52. What is the provision telling? Priya Sarees is supplying sarees to a customer through Flipkart. Now customer found the sarees on Flipkart. He gave the order to Flipkart. Flipkart gave the information to me. I sold the sarees to customer. Customer paid the money to Flipkart. Flipkart paid the money to me. Now in this case, Flipkart when it is paying the money to me, it has to deduct. It has to collect tax of 0.5%. Okay, at the time when they are making the payment to me. So for this transaction, if I am making supply through Flipkart, I cannot become a composition dealer. Lawmaker says he should not be engaged in making supply through an e-commerce operator required to collect taxes under 52. Now I am doing business in Karnataka. I want to supply goods in Maharashtra. Can I become a composition dealer? My turnover is only 30 lakhs. Can I become a composition dealer? Lawmaker says no. Why? Because he should not be engaged in making interstate outward supply. A composition dealer should not sell to other states. But can he purchase from other states? Lawmaker says yes, you can definitely purchase, but you are not supposed to sell to other states. And he should not be engaged in manufacturing notified goods. Now please note, can a manufacturer become a composition dealer? Can a manufacturer become composition dealer, sir? Yes, a manufacturer can become composition dealer, but he should not manufacture notified goods. Which are these notified goods? Pan masala, aerated water, tobacco and tobacco products, ice cream and bricks, roofing tiles, etc. And one more person who cannot become a composition dealer is a casual taxable person and non-resident taxable person. Now, who is a casual taxable person and non-resident taxable person? That person who is undertaking. Casual taxable person means a person who is undertaking the activity of supply of goods or services or both occasionally at a place which is not his usual place of business. If you are doing business at a place which is not your usual place of business, you will be called as casual taxable person. And who is a non-resident taxable person? A non-resident taxable person is a person who is undertaking the activity of supply of goods or services or both in India, is coming from outside India. A non-resident person is coming from outside India to India. Now, I think last week in this area there was Kallekai per se. Yes, correct? This week it is in our area. Some Kallekai per se is there. Now, in that Kallekai per se, many people are coming from different places and doing business. Correct? They are called as casual taxable persons. Now, there is one beautiful proviso which says provided that where there are more than one registered person under same PAN, and if one is opting for composition scheme, others also should opt for composition scheme. So if there are more than one registered person under the same PAN, and if one wants to opt for composition scheme, no problem, others also will have to opt for composition scheme. So these are the conditions. So if I have a branch in Chennai and Coimbatore, can I become composition dealer for Chennai and regular dealer for Coimbatore? Lawmaker says no. Composition dealer for both? Yes. Regular dealer for both? Yes. Section 10(2)(a). Section 10(2)(a). Composition scheme for service provider. Eligibility. Some words are there, you cannot say it or pronounce it. Eligibility. I mean, maybe I cannot pronounce, you can pronounce. Eligibility, like respect, sometimes respect Allah, something is there. Respect, spelling mistake you do. Respect, ESPT, PSPT, something. Accept, something like this. Section 10, subsection 2A. Now, for service provider also they have an option to become a composition dealer. For service provider also that option is there. Section 10(2)(a). Composition scheme for service provider. Eligibility. A registered person who is not eligible to apply for composition scheme under section 10(1). So if you are a registered person who is not able to become a composition dealer as per section 10 subsection 1, and if your aggregate turnover in the preceding financial year is not exceeding 50 lakh rupees, and if you are supplying only services, if you are exclusively supplying services other than those services mentioned under 10(1), then section 10(2)(a) is applicable to you. For whom is section 10(2)(a) applicable? If you are a registered person who is not eligible to become a composition dealer under section 10(1) and who is whose aggregate turnover in the preceding financial year did not exceed 50 lakhs and who is exclusively supplying services other than those services mentioned in the section 10(1). Then he will not be eligible to become a composition dealer as per section 10(1). Therefore, he will come here section 10(2)(a). Under section 10(2)(a), you can become a composition dealer. See, basically 10(2)(a) is for service provider. If you are supplying only services and if you want to opt for composition scheme, 10(2)(a) is for him. Composition, what is the composite rate if I become a service provider under 10(2)(a)? 3% of turnover in the state. When I say 3%, 3%, CGST 3%, SGST effectively you have to pay 6%. Now, what are the conditions applicable to him? Same conditions, whatever you just now studied. All the conditions applicable to a normal composition dealer shall apply to him, except one condition, which is supply of service condition. Now, section 10, subsection 3, the composition scheme shall lapse. Your composition scheme shall lapse. Lapse means? Lapse means what, sir? Correct? No.
Yes.
Venkat, in Andhra it is అయిపోయింది. No, in Andhra అయిపోయింది means it is over. Yeah. Because Bhuvesa are there something. Yeah. In Tamil, the Maja is there. In Tamil, what is it? Tell him. You tell him, sir. He is asking you. Section 10. See, morning, some incidents happens in life. Okay. Section 10(3). Section 10(3) talks about what, sir? Composition scheme shall lapse. Lapse means it will get over. Composition scheme shall lapse in the current financial year if aggregate turnover crosses the specified limit. In the current year, if your aggregate turnover crosses 1.5 crore, 75 lakh or 50 lakh, depending upon who you are, meaning if your aggregate turnover crosses that limit in the current year, then your composition scheme shall lapse. Now, please note, I started the business on 1st of April. When I started the business, I was a composition dealer. Now, my turnover crossed 1.5 crores on 10th of December. Because my turnover crossed 1.5 crores on 10th of December, I will have to convert myself from composition dealer to regular dealer. I will have to convert myself from composition dealer to regular dealer. Therefore, why sir I have to convert myself? Because section 10(3) is applicable. As soon as my aggregate turnover crosses this limit, composition scheme shall lapse. Okay. So for the supply made by me for the period before this, I will have to pay tax at composite rates because I was a composition dealer. For all the supplies made by me after this date, I will have to pay tax at regular rates. Composition scheme. Once your composition scheme has lapsed, you have to file a form called as Form GST CMP 04 within 7 days of lapsing. Then section 10(4), composition scheme composition dealer basically cannot collect taxes on supplies. Meaning, whenever he is selling something, on the sales you will have to pay the taxes. The tax you have to pay from your own pocket. A composition dealer cannot collect the taxes on his supplies and he cannot take input tax credit. Whenever he is purchasing something, on the purchases also he cannot take input tax credit. A composition dealer cannot collect taxes. So I am a composition dealer, I have sold goods to you. Can I collect taxes from you on the sales which is made by me? Answer is no. Now I have purchased something. On that purchases I will pay GST. Can I take input tax rate of that? Lawmaker says no. Both is not applicable. Both are not available to you. He cannot collect taxes on supplies. So therefore he will not issue tax invoice. He will issue a document called as bill of sale. Now this section is not that relevant section. 10(5). 10(5) says if you are opting for composition scheme even though you are not eligible for composition scheme, then what will happen, sir? GST officer will send a notice to you. If a proper officer has a reason to believe, if he feels that a taxable person has opted for composition scheme even though he is not eligible for, then the proper officer shall issue a notice to such person. Such person shall respond to the notice. Now, I will have to reply. If my reply is satisfactory, no further action will be taken by him. If my reply is not satisfactory, then the composition dealer will have to pay the taxes at normal rates and the provisions of section 73 and 74 shall also apply, meaning penalty provisions will also be applicable. Now this is all about section 10, but there are some rules with respect to composition scheme. If you want to opt for composition scheme, you have to tell them. So rule number 3 and rule number 4 talks about that. Rule number 3 talks about opting for composition scheme, and rule number 4 talks about effective date of composition scheme. Opting means what, sir? You are telling them that you want to become a composition dealer. Intimation for composition scheme. If you are taking a new registration and the registration application, when you fill the registration application, which is form GST REG 01, if you are taking a new registration, while filling the registration application, which is GST REG 01, you will have to intimate that you want to become a composition dealer. So, registration application is there. It has two parts, part A and part B. When you fill part B of registration application, you have to intimate that you want to become a composition dealer. And if you intimate them that you want to become a composition dealer, they will grant you the registration. On the date when the registration is granted to you, your composition scheme shall start from that date. The validity of composition scheme shall start that date. Meaning, from which date will it be effective from? From the date of grant of registration. But if you are a person who is already registered under GST as a normal dealer, and now if you want to become a composition dealer, can you do that? Lawmaker says yes. For doing that, you have to make an application in form called as form GST CMP 02 before the start of next financial year. And if you make this application, the composition scheme will be given to you from first day of the next financial year. Now, rule number 5 talks about other conditions applicable for composition dealer. A composition dealer will have to mention the words composition taxable person on the name board. So, outside your shop, you will have name board, sign board. In that, you have to mention composition taxable person. Then he will have to mention the word composition taxable person not eligible to collect taxes on supply on bill of supply. There is a document which he is going to issue. On the document, he will have to mention the word composition taxable person not eligible to collect taxes on supplies. And if he is selling goods, he has to pay taxes on composite rate. But if he is purchasing something, he will have to pay taxes at normal or regular rate. A composition dealer has to file a return called as GSTR4. The due date of filing this return is 30th of June of next financial year. What is the due date of filing return? 30th June of next financial year. And he has to pay the taxes on quarterly basis by using a form called as form GST CMP 08. And the due date of making the payment of taxes is 18th of next month following the quarter. Once the quarter is over, 18th of next month. So what is a quarter? Quarter is a period of 3 months starting from first day of a calendar year. So April, May, June, July, August, September, October, November, December, January, February, March. So I think here one of the question only they were asked in one of the attempt. Time of supply question this is. Now see this question. Ritesh of Assam provides the following information for the preceding financial year 23-24. You are required to calculate the aggregate turnover for the purpose of eligibility of composition levy. Determine whether he is eligible for composition scheme or not. So tell me whether he is eligible for composition scheme or not. So for that you should see what is his aggregate turnover. $122 lakhs. So is he eligible?
And moreover, he's doing interstate services.
No, please not. Before becoming a composition dealer, you do whatever you want to do. Meaning before getting married, Praveen, do whatever you want to do. But once you are married, Before becoming composition dealer, you can make interstate supply, no problem. But once you become composition dealer, then only the rules will apply, right? So is he eligible? So to check eligibility, you should see only the limit. You should not see the condition for checking the eligibility. Condition will apply once you are eligible. So what is the turnover? Value of outward supply, 10 lakhs is interstate supply, 75 lakhs, okay, include that. Value of exempt supply, 30 lakh is interest. Now please note, interest should not be included, correct? So from this I will exclude 30 lakhs. How much is the value? 40 lakhs. Value of inward supply on which he is liable to pay tax under reverse charge. Again, this is not my sales because it is inward supply. Value of export, 7 lakhs. So total is what, sir? 1 crore 22 lakhs. So can he become a composition dealer?
Yes.
So what we'll have to do? First write the meaning of aggregate turnover. They have not written up. Okay. But you write. You're a nice student. You write the meaning of aggregate turnover and then give your answer. So value of taxable supplies, all supplies, whether it is interstate or intrastate. Then value of exempt supplies. Value of exempt supplies shall not include interest income. Value of inward supply liable for reverse charge not included. Value of export 7 lakhs. So total is 122. A registered person of Assam is eligible to opt for composition scheme if his aggregate turnover does not exceed 1.5 crores in the preceding financial year. Therefore, Ritesh is eligible to opt for composition scheme. I think how come this two questions are same, exactly same question? What is there in this question? Okay. Now see this question. Question number 7A. Unnecessarily they are complicating. Mr. A, they would have written. What is that name, by the way? Arjia. Arya, we'll ignore J. Okay, Arya is easy to pronounce. Arya is running a consulting firm and also, I think we have solved this in class. A consulting firm also and also a fancy store in state of Karnataka and is registered under same PAN. The turnover of fancy store is 65 lakhs and consultancy is 10 lakhs in the preceding financial year. You are required to discuss whether Arya is eligible for composition scheme under CGST Act. So what is his total turnover? 75 lakhs. Is he eligible for composition scheme? Whether it is possible to opt for composition scheme only for fancy store? Now, by the way, first of all, you tell me, is he eligible for composition scheme? No, he is not eligible. Why? Because service is there, consultancy firm is service, and fancy store is goods. So, can he become composition dealer when you have goods and services both, sir? Yes, it should be within the limit of 10%. Now, if you see my total aggregate turnover is 75 lakhs, iska 10% is how much, sir? 7.5 lakhs. But I am supplying services of 10 lakhs. A consultancy firm is how much? 10 lakhs. So, can I become a composition dealer? No. What is the second point telling? Whether it is possible for Arya to opt for composition scheme only for fancy store? That is also not possible. Why? There is a proviso to section 10(2) which says if you have more than one registered under same PAN, if one is opting for composition, others also should opt for composition. So this is also not satisfied. Then what next point says, if Arya is running a restaurant with 65 lakhs instead of consultancy firm and also a fancy store, would he be eligible? Now they are telling 65 lakh is my restaurant plus 65 lakh is fancy store. Total turnover is 130 lakhs. Now instead of fancy consultancy firm, I am running a restaurant. Restaurant is a service. Now can I become a composition dealer?
Yes, sir.
See, 10(1) says yes, you can become a composition dealer because aggregate turnover is within 1.5 crores and you are in Karnataka. Yeah, are you understanding why in large case you can become? Because restaurant is covered under 10(1) only.
Yes.
Hello. Answer they have not given. Ignore. Next topic for discussion is what, sir? Time of supply. Venkat. Next topic is time of supply. Time of supply, meaning we know now I have to pay the taxes. When should I pay the taxes? That I don't know. That this chapter is going to tell you. This chapter is going to tell you at what point in time the supply was made by you. At what point in time the supply was made by you, because at that point in time when the supply is made, you have to pay the taxes. Okay. Section 12, time of supply. Time of supply of goods, time of supply of services, and section 14 talks about time of supply whenever there is change in the rate of tax. 12, 13 and 14, 3 sections are there. Section 11 talks about exemptions. I mean, that is completely theory. We'll see it later we'll see. Or anyways, I'll record it tomorrow and we'll merge this video and upload. Time of supply of goods. Hey, what do you mean by time of supply, by the way? See, whenever there is a supply, I have to pay GST. Now, when did I make the supply? If I want to know that, I'll have to see the time of supply. Now, time of supply, yeah. So, time of supply of goods, services, and time of supply whenever there is change in rate of tax. Now, before discussing the topic of time of supply, what is it important, sir? It is important for us to know what is the due date for issuing invoice. When should I issue an invoice? The due date to issue invoice is given in the section 31. Section 31 says, for goods, check whether the supply which you are making involves movement in goods. I am making supply of goods, and that supply which I am making involves movement in goods. If the supply involves movement in goods, the invoice is required to be issued on or before removal of such goods. On the date when you are removing that goods or in time before that date, the invoice is required to be issued. If supply does not involve movement in goods, the invoice is required to be issued on or before delivery of such goods. If supply involves movement in goods on or before removal. If supply does not involve movement in goods on or before delivery of such goods. Now, if it is a case of continuous supply of goods, goods are supplied on continuous basis over a period of time. If it is a case of continuous supply of goods, time of supply is, the due date of issuing invoice is the successive payment date or statement date, whichever is earlier. And if it is a case of sale on approval, the date of approval or 6 months from the date of removal, whichever is earlier, is the date within which you are supposed to issue an invoice. Now, for services, what is the due date for issuing invoices? For services, in normal cases, it is on or before completion or within 30 days from the date of completion. Services, it is little important. For services, when should you issue an invoice? On or before completion of services. For example, I am filing your income tax return. I have filed your income tax return on 15th of July. So, when should I issue an invoice? On or before completion, the date of completion of 15th of July. So, on 15th of July, anytime before 15th of July, or I can issue afterwards also. If I am issuing afterwards, I should issue within 30 days from the date of completion. Now, this 30 days shall be replaced by 45 days in case of a banking company, financial institution, NBFC, etc. Okay, this 30 days will be replaced by 45 days. Then, for continuous supply of services, also invoice is required to be issued. What is the time limit for issuing invoice for continuous supply of services, sir? Check whether in continuous supply of services, you are going to supply the services continuously for a period more than 3 months. Now, because the services are supplied on continuous basis, the person with whom you are going to enter the contract of supply of continuous supply, you are going to have these 3 points. Due date of payment is ascertainable, meaning from the contract which you have entered, the due date of payment is ascertainable, or the due date of payment is not ascertainable, or the payment is linked to completion. There are 3 possibilities. The due date of payment is ascertainable, due date of payment is not ascertainable, or payment is linked to completion. Meaning, I am supplying something to you continuously. Now, in that supply, I would have given a contract. We would have made a contract. In that contract, whether the due date of payment is mentioned. If it is mentioned, then the invoice is required to be issued on or before that due date of payment. If the due date of payment is not ascertainable, if the due date of payment is not mentioned or not ascertainable, the invoice is required to be issued on or before receipt of such payment. On the date when you are receiving the payment or any time before that date. And if the payment is linked to completion, if the payment is linked to completion, invoice is required to be issued on or before completion. Now, we'll discuss the time of supply of goods first. Section 12 talks about time of supply of goods. Section 12 subsection 1 says, the liability to pay tax in case of supply of goods. Why is time of supply important? Because you are going to understand in this chapter when you are liable to pay tax. The liability to pay tax in case of supply of goods shall be the time of supply as determined under section 12. So if you want to know when you are liable to pay tax in case of supply of goods, then go see the provision of section 12. Section 12 subsection 2 talks about time of supply of goods in case of forward charge. In case of forward charge of goods, when should you issue the invoice? Check whether in case of forward charge, when do you have to pay the taxes? What is the time of supply? To know that, you check whether the invoice has been issued within the due date under 31 or invoice is not issued within the due date under 31. Now, just now we saw what is the time limit for issuing the invoice. If the invoice is issued within the due date of 31, time of supply will be date of invoice or date of payment, whichever is earlier. Meaning, I am making a supply of goods to you. Okay, for this supply, I have given the invoice to you within the time limit. Whatever time limit is there, I have issued the invoice within the time limit. So, what is the time of supply? The date mentioned on invoice. Meaning, when should I pay the GST to the government? On the date of invoice or the date when you make the payment to whichever is earlier. Meaning, if the invoice is before payment, I should make the payment of tax to the government on the date of invoice. Sir, what if the invoice is not issued within the due date? If I have not issued the invoice within the due date, the time of supply will be what is the last date to issue invoice. For example, I have supplied goods to you and goods are normally movable. So, invoice is required to be issued on or before removal. So, in such cases, last date to issue invoice will be on or before removal or date of payment, whichever is earlier. Now, what do you mean by date of payment? Date of payment is book entry date or bank credit date, whichever is earlier. The date entered in the books of accounts or the date entered in the books of accounts that I have received the payment or the date on which the money is coming to your bank account, whichever is earlier. Now, in case of goods, one very beautiful important notification is there called as notification number 66/2017, which says in case of supply of goods, except for specified actionable claims, if any money is received before making the supply, then the date of receipt of such money shall not be taken as time of supply. So, whenever you are supplying a goods, if for that supply of goods, if you are receiving any, if for such a supply of that goods, if you are receiving any money before making the supply, the time of supply for that goods will be the date of receipt of money will not be taken as time of supply. What will you take? Normal date of invoice or last date to issue invoice. So, basically what this notification says, notification number 66/2017 says, for goods, date of payment cannot be taken as time of supply. So, because of this notification, what is that is, if date of payment is before last date to issue invoice, then the date of payment shall not be taken as time of supply. For goods, therefore, what can be time of supply? Either invoice date or last date to issue invoice, whichever is earlier. 12.3, time of supply in case of goods which are taxable under reverse charge. There are some goods on which the recipient has to pay the taxes under reverse charge. So, in such cases, what is the time of supply, sir? Date of receipt of goods or date of making the payment or 31st date from the date of supplier invoice or any other document issued by the supplier, whichever is earlier. Meaning the date when you are receiving the goods. If that is not available, date when you are making the payment. So, that is also not there. 31st date from the date of invoice issued by supplier, whichever is earlier. Next, time of supply in case of vouchers. Vouchers means what, sir? Vouchers are vouchers only. Time of supply in case of vouchers. See, some vouchers will be there based on which you can take purchase something. Correct? No. So now these vouchers can be of two types: supply identifiable voucher, supply not identifiable voucher. Supply identifiable voucher means what, sir? At the time when you are issuing the voucher, at the time when the vouchers are issued, that time only I know what you are going to purchase. I am giving a voucher to you and I tell you that you can purchase a shoe. In such cases, what is that point telling, sir? Voucher says you can purchase only shoe. So, can you purchase anything else apart from shoe? No, sir. So, it is a case of supply identifiable voucher. I am giving a voucher to you which a condition telling that you can purchase anything what you want. From Puma store, you go purchase anything. Now, this is a supply not identifiable voucher. So, if it is a supply identifiable voucher, the time of supply will be date of issue of voucher. Because on the date when the voucher is issued to you, I know what you are going to purchase. But if it is a supply not identifiable voucher, time of supply will be date of redemption of voucher. Residual cases, meaning if you are not able to determine the time of supply as per section 12 subsection 2, 12.3, 12.4, then residual case will apply. If you are a person who is liable to file returns, the due date of filing returns will be taken as time of supply, and in all the cases, the date of making payment will be taken as time of supply. And if you receive any interest, penalty, late fee for delay in payment of consideration, the time of supply will be date of receipt of such amount. Now, what is the time of supply for services, sir? For services, what is the time of supply? Now, section 13 talks about time of supply for services. For services, they are telling 13 subsection 2, they say in case of forward charge, check whether the invoice has been issued within the due date or invoice is not issued within the due date. A services time of supply is very important. If the invoice has been issued within the due date, the time of supply will be date of invoice or date of payment, whichever is earlier. But if the invoice is not issued within the due date, then the time of supply will be date of completion or date of payment, whichever is. Now here, for services, if the payment date is early, then the payment date will be taken as time of supply, meaning you will have to pay the taxes on the date of receipt of payment, correct? So sometimes it may happen that for supplying some services, you may pay the money in advance. So if you are paying the money in advance, the time of supply for that will be the date of payment. Now, section 13 subsection 3, time of supply for services tax benefit reverse charge. Now there is an amendment in this. What is the amendment, sir? So normally for reverse charge, what is the time of supply? Date of making the payment or 61st date from the date of invoice or any other document issued by the supplier, whichever is earlier. What is the amendment, sir? They have added one more point telling or they are telling date of issue of invoice by recipient as per rule 47. Now, recipient, he is receiving the services. So, recipient has to give an invoice for him to himself. That due date is what, sir? Within 30 days, he should give an invoice. By recipient, within 30 days, the invoice should be generated. Now, in case of importation of services, who has to pay the taxes? Receiver has to pay the taxes under reverse charge. So, what is the due date of, what is the time of supply, sir? Date of making the payment, or sometimes because I am importing the services from my own establishment outside India, associated enterprises, I may not make the payment to him. So, they are telling date of making the payment is not there, okay. Date of debit in the books of accounts, whichever is earlier. Then, section 13 subsection 4, time of supply in case of vouchers. For vouchers, check whether the supply is identifiable voucher, supply not identifiable voucher. So, voucher can be of two types, supply identifiable or supply not identifiable. If it is a supply identifiable voucher, date of issue of voucher will be taken as supply. If it is a supply not identifiable voucher, date of redemption of voucher will be taken as time of supply. Section 13, subsection 5, for residual cases, same provision. See, please note, 13.4, 13.5, 13.6 is same as 12.4, 12.5, 12.6. So, in residual cases, if you are a person liable to file return, due date of filing return, all other cases, date of making the payment. Time of supply in case of interest, penalty, late fee for delay in payment of consideration with the date of receipt of such money. Now, whenever there is a change in rate of tax, change in rate of tax means what? Now, if you remember, few months back, there is something called as GST 2.0 came into existence, because of which there was a tax rate change. Correct? There was a rate change of taxes. Meaning now there will be only two rates, which is 5% and 18%. All other rates will be gone. They are telling, correct? No? So now there were products which were taxable at 12%. Now it is taxable at 5%. So the question is, will I apply 12% or 5%? So for that, if you want to know, you please read the provision of section 14. Time of supply whenever there is a change in rate of tax. Now check whether the supply is made before the change in rate of tax or the supply is made after the change in rate of tax. When the supply is made before the change in rate of tax, meaning, see in this case, supply is always before, correct? Supply is always before the change in rate of tax. Now, what is the crux? What is the crux which we learned over here? Date of supply can never become time of supply. Date of supply can never become time of supply. You see everywhere, date of supply is not a time of supply. Then who can become time of supply? Either invoice date or payment date. Any one of them can become. Whoever is with supply is becoming time of supply. Correct? No? So if the invoice is with supply, time of supply is date of invoice. If the payment is with supply, time of supply is date of payment. Correct? Whoever is with supply is becoming time of supply. Sir, what if both of them are not with supply? If both of them are not with supply, then date of invoice or date of payment, whichever is earlier. Sir, what if all of them are together? Then same, invoice or payment, whichever is earlier. Now here, normally date of payment is book entry date or bank credit date, whichever is earlier. But whenever there is a change in rate of tax, if the amount is getting credited to the bank account after 4 working days from the date of change in rate of tax, then the date of payment shall be the date. Always the amount is getting credited to the bank account. So what is this point telling? Whenever there is change in rate of tax and if the money is going to the bank account after 4 working days of change, then date of payment will be taken as date on which the money is going to bank account. Now T series is music company. Now please note, T series is a music company and a registered dealer in India paid an advance of 5 lakh rupees to Mr. Vikas, a music composer, for a copyright covered under section 13 subsection 1 clause A of Copyright Act of his original musical work on 15/9/24 through RTGS. This is how they made the payment. It made balance payment of 2,50,000 on 12/12/24. You are required to determine the time of supply if Mr. Vikas has raised the invoice on 16/10/17/12. Now the question is whether they are asking you what is the time of supply. Tell me what is the time of supply, by the way. Which of course you will give a wrong answer. You remember I just now I gave this similar example telling T series ARMN is giving services to T series. So can I say this service is taxable under reverse charge? Yes, this is one point which is clear. So in case of reverse charge, what is the time of supply? Tell me the answer now. Reverse charge of services, date of making the payment or 61st date from the date of invoice, whichever is earlier. Date of invoice, they have given these 2 dates. No sir, 61 days from the date of invoice, that date, or the services are given later, sir. He gave the money in advance. So that is different point. The amendment point is different. That is anyways not covered in this point actually, because this was before amended question. So what is the date of what is the time of supply? So whatever is the date of invoice, add 61 days. You know, Vikas Rez, yeah, add 61. Hey, by the way, who has to pay the taxes? T series or Vikas? T series has to pay the taxes under reverse charge. So from this date, calculate 61 days. From this date, calculate 61 days. Compare that with date of making the payment. So for 5 lakh rupees, it will be 59 only because it is before the invoice date only. Correct? No, invoice date plus 61 I should tell. But for 5 lakh rupees, the date of payment is before, and 2,50,000, the date of payment is 12/12. So for this, I will have to see 61 days. So we will have 2 time of supply. Time of supply for 5 lakh rupees, it will be 5th of September, and for 2.5 lakh rupees, you have to calculate and tell me. So for this plus 61 days is how much? How 4th? November has 31 days. October has 31 days. So 25 plus 20. No, 6 is that is from that date you will count. No, so from next date you will take 30 days plus how many days? 6 days. So 6th of December And second case, the answer will be 12th of December. See, supply of services by music composer by way of services of permitting to music related work is taxable under reverse charge. First, you should tell the story that this service is taxable under reverse charge, and therefore TCDs is required to pay the taxes. 1 mark you will get for this. What is this? The time of supply will be the date of making the payment or 61 days from the date of invoice, whichever is earlier. So for 5 lakh rupees, case 1, case 2, we'll see case number 1. Case number 1 is what, sir? Invoice is raised on 5/9 and this is 17th of what you are concentrating? 6, 10, 17, 12. So for first 5 lakh rupees, the date of payment is, they have given, date of payment is okay, 5 lakh rupees, date of payment is 5/9. The date on which the payment is debited in the bank account is also same because it is RTGS. The date immediately following 60 days from the date of invoice is 60 plus 1, which is 6th of December in case 1, and case 2 it will be 16th of February because the invoice was raised on 17th December. So time of supply will be for 5 lakh rupees, it is 5th of September. Did we also get the same answer? Now for 2.5 lakh rupees, the date of payment is 12th of December and the date on which credited to bank account is also 12th of December. 61 days will be 6th of December or 16th of February. For second case, it is 16th of February. So time of supply will be 6th of December for case number 1. For 2,50,000 I am telling. And for second case, it is 12 because that is the date of payment. Value of supply question. This is the copy paste only they have done. I think second question, so just like that they have copy pasted without even changing anything. No. Okay, this is not there. Value of supply. Okay, exemption topic. Okay, so next topic for discussion is what, sir? Value of supply. One of the easiest topic. See, value of supply, though you have rules in your examination, they don't ask question on rules normally, but they may ask also. Rule number 32 is important rule. Other rules are not important. Value of supply. Very simple, very easy chapter. Value of supply. Important chapter. One question will definitely come. Okay, every attempt it comes. Value of supply is what, sir? Value of supply is transaction value. What do you mean by transaction value? You come to Priya Sarees, you purchase a saree. I sold the saree to you. Is there a transaction between you and me? So whatever is the value of the transaction is taken as value of supply. So value of supply is transaction value. Transaction value means the price which is actually paid or payable, where the supplier and the recipient are not related, and the price which you are paying is the sole consideration or it is the only consideration. Now, section 15 subsection 2, what are the inclusions in value of supply? What are the different things which you are supposed to include in value of supply? Now, you take the transaction value. What is transaction value? Whatever price is agreed between you and me. Okay, that is the transaction value. Transaction value is the price which is actually paid or payable, where supplier and recipient are not related and the price is sole consideration. Now, to that transaction value, you are supposed to add few things. What are those things which you are supposed to add? All taxes except the taxes under GST law if they are charged separately. You should add all the different types of taxes except the taxes under GST law if they are charged separately. Meaning GST should not be added. CGST, SGST, IGST should not be added. Any other type of tax should be added while computing value of supply. Then any payment made by the recipient which the supplier had to incur. If there is any payment which the recipient had to make, but who had recipient has made, but who had to incur that? Supplier had to incur. For example, I sold the goods to you. I am the supplier, you are the recipient. There was an expenses which was supposed to be incurred by me, but it is incurred by you. That point is covered over here. Incidental expenses for making the supply. So if I want to make a supply to you, any kind of incidental expenses which I am incurring, transportation charges, insurance charges, everything will be added in value of supply. Then interest, penalty, late fee for delay in payment of consideration. You don't make the payment to me within time. There is a delay in payment of consideration. Therefore, I charge you interest, penalty, late fee. That also should be added in value of supply. And subsidy directly linked to the price, excluding the subsidy given by central government or state government. Sir, can I exclude something from value of supply? Sir, yes, you can exclude only one thing from value of supply, which is discount. Now, this discount can be given before or at the time of supply, or the discount can be given after supply. If the discount is given before or at the time of supply, exclude it from value of supply if it is shown separately on the invoice. And if the discount is given after the supply has been made, exclude it from value of supply if 3 conditions are satisfied. Which are these 3 conditions? The discount is agreed between supplier and recipient, it is linked to specific invoice, and ITC on the discount is reversed by the recipient. Okay. Now, section 15. Normally, they will ask a question on section 15 only. Rules, they will not, normally they will not ask question. So, we will see question on section 15, which is value of supply. Yeah, but in customs you have buying commission something and all is there. No, this is find minimum GST payable. Okay, this okay. This is a classroom question only. There was a time of supply question, value of supply did not ask. What is the answer for this question? Value of supply. One answer I have received 13,40,000. 13,40,000. Okay, what is the answer? See, list price is 12,40,000. I'll take 12,40,000. Then items already adjusted, subsidy. See, items already adjusted means they have already considered this. Whenever I am receiving subsidy from someone, what will you do? Will you increase the value or decrease the value? Decrease the value because it is a benefit which is received by me. So now subsidy received by central government, no problem. Ignore that because that is not required to be considered. But subsidy given by trade association, that should have not been decreased, but he has decreased it. So can I say I will add it? Yes. So how much will I add? Items not adjusted in the next slide. Municipal taxes, should it be added? Yes. All taxes except the taxes under GST law. Packing charges and delay in payment of consideration. So total is how much, sir? 13,40,000. 10,40,000 is the right answer. This to you question paper only you should ignore. Now this includes like this folk dance is included in exemption chapter up to 1.5 lakhs. So this includes exemption point also. Okay, only one question is there. Now, rules, normally they will not ask a question. If they ask the question will be on rule number 32 only. Rule number 32 talks about some cases wherein these people, there are some categories of people, for them you can determine the value of supply using these methods. Rule number 32, if you are a money changer or a forex dealer, if you are a foreign exchange dealer or a money changer, then you have two options. See, please note, they can always follow section 15. But if they don't want to follow 15, they can follow this. If you are a foreign exchange dealer or a money changer, foreign exchange dealer means what, sir? You are a person who is involved in the business of converting foreign currency. In such cases, option number 1 available with you is, I am going to a foreign exchange dealer. Let us say, Praveen wants to go to Thailand. Okay, now every day he is taking services online. Now he want to take services offline. So in such cases, he will have to go there. Correct? No, he will have to go there, or that person will have to come here. Now he is going over there. I am a foreign exchange dealer. Now he wants, he wants to change his currency. He wants Thai, whatever rupees it is. Thai massage ante gube. That you take. Okay. Now he wants to, he wants to go over there. So what will happen over there, sir? What will happen over there? So he will have to exchange the currency. Correct? He will have to exchange the currency. So he came to me for exchanging of currency. Now he will give me rupees. I will give him whatever currency he wants. So the currency exchange involves Indian rupees. Is the currency exchange involving Indian rupee? Yes. He is giving rupees. I am giving him whatever currency he wants. Now check whether RBI rate is available for that. Let us say he is taking dollars from me. Okay, he is taking dollars from me. Now RBI gives currency rate for 4 currencies, which is dollars, pounds, euros, and yen. Meaning RBI has 4 currency which rate is given by RBI. Now, if he has RBI reference rate is available, whatever RBI is charging, minus whatever exchange is charging. Meaning, if I give the money to RBI, how much is RBI going to charge? Minus the exchanger ka rate into number of units exchange. Will be taken as what, sir? Value of supply. See, whatever currency he is exchanging, number of units exchange, take what? RBI ka rate. Take what? Money changer ka rate. Take RBI ka rate and take money changer ka rate. The difference of that, take positive value into number of units exchange. RBI reference rate is not available. If RBI reference rate is not available, then how much ever rupees he gave me, 1% of that will be taken as value of supply. Now the currency exchange by you does not involve Indian rupees. If you are exchanging a currency which does not have any Indian rupees, then I will take 1% of currency bought, 1% of currency sold, whichever is less. Meaning, he is giving dollars to me, I am giving Thai currency to him. So in such cases, sir, how do you have Thai currency? You should not ask. I will go there, I am an exchanger. Hey, go away. I am a currency exchanger. Now, he is giving dollar to me, I am giving Thai currency to him. Now, how now in this case, the currency which you are exchanging, does it involve Indian rupees, sir? Does it involve Indian rupees? Answer is no. So I will take 1% of currency bought, 1% of currency sold, whichever is less. That will be taken as value of supply. Now first I have to convert them into Indian rupees, and then I have to take 1%. Now option number 2, which is available with this foreign exchange dealer, is based on slab. If you are exchanging up to rupees 1 lakh, 1% of currency exchange or 250 rupees, whichever is less. If you are exchanging more than 1 lakh up to, whichever is high only, I told. Yeah. This is high. So, yeah. Up to 1 lakh. So, if you are exchanging up to 1 lakh rupees, one currency of currency exchange or 250 rupees, whichever is higher. So, if you are exchanging 90,000 rupees, how much you will take? 90,000 into 1%, which is 900, or 250, whichever is higher. If you are exchanging more than 1 lakh up to 10 lakhs, then 1000 rupees plus 0.5% for currency exchange more than 1 lakh. If you are exchanging more than 10 lakhs, then 5,500 plus 0.1% of currency exchange more than 10 lakhs or 60,000 rupees, whichever is less. Now, if you are an air travel agent, I am a travel agent. What travel agent? Air travel agent. So, for me, if I am doing a domestic booking, value of supply will be base fare into 5%. If I am doing international booking, value of supply will be base fare into 10%. And if you are in life insurance business, see, general insurance business, whatever premium you are paying is the value of supply. But for our life insurance business, I will see whether the policy is a saving policy or risk policy. If it is a risk policy, whatever premium paid is value of supply. If it is a saving policy, meaning risk policy means if you die, money will be given, or else money will not be given. So full amount you have paid is the value of supply. But if it is a risk policy, if it is what, sir? If it is a risk policy, then check whether it is single premium policy or investment policy. If it is a single premium policy, value of supply is 10% of single premium charge. If it is an investment policy, check whether the amount which is allocated towards investment is intimated to you or not intimated to you. If it is intimated to you, value of supply is gross premium charge minus amount allocated towards investment. If amount allocated towards investment is not intimated, then for the first year of policy 25% and for subsequent year it is 12.5%. And if you are a dealer of second-hand goods, Praveen, if you are a dealer of second-hand goods, then check whether, hey, please note, in case of second-hand goods, you can either be dealer of second-hand goods or you are a person who is repossessing second-hand goods. Okay, dealer of second-hand goods or repossession of second-hand goods, value of supply is same, sale price minus purchase price. Value of supply is what's that? Sale price minus purchase price. Sale price minus purchase price. Value of supply will be what's sale price minus purchase price. Now, for this there is a condition. Value of supply will be taken as sale price minus purchase price subject to condition. No input tax rate shall be availed on second-hand goods, and second-hand goods should have been supplied as such without making any changes. Hey, without making any changes, you should supply second-hand goods. Okay or not? Except minor changes. Minor changes you can make, but major changes you cannot make. Okay or not? Yeah, minor changes means that second-hand goods should not be minor. Go away. Minor changes means small changes. Whether it's buy one get one free. Venkat, you are minor.
Yes, sir.
You are not yet converted into major. You told you will get converted very soon. January. Control is not there in life. Now, how does she know about this? I don't know. She knows about this, that you are waiting for becoming major. Everyone knows. Publicly, I have put a notice board outside my room. He is not worried about exam. He is worried about January. When is your birthday, sir? You only don't know. Hey, go away. I want your birthday, not Jan's birthday. Go away. 25th. Oh, Republic Day. Oh, she is. She's already there. Mature. Major. Yeah, Mada is there. Sir. Mada is there. Akka bani pakka ante. Tama. Mada is there. Okay. Now please note. Either you can be dealer of second-hand goods or it can be case of repossession of second-hand goods. Dealer means I am buying and selling second-hand goods. So if you are a dealer of second-hand goods, value of supply is your sale price minus purchase price. For example, I am a dealer of second-hand goods. I am purchasing this mobile from someone and I am selling it to someone. I have not made any changes in that. I have not taken input tax. Then only this provision is applicable. So I sell it for 10,000 rupees. I purchase it for 8,000 rupees. Value of supply is 2,000 rupees. But if it is a case of repossession, you have purchased this mobile phone on loan. Now you have to pay EMI for this. You have not paid EMI. I am going to take the mobile phone from you. In such cases, repossession. Repossession of second-hand goods also, value of supply is sale price minus purchase price. Now I have not purchased the phone from you. I have just taken the phone from you. Repossession. So what is the purchase price, sir? Because if I take purchase price, the purchase price will always be more than sale price. Today, if I sell this mobile phone, let us say this mobile phone is belonging to Venkat and he used this mobile phone for 2 years. Now he did not pay EMI, I am taking it back from him. Now if I sell this mobile phone, will I get the same purchase price, the actual purchase price 25,000? Today, if I sell, will I get 25,000? No, sir. So what is purchase price over here? Purchase price should be calculated by you. You take the actual purchase price of that mobile phone, subtract 5% per quarter or part thereof from the date of purchase till the date of repossession. Why have I wrote? Date of sale only, not repossession. Correct it is. From the date of purchase to the date of sale, subtract depreciation. How much depreciation you should subtract? 5% for every quarter. Even if it is a part of quarter, subtract 5%. So if you subtract depreciation from your actual purchase price, you will get purchase price. You should subtract that purchase price from your sale price. WDV. No, it is not depreciation. You just have to subtract 5%. You see the number of quarters into 5% as present. So SLM method, not SLM also. SLM, yeah, SLM method. So this is value of supply topic. Next is what, sir? Place of supply. Place of supply, beautiful chapter, important chapter, but I mean, a very important chapter. 100% you can expect a question on this topic. For CS student, so definitely they'll ask question on this topic. Place of supply. Now, place of supply. Place of supply means what, sir? Where the supply has been made, which location? Okay. So to determine the place of supply, you have to learn the chapter, learn an act called as Section IGST Act. Now, please note, we know that if I supply from Chennai to Coimbatore, it is intrastate supply. From Chennai to Mumbai, it is interstate supply. Correct? We know this. We know this information. But sir, what if Priya Saris is in Chennai, Karina is in Mumbai, and Karina has told Priya to supply in Coimbatore? So in such cases, what is the place of supply, sir? Because the goods are going to go to Coimbatore, but I am going to give an invoice to Karina. What is the place of supply? So lawmaker says for that you should determine place of supply. Meaning, if you want to know what is the nature of supply, section 7 says, hey, what is the nature of supply? Section 7 gives the meaning of interstate supply. Section 7 gives the meaning of what, sir? Interstate supply. What is an interstate supply? Interstate supply means what, sir? Interstate supply, what happened? That also got on now. Problem is nothing can be done. Once again, online students. However, they will be thinking, what is he looking up on there? Interstate supply section 7 is written over there. Maja only is there, no, in AC. In class, exam hall, they should give one remote to us. Attempt will come. Section 7. Section 7 of IGST Act talks about what, sir? Section 7 of IGST Act talks about interstate supply. Interstate supply means what? Interstate supply means the location of the supplier and the place of supply is in two different states or two different union territory or one state and one union territory. Then the transaction will be called as interstate supply. If I am making a supply where the location of the supplier and the place of supply is in two different states, two different union territory or one state and one union territory, then the transaction is intrastate supply. What should I see? Location of supplier and place of supply. Then, or it is a case of importation of goods or services. I am importing any goods or services. That importation of goods or services is interstate supply. Or it is a case of export of goods or services. I am exporting goods or services. It is an interstate supply. Supply to an SEZ unit or SEZ developer. So if I supply to an SEZ unit or SEZ developer, whether he is in my same state or different state, it does not matter. It is always an interstate supply. Or you are making a supply which is not an intrastate supply. Section 8 gives the meaning of intrastate supply. I will call a particular transaction as an intrastate supply if the location of supply and place of supply is in same state or same union territory. Now, what will happen if I make a supply in territorial waters? If I make a supply in territorial waters, lawmaker says where the location of supplier is in territorial waters or where the place of supply is in territorial waters, the location of supplier and place of supply will be the nearest coastal area. Now, section 10 talks about time of supply for, place of supply only I am telling. Section 10 talks about place of supply for goods where supplier and recipient both are in India. Which restaurant you went? Moana. Oana,
Yeah.
You have our daughter name is Pranaya. Sundari, what is your name? What is her name? Oh, Praniti ke Pranay, correct? Section 10, Pranati. Section 10, minor, place of supply of goods, where supplier and recipient both are in India. Section 10, subsection 1, clause A says, if the supply involves movement in goods, the place of supply will be location where the movement is terminating, location where the movement is ending. For example, this is the goods, this is the goods. Now I am making a supply of goods, supply involves movement in goods. Correct? The supply involves movement in goods. What is the place of supply, sir? Location where the movement is terminating. Correct? Location where the movement is terminating. Please don't share this link to anyone. Next class, hey, please note, Academy, the remote is safe. Fine. The person has got the remote. Next class only I will not be allowed to take another remote. Then section 10, subsection 1, clause B. I cannot take risk with this. Section 10, subsection 1. All in students, section 10, subsection 1. Nothing happened. Nothing happened. Classes is going on. Yeah. Section 10, subsection 1, clause B. Movement is caused by third person. Movement is caused by third person. I wanted to lift this iPad. This go by iPad moved something else. Correct? No. Movement is caused by third person. If the movement is caused by third person, the place of supply will be principal place of business of such third person. For example, Karina told Priya to supply sarees to Nayantara. Karina told Priya to supply sarees to Nayantara. In such cases, who is giving the instruction to Priya? Karina is giving the instruction. So, movement is caused by whom, sir? Karina. Place of supply is? No, not Nayantara's location. See, goods are going and getting delivered to Nayantara. So, termination is happening near Nayantara. But who gave the instruction to me? Karina. So, place of supply will be location of Karina. Section 10, subsection 1, clause C. If the supply does not involve movement in goods, I sell this entire classroom along with bench, chair, desk and students to someone. In such case, what is the place of supply, sir? The place of supply will be location of the goods at the time of delivery. Where are the goods located at the time of delivery? 10.1c, 10.1ca, newly added section. If you are supplying the goods to an unregistered person, the time of supply will be what, sir? Unregistered person is recorded on the invoice. Yes. Then the address as per unregistered person, whatever is recorded, if place of supply only. If the address is not recorded on the invoicer, the place of supply will be location of supply. Then section 10 subsection 1 clause D. In case of installation and assembly. So there are some machineries which are required to be installed at some place. So though they are goods, they are required to be installed at some place. So time of supply, place of supply for that will be the place of installation and assembly. 10.1e, supply on board a conveyance. You are in an aeroplane. When you are in your aeroplane, you are purchasing something. So in such cases, supply is made on board a conveyance. The place of supply will be location where the goods are taken on board. Then section 11 talks about time of supply in case of import and export of goods. For import of goods, the place of supply will be location of importer, and for export of goods, the place of supply will be place outside India. Section 12 talks about place of supply for services. Section 12 subsection 1 says, the provision of section 12 shall apply for determining the place of supply of services where the supplier as well as the recipient both are in India. This is the general rule. Section 12 subsection 2 talks about general rule. Section 12 subsection 2 is general rule. Meaning, if you want to know what is the time of, what is the place of supply for services, then this is normally applicable. And apart from that, we have something called as special rules. Okay. Apart from that, whatever other rules are there, they are all special rules. They are applicable only for those people who are listed over there. Now, if you are a person who is registered person, so if the services are given to him, sir, if the services are provided to a registered person, the place of supply will be location, the principal place of business of such registered person. So if you are giving services to a registered person, the principal place of business of that registered person shall be taken as place of supply. If you are giving services to an unregistered person, check whether you have address of that unregistered person or address is not available. If address is available, that address. If address is not available, then what's location of supply at the time of delivery. Now, for example, I am filing income tax return of Infosys, which is a registered person. What is the place of supply? Infosys, location of Infosys. I am giving services to a person who is not a registered person, but he is from Andhra Pradesh. What is the place of supply, sir? His location, Andhra Pradesh, because location is available. I am giving services to a person whose address is only not there. Supplier's location will be taken as place of supply. I am giving services directly in relation to immobile property. If I am giving any services directly in relation to immobile property, services directly in relation to immobile property, such as renting of immobile property, leasing of immobile property, or construction, interior designer, architect services, any services relating to immobile property. Place of supply will be the place where the immobile property is located or intended to be located. Where is the immobile property located or intended to be located? Now, if the supplier and the recipient both are in India, but if the immobile property is located outside India, place of supply will be location of service recipient. Okay, very good. Is Dubai very beautiful? Burj Khalifa I had in my life. Then, similarly, where the immobile property is located in more than one state, the place of supply will be taken proportionately. Section 12, subsection 4, performance-based services. See, some services are there wherein you have to perform something. You have to perform. So, in case of performance-based services, for example, you will go for a haircut. That person will have to perform the services. Correct? No? That person will have to perform the services, haircut services, restaurant. He will have to cook the food for you. Outdoor catering, fitness, beauty treatment, or healthcare services. They are all called as performance-based services. For all these things, the place of supply will be what, sir? For all these things, the place of supply will be the location where the services are performed. Then, training and performance appraisal. Training and performance appraisal means what, sir? For example, my services. I am teaching you, I am giving you training. So, in case of training and performance appraisal services, the place of supply will be what, sir? The place of supply will be, if the services are given to a registered person, principal place of business of a registered person. If the services are given to an unregistered person, location of where the services are performed will be taken as place of supply. For example, I am teaching. So, I am teaching you guys. You are all unregistered persons. Whom am I giving services to? Am I giving the services to you or the institute? If I am giving the services to institute, place of supply will be the services are given to registered person, the principal place of business of registered person. But if I am giving services to you, I am giving services to unregistered person. If I am giving the services to you guys, if I am giving the services to an unregistered person, the place of supply will be what, sir? Wherever the services are provided. So that is classroom. Admission to an event. Admission to an event means what, sir? We are talking about entry ticket price. Admission to an event means we are talking about entry fees. We are talking about entry fees. So whenever you are going to an event or amusement park, I am going to Wonderla. So if I am going to Wonderla, what is the place of supply, sir? Wonderla. Location where the event is held or location where the park is situated. Section 12 subsection 7, organization of an event. Organization means conducting the event. Organization of an event means what, sir? Conducting the event. So in case of conduction of an event, what is the place of supply? Someone is conducting the event. What is the place of supply? Depends on the organization of an event means I am asking someone to hold a sari exhibition. So that person is going to help me have that sari exhibitions, etc. So what is the place of supply in such cases? The place of supply in such cases will be, if it is given to a registered person, principal place of business of registered person. If it is given to an unregistered person, location where the event is held. Now there are two provisos, same provisos which we studied before. Now if the event is happening outside India and if the supplier and the recipient is both are in India, the place of supply will be location of recipient. And if the event is held at more than one place, place of supply should be taken proportionally. Please note, in examination, most asked question is event question. Section 12 subsection 8, transportation of goods service. Which services? Transportation of goods service. Now I am giving services of transportation of goods. I am giving the services to whom, sir? A registered person or an unregistered person? I am giving the services to a registered person. The place of supply will be principal place of business of that registered person. If I am giving services to an unregistered person, the place of supply will be the location where the goods are handed over for transportation. Location where the goods are handed over for transportation. Okay, location where the goods are given, handed over for transportation. Section 12 subsection 9, passenger transportation services. In case of passenger transportation services, what is the place of supply, sir? Again, here also you should see whether the services are given to a registered person or unregistered person. If the passenger transportation services, our institute is planning to take you all for a picnic. So that is a passenger transportation services. Now in such cases, that services are given to a registered person. So what is the place of supply, sir? Principal place of business of registered person. If the services are given to unregistered person, location where the passenger is embarking the conveyance. For example, you are taking services of passenger transport. You are going to your house in a bus. Wherever you are catching the bus, that place will be taken as place of supply. Section 12 subsection 10, services on board a conveyance. You are in an aeroplane. You are calling air hostess. You are telling her that I want services. So in such cases, what will happen, sir? You are in an aeroplane and you are receiving services. Services are provided to you when you are on board a conveyance. So in such cases, what is the place of supply, sir? The place of supply will be the first scheduled point of departure of conveyance. The place from where the conveyance is starting its journey. And for goods, the location where the goods are taken on board. And for passenger transport, wherever you are boarding the, embarking the conveyance, boarding the flight. Section 12 subsection 11, telecommunication services. If it is fixed line, wherever it is fixed, like for example, internet modem will be fixed, LAN cable will be fixed, or telephone, landline phone, etc. Postpaid, billing address. Prepaid, wherever that vouchers are getting sold. And in case of online billing services, in case of online, it is billing address which is given by you. Section 12 subsection 13, insurance services. If the insurance services are given to a registered person, location of a registered person. And if the insurance services are given to an unregistered person, the place of supply will be address whatever is available with the supply. Section 12 subsection 4, advertisement services given to government. It will be each of that place which is mentioned in the contract. Okay, section 13 talks about place of supply for services where either the supplier or the recipient, any one among them, is outside India. Section 13, subsection 2 is default section, which says normally if you are giving any services, the place of supply will be location of recipient. If location of recipient is not available with you, place of supply will be location of supplier. Next, for performance based services, section 13 subsection 3 talks about performance based services, which has 13.3a, 13.3b. So performance based services, I am asking someone from outside India to come to India and do my haircut. Correct me, possible? Why are laughing? 500 crores turnover. Yeah, I cannot call yeah. For cutting hair, go away. Yeah. No. Now, you are giving services on some goods. Charan, you are giving services on some. You are giving services on some goods. Now, the goods are made physically available. The goods are made physically available. For giving the services, the goods are made physically available. In such cases, wherever the services are actually performed. If the services are given through electronic mode, for example, I have a car in India and I am asking Vin Diesel to come to India and repair my car. Yeah. So in such cases, what will happen, sir? Because he's coming here, he's performing services over here. What is that, sir? Place of supply is India. Now he says, Dilip, I'll give the services to you in online mode, Dilip. I'll give the services to you in online mode. So in such cases, what will happen? Place of supply will be, he is there, Vin Diesel is there, now car is here, he is giving services online mode. In such cases, where is the car located at the time of giving the services? So place of supply will be the location of goods. Now if the services are given on an individual, then wherever the services are performed. Now if it is with respect to immobile property, I am asking a builder from outside India to come and construct a house for me in India. Place of supply will be location where the immobile property is located or intended to be located. Now, services by way of admission to or organization, both are covered. Services by way of admission to an event or organization of an event. Place of supply will be location where the event is held. Then, section 13.3, 13.4, 13.5, if they are provided at more than one location, including a location in taxable territory, place of supply shall be location in taxable territory. Services performed is in more than one state or union territory, place of supply shall be each of that state or union territory proportionally. Now, in case of specified services, now in these cases, in these three cases, the place of supply will always be location of supplier, service provider. Which three cases? In case of three services, whether it is given to a person in India or outside India, it does not matter. The place of supply will always be location of supply. Services provided by a banking company, financial institution or NBFC, or intermediary services, or services consisting of hiring a means of transport other than aircraft and vessel for a period up to 1 month. So if you are taking these three services, the place of supply will always be location of service provider. Location of service provider. Okay. Now, in case of passenger transportation services, value of supply of service will be where the passenger is embarking the conveyance. Same point. Then in case of services provided on board a conveyance, the first scheduled point of departure of such conveyance. Same point. Now this is a different or new section, which is online information database access or retrieval services. OIDAR services, online information database access or retrieval services. Place of supply will be location of recipient. Now, this Amazon is there, or this Prime is there, Netflix is there, etc. They are giving these services. What services are? Online information database access and retrieval services. For these services given by them, the place of supply will always be location of recipient. Input tax credit. Next topic for discussion is what, sir? Input tax credit. Now, this is also one of the important topics. Once we complete this topic, our major portion of the GST law is done. Meaning, major portion of your examination also is done. Almost in GST, whatever topics we have discussed till now, from that, almost your examination. No, more than that. MCQ though, anyways, I don't consider at all. I don't know what is MCQ in my life. Okay. So place of supply, time of supply. So as of now, we have solved questions worth how many marks? 28. So place input tax credit if you add now. That input tax credit will be in this point. Correct? So whatever it is, 30.
They give a theory question, sir. What is it?
Where is the theory question?
Because after that, before customs law question will be theory.
No, this is the 8A input tax rate and this is customs 8B. Similarly over here also, this is not a theory question. This is input tax credit question. And with customs. And here also input tax, not input tax rate. This is with respect to exemption. Oh, contents of, because they don't ask questions from the chapters at all. Yeah, stay now. Nothing is there in your syllabus. After that procedure aspect, they are not asking anything. They are asking in MCQ. Okay, inge par students. Sundari, inge par means input tax rate. Nothing, Sundari. You are not disturbing. You continue. Yeah. Pravina, Pravini, whatever your daughter is doing, you do. Yeah, yes. You are from Chikmagalur, Sundari. Yeah, then so you will definitely listen. Input tax credit. Sundari, how far you stay? Chikmagalur is a big place. How big this classroom size? Classroom. See, the local slang when you are converting into English, this you will see in school children you see. And in Makkah, your face. The maja is only different. Your face. Like, banbidi. Come. They'll use that slang. I mean, slang will be same, but you should understand that. Come on, your grandmother. Yeah. What happened? You want him to come with you? So for you, vibration is happening. What is happening to you? Input tax credit. Input tax credit. Ranjini says they both are Tom and Jerry in class. Who both? Composite supply or mixed supply? Input tax credit means what, sir? Input tax credit means what? Input tax credit means credit of input tax. Go away. Input tax credit means Credit of, this is the only definition I know in GST law. That was you are telling wrong. Input tax credit means credit of input. Wow. Input tax means what, sir? Input tax means Venkat. Input tax means, hey, for some jokes, Venkat, you should not laugh. After 20, you take videos. Okay, after 25th of January, you will watch again. Okay. Input tax means tax paid on. Sundari, your input tax credit means credit of input tax. Now, what is input tax? If you take the credit, the benefit of input tax, then it is said that you have taken input tax credit. But what do you mean by input tax, sir? Input tax means tax paid by you on your inward supplies. Inward supply means purchases. Whatever tax you are paying on your purchases is your input tax, and it includes the taxes paid under reverse charge and the taxes paid on import of goods under customs law. Okay, but it shall not include taxes paid under section 10. Yeah, composite taxes, because they are not supposed to charge only. Now, your purchases or inward supplies are divided into two categories under GST law: goods and services. The goods which are there can be further divided into capital goods and normal goods, and services is divided into input services. Section 16 talks about eligibility. Who is eligible to take input tax? Section 16 subsection 1 says every registered person is eligible to take input tax rate on goods or services or both which is used by him or intended to be used by him in the course or furtherance of business. Section 16 subsection 2 talks about conditions. So what are the conditions which I have to fulfill to take input tax credit, sir? The conditions which you have to fulfill for taking input tax credit is, first, he should be in possession of tax invoice, debit note or any other tax paying document. Meaning, he means what, sir? The registered person who wants to take input tax credit, he should have possession of tax invoice, debit note or any other type of tax paying document. He should have actually received the goods or services or both. That person should have actually received the goods or services or both. If you don't actually receive the goods and services, you cannot take input tax credit. However, there is an exception, bill to ship to cases. Meaning, if you are asking someone to deliver the sari to some other place, and on your instruction, if that person is delivering the sari to some other place, then that is covered over here. Meaning what, sir? Except is bill to ship to cases. So normally you should actually receive the goods or services except in bill to ship to cases. If you ask someone else to deliver the sari, if you ask your supplier to deliver the sari to a recipient, then though the goods are received by the recipient, you can take input tax credit. Then the supplier should have paid the taxes. If you want to take input tax credit, supplier should have paid the taxes, and the registered person should have filed the returns. So if I want to take input tax credit, then I should have filed my returns, because that is how I will tell government that I have purchases. Then a registered person can take input tax credit if the details of supply are made to him are furnished by the supplier in his GSTR 1 and the same is communicated in GSTR 2B. Now, whatever purchases you are making, the purchase related details should be communicated to you. Now, there are three provisos which says, provided that if the goods are received in lots or installment, ITC can be taken upon receipt of last lot. Provided further that if you don't make the payment to the supplier within 180 days, then whatever ITC you have taken, that ITC should be reversed along with interest. Interest should be paid at 18% per annum from the date of taking the credit till the date of reversal of credit. And once you make the payment, you can take the input tax credit again. Now, this 180 days condition is not applicable for inward supply liable for reverse charge, for deemed supply, meaning supply without consideration, and for expenses incurred by the recipient which the supplier had to pay. Section 16 subsection 3 talks about ITC in case of capital goods. Where any registered person is claiming depreciation on the tax amount, tax component of capital goods, he cannot take input tax credit on such capital goods. See, normally when you purchase a capital goods, on that GST also will be levied. So you have an option either to capitalize the base amount or amount with GST. So if you are capitalizing the amount with GST, you cannot take input tax rate. If you are capitalizing the base amount, you can take input tax rate.
Why, sir? Because if you capitalize amount with GST, you are going to claim depreciation on GST also. Lawmaker says, I cannot give you depreciation as well as input tax rate. Then section 16, subsection 4, last date to take input tax rate. What is the last date within which ITC should be taken? 30th November of next financial year, that is this month end, or date of filing annual return for that financial year, whichever is earlier. Now, rule number 36 talks about other tax paying document based on which you can take input tax rate. Meaning, I can take input tax rate based on tax invoice issued under section 31 or based on RCM invoice issued under section 31(3) or based on bill of entry in case of import of goods based on bill of entry, and based on debit note issued under section 34 or input service distributor ka invoice. Now, there are some information which are required to be present compulsorily on the document based on which you are taking input tax rate. What are those information, sir? Name of the supplier and name of the recipient, GST number of the supplier and GST number of the recipient, description of goods and services, details of place of supply, and total value of goods and services. This information should mandatorily be there. Section 16 subsection 6 is a newly added section which says, if your registration has been cancelled and subsequently it is revoked, then you can take input tax rate for whatever unavailed ITC is there during that suspension period. That ITC can be taken by you within the time limit of 16/4, which is 30th November of or date of filing annual return, or within 30 days from the date of revocation orders, whichever is later. Section 17 talks about apportionment of input tax rate. Apportionment means division of input tax rate. So, where any goods or services or both are used partly for making, partly used for business purpose and partly for any purpose other than business, then ITC shall be restricted to so much of input tax as attributable to business purpose. Where any goods or services are both are partly used by you for making taxable supplies including zero rated supplies and partly for making exempt supplies, ITC shall be restricted to so much of input tax which is attributable to tax. Basically, what is happening over here is ITC, if you are using something for two reasons, taxable as well as exempt, personal as well as business, you can take only for business purpose and for taxable supplies. For example, I have this iPad. On this, I have paid GST of 18,000 rupees. 80% of the time I am using for my business, 20% of the time I am using for my personal purpose. Now, total GST paid is 18,000. I can take only 80% of that, which I have used for business purpose. How will they come to know? No one will come to know anything. Correct? You have to tell them that you are a goob. Otherwise, they will not come to know. Next. Section 17 subsection 2, where any goods or services are both are used partly for making taxable supplies. This is done. 17.3. See, normally exempt supply means supplies which are wholly exempt, supplies which are nil rated. It includes non-taxable supply. Now, this exempt supply which is there, that shall also include the following things. It shall include what, sir? Supply liable for reverse charge, sale of land, sale of building subject to para 5B of Schedule 2, and transaction in secondaries. 17.5 is most important section in this chapter. 17.5 talks about block credit, meaning items on which input tax credit cannot be taken by you. Items on which input tax credit cannot be taken by you. What are those items, sir? A motor vehicle which is used for transportation of person having seating capacity not more than 30. So, if you have a motor vehicle which is used for transportation of person and if the seating capacity of that motor vehicle is not more than 13, then what will happen, sir? Motor vehicle used for transportation of person having seating capacity not more than 30. You cannot take input tax rate. See, please note, motor vehicle can be of two types. Motor vehicle can be used for transport of persons and transportation of goods. If it is used for transportation of goods, ITC is always allowed. But if it is used for transportation of persons, then I will see the seating capacity. If the seating capacity is more than 13, ITC is allowed. Seating capacity is less than or equal to 13, ITC is not allowed. Normally it is not allowed. However, even if the seating capacity is less than 13, ITC is allowed in few cases when you are further supplying that motor vehicle, or you are in the business of giving training in motor vehicle, or it is a case of transportation of person, meaning that motor vehicle is used by you for transporting people. Then ITC cannot be taken by you on vessels and aircraft. ITC cannot be taken by you on vessel and aircraft. Now, ITC cannot be availed on vessels and aircraft. However, if the vessel and aircraft is used for further supply, I am a dealer of vessels and aircraft, or I am giving training in vessel and aircraft, or I am involved in business of transportation of people or transportation of goods, then I can take input tax rate. See, normally you cannot take input tax rate on motor vehicle, vessels and aircraft at the time of purchase. Now, whatever service cost, repairs cost and insurance cost you have incurred for this motor vehicle, can you take input tax rate on this? Lawmaker says no. You cannot take input tax rate unless ITC is allowed at the time of purchase of that motor vehicle, vessels and aircraft. So when you are purchasing it, if ITC is allowed, you can take input tax rate for service cost also. Or you are a manufacturer of motor vehicle or general insurance company. Now, next point is what, sir? Foods and beverages. Can you take input tax credits on foods and beverages? Lawmaker says no. You are going to a restaurant having food. Can you take input tax credit? No. Though it is business purpose, no. Outdoor catering. Now, business annual general meeting is there. I am taking services from some restaurant for supplying food to me. You cannot take input tax rate. For beauty treatment, health services, plastic surgery, cosmetic surgery, ITC cannot be taken by you. For leasing, renting, hiring of motor vehicle, vessels and aircraft, ITC cannot be taken by you. If you are taking membership of any club, health center or fitness center, can you take input tax rate? Lawmaker says no. If you are taking membership of any club, health center, fitness center, ITC cannot be taken by you. Or if you are giving travel benefits to your employees, travel benefits are extended by you to your employees, ITC cannot be taken. Now, for all these cases, you can take input tax rate when if it is a statutory obligation for you to provide the same to your employee. I don't want to give food to my employees. I don't want to take their health insurance. I don't want to take their life insurance, but there is a law which is telling me to do. I can take ITC. Works contract services or goods or services used for construction of immovable property, ITC cannot be taken by me. Goods or services or both on which tax is paid under section 10, ITC cannot be taken. Goods or services which are used for personal purpose, ITC cannot be taken. Goods or services or both which are received by a non-resident taxable person. A non-resident taxable person, he'll come to India. When he's in India, he will take different goods and services. Whatever goods and services he's taking when he's in India, on those goods and services, can he take input tax rate? Lawmaker says no. Or goods which are lost, stolen, destroyed, written off, or disposed of by way of gift and free samples. Or a company cannot take input tax rate for whatever corporate social responsibility activities it is doing. And you cannot take input tax rate if you have paid the taxes because of fraud. Section 18. ITC in special circumstances. There are some circumstances which are little special. For that special circumstances, can you take input tax rate? Lawmaker says, I will tell you. Now, what are the special circumstances? Let us see. I am a person who started my business without taking any registration. Okay. Now, my turnover crossed 20 lakh rupees. Because my turnover crossed 20 lakh rupees, I am now liable for registration. Now, because I am liable for registration, I applied for registration. I have applied for registration, that registration was granted to me. Now, if you are a person who is liable for registration, you are a taxable person, therefore you should pay the taxes. Now, there are sarees available with me on which I have not taken input tax rate, but still I will have to pay the taxes on these items. Lawmaker says you can take input tax rate on these sarees if the registration is granted to you within. If once you are liable, you have applied within 30 days and the registration is granted to you, you can take input tax rate. Sir, what do you mean by this? Where a person, section 18 subsection 1 clause A says, where a person is liable for registration and he has applied for registration within 30 days of becoming liable and such registration is granted to him, then he can take input tax rate on inputs held in stock 1 day prior to the date of liable for registration. Now, section 18 subsection 1 clause B. I am a person who has applied for voluntary registration. So, lawmaker says, if you are a person who has applied for voluntary registration and if that registration is granted to you, then you can take input tax rate on whatever inputs are there 1 day prior to the date of grant of registration. So, I started business, I applied for registration and it was granted to me on 10th of June. Whatever stock is available 1 day before that, I can take ITC on that. However, if I am a composition dealer who is converting into regular dealer, I can take input tax credit not only on inputs but also on capital goods. So where a registered person under composition scheme converts into a regular scheme, he shall be entitled to take input tax credit on inputs held in stock and capital goods held 1 day prior to the change. Now ITC on inputs shall be based on the stock whatever is there with you, and ITC on capital goods, you take the tax amount at the time of purchase, reduce it by 5% per quarter or part thereof from the date of purchase to the date of change. Then similarly, there is one more section called as 18(1)(d). If a registered person's exempt supply is becoming taxable supply, if you are making a supply and if the supply which is made by you is an exempt supply, now if it becomes taxable supply, then you will be entitled to take input tax credit on inputs as well as capital goods. Inputs which are, you can take ITC based on the inputs held in stock with you, and on capital goods, whatever is used exclusively for exempt supply, you can take ITC by reducing 5% per quarter or part thereof from the date of purchase till the date of change. Now 18(4) talks about ulta. Ulta what's are 18(1)(c) and 18(1)(b). Meaning if a composition dealer becomes regular dealer, we saw that. But what if ulta happens? Regular dealer becomes composition dealer, you should reverse the input tax rate. If a taxable supplies becomes exempt supplies, you should reverse input tax rate. 18(2) talks about what, sir? 18(2), no input tax rate shall be allowed under section 18(1) for invoices older than 1 year. So 18(1), whatever ITC you are taking, on those invoices should not be held for more. I mean, if the invoice, the goods which are there with you, if for those goods invoice is given 1 year ago, you cannot take input tax rate on them. 18(3), whenever there is a change in constitution of business. So in case there is a change in constitution of business by way of sale, merger, demerger, amalgamation, etc., with a condition that liabilities also will be transferred, ITC on that unutilized input tax rate can be availed by the new company. 18(4), ulta of 18(1)(c) and 18(1)(d). 18(5) is rules for 18(1) and 18(4). What is important is 18(6). Now, if you sell a capital goods, see, my normal business is to sell sarees, but if I sell a computer, it is sale of capital goods. If I sell the car which I am using for my business, on which I have taken input tax rate, it is a sale of capital goods. So if I sell a capital goods or plant and machinery, I will have to pay the taxes. In case of sale of capital goods or plant and machinery on which input tax rate was availed by the registered person, the tax to be paid or the ITC which I have to reverse shall be the tax calculated on transaction value of capital goods or plant and machinery. Meaning whatever is the sale price of the plant and machinery into whatever is the tax rate for that. Or calculate the tax by reducing input tax rate by 5% per quarter or part thereof from the date of purchase till the date of sale. Now whatever amount you are getting, either reduce ITC by 5% or tax on transaction value, whichever is higher you take, on that whichever is higher, that is the tax which you have to pay. Section 19 talks about job worker. Section 19 subsection 1. See, 19 talks about job worker. 19(1), 2, 3 talks about inputs. And 19(4), 5, 6 talks about capital goods. So what they are telling is, I hope you know what is job worker. Job worker means what, sir? You are asking someone else to give. For example, I am a person who is manufacturing of furniture. I am giving my furniture to someone to polish those furniture. So in that case, I am the manufacturer of furniture. I am giving my furniture to someone else for polishing. That person is just doing the polishing work. So the person who is doing that polishing work is called as job worker. I am the principal. So on whatever goods are sent to the job worker, can I take input tax rate? Lawmaker says yes. On whatever goods are sent to the job worker, principal can take input tax rate. Now, section 9 subsection 2. Sometimes what happens is, I may, instead of sending the goods directly, I may ask my supplier to send the goods to the job worker. In such cases, lawmaker says, in such cases also, see, if principal is sending the goods to the job worker, ITC can be taken by principal. If the principal is asking the supplier to directly send the goods to the job worker without the goods coming to me, then also on those goods I can take input tax rate. Now, whatever inputs I have sent to the job worker, whatever inputs I have sent to the job work, they should come back to me within a period of 1 year. If they don't come back to me within a period of 1 year, then it will be deemed that I have made the supply. So just like that, on capital goods also, which I am sending to my job worker, I can take input tax rate. If the capital goods are directly sent to the job worker, on that also I can take input tax rate. This capital goods should come back to me within a period of 3 years. Section 20 and 21 talks about input service distributor. Now, input service distributor means what, sir? A person who is taking a registration so that he can distribute the credit available with him. Now, if you are an input service distributor, you can distribute the credit, whatever is available with you, to your other units which are making taxable supplies. Now, whom can you distribute? You can distribute it to that unit for which that credit is related to. Meaning, for example, Reliance Digital has an office in Mumbai which does not make any sales, but it is only a registered office. Okay, it is taking services for its different branches throughout the country. So, if it is taking services and that services is related to only to one branch, the entire ITC amount should be transferred to that one branch. If that is taking some services and if the ITC is related to more than one branch, then the entire ITC should be given to more than one branch. And if it is taking services and if it is related to everyone, the ITC should be distributed to everyone. Now the question is, how should I distribute? You should distribute based on the turnover of those establishments. So if it is related to one person, no problem, directly distribute. If it is related to more than one person, then see the turnover of those person and proportionately distribute. Now if you distribute any excess credit, you should reverse that along with interest. 18% per annum is the interest. Now section 49 subsection 5 talks about manner of utilization of input tax rate. How can I utilize input tax rate? Input tax rate utilization. So if I have a credit of IGST, I can use it for making the payment of IGST first, and then whatever is left over, I can use it for CGST or SGST in any proportion. Once the IGST credit is over, I can go to CGST. CGST credit can be used for CGST first and then IGST, but never for SGST. SGST credit can be used for SGST first and then IGST, but never for CGST. Now please note, SGST can be used for IGST only when CGST is not there to use for IGST. Okay. Something is there, sir. Tell me the answer for. This is a classroom question. We have solved this question. Now, following all the details, I'll read the details first. Rate of GST is what, sir? 18%, 9%, 9%, CGST, SGST 18%. All the figures are excluding taxes. All the conditions for taking input tax rate is satisfied. Tell me what is the minimum GST which you have to pay. Now, this is the question. So, first line also I'll read. Messrs VMA is a registered taxable person under regular scheme, provides you the following information in respect of supplies made by it. So they have given the information of interstate supply, intrastate supply, supply of online educational journal to private coaching center. So these are sales related information. Then inward supply related information. Inward supply related informations are there. But before that, you tell me what is the tax on. See, I hope you know ITC questions are required to be done in 3 steps. First, calculation of tax on, or calculation of output tax liability, calculation of total input tax credit, and then finally net GST payable. So first, with these 3 information, tell me what is my output tax liability. With these 3 information, tell me what is my output tax liability. With these 3 information, tell me what is my output tax liability. Tell me what is my output tax liability with this information.
1,94,000.
18% is the GST rate. So this will be IGST of 2 lakh into 18% is how much? Intrastate supply, meaning within the state, of 1000 packets of detergent at 400 rupees along with plastic bucket of 100 rupees being a mixed supply. GST rate for detergent is 18 and 28. So higher rate 10,000 into 500 rupees. No, 400 rupees. They have told that along with a plastic basket of an hour, meaning it is already included, into higher state. Within the states, therefore, CGST, SGST will be 14%. Huh? 56,000 CGST, 56,000 SGST. Supply of online education journal to a private coaching center. Supply of services within the states, 1 lakh into 9%, which is 9,000 and 9,000. So if you ask me what is my output tax liability, what is my output tax liability? IGST, CGST and SG. IGST is how much, sir? 56 plus 9 is 65 or 63? 65,000. Correct, this is my output tax liability. Now tell me what is my input tax rate, including this information. What is my input tax rate, including that information? What have they given? They have given, this is the information of inward supply. Okay, this is not tax amount. On this, you should apply 9% as tax or 18%. What is the total input tax rate, including purchases? You should, including opening input tax rate. What is the total ITC? You should tell me. Hey, how much time you are taking, Goobays? So out of 1,40,000, 40,000 invoices are missing. Hey, please note, marathon is not for me to teach you everything. It is for you to revise whether you have studied or not. Interstate supply 18%. How much, sir? 18,000 rupees. If 40,000 invoice is missing, I cannot take input tax rate for that. Repair of buses with seating capacity of 20 for transportation of employees. Yes, I can take input tax rate 1 lakh into. Why, sir? I can take input tax rate for 20,000 people are there. 20 people can sit. 9,000 rupees. So now my total credit is how much, sir? IGST, CGST and SGST. Opening credit is 8,000, 10,000 and 10,000. Credit on purchases is 18,000, 9,000 and 9,000 rupees. So total ITC available is 98, 19,000. Now tell me what is the tax which I have to pay. My output tax liability is this. My output tax liability, I'll type it, I'll just paste it over here. My output tax liability is this. And my input tax credit is this. Tell me what is the net GST payable. ₹30,000. What I have to pay 30,000? It's GST. Okay. Now, my IGST is 98,000, which I'll use for IGST 36,000. So, 98,000 minus 36,000 is how much? 62,000. That will be divided equally between 31,000, 31,000. So, I'll give 31 to this, 31 to this, and 19, 19. So, where is my calculator? So, 31 plus 19 is how much? 50. So 65 minus 50 will be 15,000. 15,000 is the answer. So first you took tax on outward supply. No, this is total input tax rate they have computed first. Then they have taken what's tax on outward supply. Then utilization. They have done little ulta ulta. Ninna nodalendum. What is this point telling? B. Private Limited purchased a machinery worth 10 lakh rupees, excluding GST on this date, on which they have paid GST at 18%, and ITC was availed. On 5/3/25, they sold the machinery for 8 lakh rupees. GST rate is 18%. What is the course of action B Limited has to follow? This is a question on 18.6. 18.6, do you know? My normal business is to sell sari. If I sell a computer, I just now told correct now. 18.6. I told you it is an important topic for our exam point of view. Now, in such cases, what I have to do, sir? Calculate tax on transaction value. Sale price is 8 lakh into tax amount is 18%. How much is the tax I have to pay? 1,44,000, or whatever ITC I would have taken. 10 lakhs into 18% is 1,80,000 minus, reduce it by 5% per quarter or part thereof. Reduce it by 5% per quarter. For how many quarters will you reduce? You purchased in the month of July. So July, August, September, October, November, December. So 2024, it is 2 quarters. And April, May, June. So 3 quarters are there in total. So reduce 15% of this. 1,80,000 minus 15%. So whichever is higher is the tax which I have to pay. 1,50,000. 53,000 rupees. Tip, 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 tip. Tip, 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 tip. Auditing services is there, healthcare services is there, routine medical car. So what are they telling? Compute input tax credit available to Motor Limited, a manufacturer of cars. Accounting and auditing services, this is tax amount. Can they take input tax rate for accounting and auditing services? Can I take input tax rate for accounting and auditing services? Yes, I can take input tax rate. Health insurance for employees, service is not provided under government obligation. Can I take input tax rate? No, sir. Why no? Not obligation. Routine maintenance of cars, manufactured by it. Can I take input tax credit for maintenance of cars?
Same line of thing.
Yes. Why, sir? Because I'm a manufacturer of car. Then repairs services for office building. Cost of repair is in charge in profit and loss account. Repair for office building. Office building I am repairing. Can I take input tax credit? I cannot take input tax credit for works, contract, services or goods or services used for construction of an immobile property other than plant and machinery. Anyways, we'll see this again. Hotel accommodation and conveyance facility for employee vacation. Can I take input tax rate? Hotel accommodation, whatever go by you are doing. Testing services for car engines. Can I take input tax rate? Yes, because it is my business. So whatever is the total. Now we can take service, we can take ITC on repairs of building. Construction is not allowed, repairs is allowed. Okay. Yeah, are you understanding? Repairs is allowed, construction is not allowed. Now they have given output tax liability. They have given input tax rate. Tell me what is the GST which you have to pay. Fast. Net GST payable. Fast, fast, fast. You have only 1 minute.
GST, 2000 GST.
See, my output tax liability is output GST is IGST, CGST, and SGST. 24,000.
15,000. GST is 2000 and GST is 15,000.
2,000 and 15,000. I have ITC credit. IGST credit, I have how much, sir? 37,000. I will use 37,000 is there. I will use 24,000. What is left over? 13,000 is left over. Now, whom will I give? Will I give it to SGST or IGST? SGST I'll give or IGST I'll give. Now, if you see, first, if you remember, in this type of question I have told you, see what the credit which they have, is it same, sir? No. So, if the credit which they have is not same, make them same first. So, if I want to make them same, so my 13,000, 1,000 I have to give it to SGST, then divide equally. But please note, CGST wants 2,000, SGST wants 15,000. Now I can give everything to CGST or everything to SGST. Correct? No. I can give complete 13,000 over here and subtract his own credit and take only my GST payable will be how much? 1,000, and here it will be 2,000. Or what can I do? So by this my net GST is 3,000 rupees. Net GST will always be 3,000. Or what can I do? I can give him complete 2,000. Balance 11,000 I will give him. And he has his own credit of 1,000 rupees. So now also what will happen? 0, 0 and 3,000. So net GST payable will be 3,000. Now we'll see MCQs. Now, I mean, the other topic which is there, I mean, I'll take it tomorrow. You don't have to come. You can, I mean, watch the recording later. Only because hardly it will take 1.5 hours. Okay. No, because I am checking whether I should come here and take, because I will have EA class. So I'll come for EA. So I don't know when will I take. First, I'll take this or that I'll take first. And I don't know whether I... No, but I would recommend you to, I mean, yeah, because only for 1 hour if you are coming, it does not matter. Now tell me, when did GST come into force? 1st of July? Okay, answer is 1st of July 2017. Who is empowered to make law in respect of list 1? List 1 is union list, central government. Person who is liable to be registered, we don't know. I mean, registration chapter we'll see in next class. By the way, if you know, if you are liable for registration, within how many days you should apply for registration?
30 days.
Within 30 days. So you know the answer. So within 30 days of becoming liable. Which of the following activities or transactions shall be treated as neither supply of goods nor supply of services? What is not supply? Sale of land and building, lease, rent, only sale of land and building. For which of the following goods the manufacturer is not allowed to opt for composition scheme? Ice cream, pan masala, tobacco, topical and manufactured tobacco. This is tobacco, gube, tobacco. All of this. Under which article of Constitution GST Council was constituted? Which article? Yeah, you keep discussing. GST Council was formulated on which council? This thing, sir? 279A. And GST came into existence because of 246A. Which of the following is taxable event for importation of goods? That is, under that chapter. But I'll tell the answer. Importation of goods. What is the taxable event, sir? For importation of goods, the goods should cost customs barrier, present bill of entry. The goods should cross the customs barrier. Yeah, they should. Once they enter territorial waters, taxable event has started, but it will be completed only when they cross. Anyways, we'll see it. Okay. For the purpose of computing IGST on imported goods, one of the following should not be included. I don't include for IGST. What did I don't include? IGST on imported goods. GST compensation cess. Because GST is also GST only. Where transportation charges is not given under customs law, how much will I take transportation charges? 20%. How much will I take, sir? 20%. And this is A, this is customs barrier. Okay, anyways. Yeah, I know. Freight charges is nothing but transportation charges. 20%. And insurance charges, if it is not given, 1.125%. Pre-GST regime, excise duty was levied by whom? Central or state? And VAT was levied by whom, sir? Excise duty was levied by central government and VAT was levied by state government. You should see the item merged with GST. Smart Bazaar. A store located and registered backside and upper side. Backside is hotel. Right? What is the name of lodge? There is no need of names. Some room is sufficient. Smart Bazaar, a store located registered in Gujarat, has come out with a big discount offer during Durga Puja. In order to attract more customers, it is giving 5 packets of biscuits, tax for 12% on pastry, ... What is the highest tax rate you see? Ding, ding, ding. 28%. Okay. So it is a mixed supply and it will be taxable at highest rate. Okay, some time pass. Why to read? Hey, but you read in exam. I know. It is time pass. Which of the following can be issued by government to exempt goods or services on which tax is leviable in exceptional cases? In exceptional cases, exemption, to give exemption, they have either notification or special order. For exceptional cases, it is special order. For general cases, it is notification. Time of supply of goods where supplier is liable to pay tax under forward charges, date of issue of invoice, last day to issue invoice to A or B, whichever is earlier. Levy of indirect taxes on goods and services leads to inflation, deflation, reflection. Inflation, no, it will increase the cost of product. RCB will win, sir. WINI for inflationary nature. A ship carries goods KLMN from Singapore to Dubai via Chennai. L and M are moved at Chennai in another vessel. L is meant for Kochi and M is gone to Dubai. What is transship? Transship means if you are shifting goods from one vehicle to another, who is transship? A transit means you are shifting one vehicle to another vehicle. Now the ship transit is in same vehicle it is going. So here goods which is going to Cochin, L and M are moved at Chennai to another vehicle. So who are transshipped because they are giving to another vehicle, L and M. If they ask you what is transit goods, whatever is going to Dubai, M. Basic custom duty on imported goods is levied because of which act, sir? As per Customs Act, first schedule, second schedule, what schedule, sir? Customs Act. See, in first schedule, they give the custom duty rate for import goods, and second schedule, they give the custom duty rate for export goods. That is also important. And insurance, 1.125%. Safeguarding duty can be levied for 4 years and can be extended up to 10 years. This is good. I think question paper is same.
They have taken first schedule of custom.
First schedule of custom duty. Import duty is given on first schedule. What they have given? Now, imported goods. Okay, custom duty on imported goods. On imported goods, the custom duty will be given in first schedule. Okay, they have told custom duty on imported is first schedule, and export goods is what's second schedule. Okay, so you should take first. Now, this question is same, but they have given same question. Yeah, this is same. This is mixed supply highest rate, which is Mr. Tushar, an air travel agent, how will he discharge liability? 5% on domestic and international fares, 5% on domestic and 10% on international. Section rule number 32. What is the time of supply of goods where liable to pay under forward charge? Again, same question, A or B, whichever is. If the goods are received in installment, ITC can be taken upon receipt of last installment. Within how many days you should apply for registration? Within 30 days of becoming liable. First return should be filed. First return should be filed from the date when you are liable for registration till the date of grant on registration. If you took an example wherein I was liable when my turnover crossed 20 lakhs, I applied for registration and registration was granted to me. So first return is recorded and filed from the date when you become liable till the date of last month from the date when you become liable and till the date of grant of registration. Exclusive economic zone is up to 200 nautical miles and safeguarding duty is 4 plus 10.
200 is provision.
Cascading effect means tax on goods. A tax on tax. Services by way of dash to single residential unit is exempted. Services by way of pure labor contracts. Value of supply of goods shall be transaction value, MRP, transaction value. Date of receipt of payment means book entry date or bank credited, whichever is earlier. To claim ITC on capital goods, it is mandated to capitalize the capital goods in the books of accounts. No, if you want to claim, no, you should not capitalize that. When can voluntary registration be cancelled? If a person does not start business within 6 months, business is discontinued, non-filing, all the above. All the liabilities of a person will go in electronic liability register. Exclusive economic zone 200 nautical miles. Safeguarding duty. All 4 attempts they have asked same question. Okay. Exam also will ask same question. Now what shall we do? We'll go 25 attempt. We'll see that paper. Huh? Yeah, you airdrops. We'll see MCQ questions. Yeah, nothing is there in that MCQ. What is MCQ? The easiest in your exam. I'll write your exam only because I want to score full marks in MCQ. No intention as that's what MCQ all subject 30 on 30 I should score. That is why teacher get irritated. Teacher, you understand now why. Now, okay. Assessment year 25-26 as per the Income Tax Act, liability to deduct TDS under section 193 in case of interest on security arises at the time of payment or credit, whichever is earlier. So answer is option number C. Then for assessment year 25-26, 80 JJAA of Income Tax Act in respect of employment of new workers shall be allowed for any assessees to whom section 44AB is applicable. Meaning your books of account should be audited. P Limited is a domestic company bought back 10,000 equity shares of rupees 100 each on this date. Original issue price is 110 and buyback price is 300. So what is the difference?
190 into 10.
190. What is the tax treatment for this? Who has to pay the taxes? Buyback of shares, taxable in the hands of recipient as deemed dividend. It is treated as deemed dividend and taxable in the hands of shareholder. Nakul won 6,000 lottery prize. What is the TDS amount? 6 3s are 18.
They have given him, sir.
Eh? Hint they have given.
They have given him in answer.
They have given answer as nil. Oh, yeah, nil. I'll tell why. If the amount is more than 10,000, then only TDS will be applicable. If the amount is more than 10,000, then only TDS will be applicable. Or else it is 30%. Who from the following will be considered as a specified employee? Option A part-time director who employer director who has resigned. Yesterday also we saw this question. From the year 24-25 standard deduction for default regime and old regime, can I say pension is 25 and 15. If for default it is 25, for old it is 15. Which of the following is not a supply? Importation of services free of cost from father residing in USA for business purpose. No, it is a supply. Machinery disposed of free of cost on which input tax rate is taken a supply. Goods supplied free of cost by ex and sons to his agents. Supply. Expensive watch of 50,000 given to 50,000, not more than 50,000. Therefore, last one. Because it is not more than 50,000. As per GST law, if goods are received in installment, then ITC is last installment. If you see MCQ questions which they have asked is same whatever they have asked in MTP. Two MTPs merged together, they have asked those questions. So MTP is important. Almost around 20 marks question will come from MTP, they say. As per provisions of GST law, what will be the place of supply when food is taken on board at Mumbai for aircraft department, whatever it is. Where is the goods taken on board? Mumbai, yeah. So Mumbai. Ex-importer imported certain goods from China, set of multiple articles, product G 5%, 8% custom duty on product 1. How will this set of products be taxable under import when no separate valuation is available? If no separate valuation is available, we will take highest rate 20%. Why will you take? So product, okay, 3 products are there. 1, 2, and 3. Normally it should be valued when no separate valuation is available. See, normally answer is individual method. When we don't have individual method, we take average method. So I'll take, if you don't have all those options available at all, take highest rate. Every registered person who is required to furnish return under section 39(1) of CGST Act and whose registration has been cancelled should file final return. See, once your registration is cancelled, you have to file a return called as final return. That final return is required to be filed within 3 months from the date of cancellation or cancellation order, whichever is earlier. Composition dealer wants to withdraw from composition scheme. No. A composition dealer wants to withdraw voluntarily from composition scheme. He will have to file form GST CMP 04. 408 is for paying the taxes. Tushar is an air travel agent, 5%, 10%. Last date for declaring details of credit note is what? 30th November of next financial year, or date of filing annual return, whichever is earlier. Credit note is issued on this date. The credit note you are supposed to do, last date to issue is 30th November of 2025. Valuation and customs duty. Similar goods means what, sir? Which are, although not alike in all respect, have like characters. Option number A. Wait. Option number D. Which are produced in same country and are by the same person. Okay. I mean, we'll wait after exams. If you all guys are here, we'll try to meet. I'll be here only. Next up. So I'm coming here only. Day after tomorrow, I'll come over here. Group I don't take anything. Finals we can learn. Okay, anyways. Thank you, online students. Thank you very much for giving your time. Okay, thank you for taking time from your preparations. And don't worry, you will all clear your examination. I have no doubt, offline as well as online students, I am definitely sure that you are all going to clear your examination. Only thing required is that you should have studied something, little bit. Even if you have covered 50% of your syllabus, you will clear your examination. That guarantee is there. I am not talking about my paper, okay? I am talking about all the paper together. If you have cleared 50% of everything, you will clear your examination. So don't worry. Meaning you don't have to take tension. Ayo, this is not done in life. No problem. Okay. You will still clear your examination. Just study well. Be motivated when you are studying. When you are studying, you may feel. When you are studying, you may feel that, ayo, so much is there. I have not studied this much. No problem. Very normal. Very normal. It is very normal. You will clear your examination. Trust me. You'll all clear your examination. And we have done some exercises. No. But close your eyes. Yeah, you have seen your results. So enjoy. Thank you for the confidence, sir. Hey, nothing. Please don't. Look at yourself in the mirror and say that you are going to clear your examination. Then you will clear definitely.
Sir, in one time we are one son is writing paper.
If you want to rank, and then you should write both the groups together. Okay, so welcome back. Let us continue our discussion. So next topic for discussion is what, sir? Payment of tax. Of course, payment of tax is something which is required to be read with input tax credit chapter, because input tax will tell you how to take, whether you can take input tax credit or not. Now it is a payment of tax which talks about how the ITC should be adjusted. See, normally a person will have output tax liability, correct? You will have to pay tax on your outward supply. The tax which you have to pay on your outward supply, that can be paid by utilization of input tax credit, and whatever is remaining, that can be paid by cash. So repeat. Whatever tax you are liable to pay on your outward supply, that can be paid by you by utilization of input tax credit. Whatever input tax credit you have, you utilize that and pay the taxes. Or if you don't have input tax credit, adequate input tax credit, the balance amount which is there, you pay in cash. Now this chapter talks about three ledgers. We have electronic cash ledger, electronic liability ledger, and electronic credit ledger and electronic liability register. Cash ledger is what, sir? Cash ledger is a ledger which will record all the cash transactions. So if you have deposited any money, if you're using any money, then that will go get recorded where? So that will go get recorded in your electronic cash ledger. Then what is electronic credit ledger? Whatever input tax credit is claimed by an assessee, whatever input tax credit is claimed by an assessee will go get recorded in this electronic credit ledger. And then what is electronic liability register, sir? Now any type of liability which a registered person has, that liability can be because of any reason, whether it is a liability of any tax which you have to pay, any interest which you have to pay, a penalty you have to pay, late fees you have to pay, or any other sum which you are liable to pay under GST law. That liabilities will get recorded in your electronic liability register. So whatever liability a person has will get recorded in this electronic liability register. Now electronic cash ledger. So electronic cash ledger is maintained in a form called as form PMT 06, form GST PMT 06. Whatever, every deposit which you make, whatever amount you are depositing, whether it is a tax amount, interest amount, penalty amount, late fee, or any other sum which you are depositing in your GST account through net banking, IMPS, RTGS, NEFT, credit card, debit card, UPI, etc.,
deposit can be made only through online modes. So whatever amount you are going to deposit will go and sit in this electronic cash ledger. This deposit can be utilized for making, so if you're depositing the money in tax account, you can use it for making the payment of tax. If you're depositing the money in interest account, you can use it for making the payment of interest. So it can be utilized for making the payment of tax, interest, penalty, late fees. Now, how do I deposit the money in this ledger, sir? For depositing the money in your electronic cash ledger, you use a form or a challan called as payment challan called as form GST PMT 06. You use a payment challan called as what, sir? Form GST PMT 06. Okay, so this is the payment challan which is required to be used by you for depositing the money in electronic cash ledger. Then deposit in electronic cash ledger. Normally the deposit which you are supposed to do, the deposit can be done only through cash. Only through cash it is possible. Sorry, if you want to deposit any money in electronic cash ledger, then you can, that is possible only through online modes. Normally if you want to deposit any money in electronic cash ledger, how is it possible, sir? Only through online modes you can deposit the money. However, with a prior permission of the officer of the GST law, you can deposit physically over the counter. Is also possible. You can deposit cash, check, DD, etc. for a maximum of 10,000 rupees. You can deposit a maximum of 10,000 rupees over the counter physically through cash or check or DD, etc. But whatever deposit you are making, for all those deposits, the payment should be generated. The payment challan should always be generated online. What is the payment challan? GST PMT 06. Now, transfer of an amount. Now, please note the amount which is there in tax. Okay. The amount which is there in IGST tax cannot be used for payment of CGST tax. If the amount is there in cash ledger, wherever you are depositing the money, only for that reason it can be used. Okay, it can be used only for that reason. You cannot make intra-head utilization from one minor head to another minor head, or inter-head utilization from one major head to another major heads. So minor heads are what, sir? Tax, interest, penalty are minor heads. Major heads are what, sir? IGST, CGST, SGST, they are all major heads. Okay, so you cannot use it, but you can transfer the money from one head to another head using a challan called as form GST, using a form called as form GST PMT 09. And this can be transferred from one registered person to another registered person under same PAN. So transfer of amount in electronic cash ledger of a registered person to electronic cash ledger of another registered person under same PAN is possible using a challan called as form, using a form called as form GST PMT 09. Any excess balance in electronic cash ledger should be claimed as refund under section 54. Now, we have electronic credit ledger. Electronic credit ledger is maintained in a form called as form GST PMT 02. Whatever input tax credit you are availing, whatever input tax credit you are claiming, it will availed in your GSTR 3B. How can I claim input tax credit? Input tax credit is claimed by in your GSTR 3B. So whatever input tax credit you are claiming in your GSTR 3B, that input tax credit which is there, that will go and sit in this electronic cash ledger. Whatever input tax credit is there, sorry, electronic credit ledger, whatever is claimed by you. Okay, this credit can be utilized for making the payment of output tax liability. For what purpose can I use this credit, sir? Only for making the payment of your output tax liability. Now, what is the manner of utilization of this credit? How can I utilize this credit, sir? Now, we all know that IGST credit, if you have credit of IGST, you can use it for making the payment of IGST first. Once that IGST is paid, leftover IGST balance can be used for making the payment of CGST or SGST in any proportion, meaning you can give it fully to CGST, fully to SGST, or proportionately to equally to CGST, SGST, or 60%, 40%, whatever proportion you want, you can give this. Once your IGST credit is over, you will go to your CGST. Once your IGST credit is over, you will go to your CGST. Now the CGST credit can be used for making the payment of CGST first, and then it can be used for making the payment of IGST. Similarly, SGST credit which is there, first use it for SGST, then use it for IGST. CGST can never be used for making the payment of SGST, and SGST credit can never be used for making the payment of CGST. Similarly, SGST should be used for making the payment of IGST only when CGST amount is not there. Now, if you have any extra balance available, then you can of course ask it as refund. Then we have electronic liability register. Electronic liability register talks about what are the different liability a person can have. A registered person can have following tax liabilities. You can have liability of a tax, or you can have liability of any other dues. So you can have liability of tax dues, or you can have liability of any other dues. Now, if you have liability of tax dues, then the tax dues are required to be paid. It can be paid either through utilization of input tax credit, or it can be paid through cash. So if you have any tax due, how can you pay the tax due? Either by utilization of input tax credit or through cash. And if you have any other liability like interest, late fee, penalty, etc., you should compulsorily pay these amounts in cash. You don't have any other option at all. You should compulsorily pay this money in cash. Now, there are some liabilities. These liabilities are mandatorily required to be paid in cash. Meaning, if you are liable to pay these amounts, you should compulsorily pay in cash. You cannot take the benefit of input tax credit. What are those things? If you are liable to pay other dues like interest, penalty, late fee, or any other sum, if you are liable to pay this money, then you will have to pay it through what, sir? Cash only. Tax payable under section 10. If you are a composition dealer, you have to pay taxes, correct? Whatever taxes a composition dealer has to pay, that also is required to be paid in cash only. Or a TDS or TCS under section 51 and 52. If you are liable to pay TDS, TCS, or any payment of RCM liability. If you are liable to pay the tax under river charge, the tax is required to be paid in cash only. You cannot take the benefit of input tax credit. Now, what is the order of discharge of liability? So, if a person has a liability and if he has some money in his electronic cash ledger, how should he use the money available in his electronic cash ledger? Lawmaker says, first he is supposed to pay self-assessed tax and other dues related to previous tax period. Under GST law, you cannot file the current month return unless until you have filed your previous month return. So first you are supposed to pay self-assessed tax and other dues of previous tax period, and then self-assessed tax and other dues of current tax period, and then any other amount payable under this act or rules made thereunder, including the demand under 73 and 74. Meaning, first pay the liability of previous tax period, then pay the liability of current tax period. Meaning, file your returns first. Basically, they are telling file your returns first. First, file the returns for last month's now. Then after that, file the returns for this period. And then, if you have any other amount payable under GST law, you pay that money. You cannot use the amount which is there in GST account for paying the amount of pre-GST. I think there is some problem with camera. My lips are looking very pink, and this is also looking orange. Camera adjustment problem is there. I don't know what these Googles have. Let me check if I can. Anyways, Maja is there. You must be wondering, sir, lipstick you have put? No, I have not put lipstick. Maja is there. Anyways, okay, concentrate. Very nice. One second. Okay, anyways, ignore. Okay, order of discharge of liability. We just know so what is the order of discharge of liability. Now, what are the liability a person can have? A person can have liability because of the return which is filed by him. Amount, okay, electronic liability register of a person shall be debited by the amount payable towards tax, interest, late fee, or any other amount payable by the return furnished by him. So you are telling in your return, whatever return you are filing, in that return you are telling that this is the amount of tax, interest, penalty which I am liable to pay. The amount of tax, interest, penalty, late fee which is amount payable as per the officers, as determined by the officer. Officer will tell you this is the amount which you have to pay, or the amount of tax, interest, penalty as a result of section 50, meaning any interest which you are liable to pay because of this section 50, which is the next section which you are going to see, or any amount of interest which accrue time to time.
Now, important section is section 50. Now, under GST law, any type of late payment you are making, if you are liable to pay interest under GST law, please make sure this you remember. Under GST law, interest is always payable at 18% per annum. Whatever interest you are liable to pay, that interest always you will pay at what rates are at 18% per annum. Interest is always required to be paid at 18% per annum compulsorily. Okay. So now, if there is a delay in payment of tax, meaning I have made a delay in paying the tax. When will I make a delay in payment of tax? If I have filed my returns late, correct? If there is a delay in filing of returns, then of course, if I don't file my returns on time, I would have not paid the taxes also on time. So if there is a delay in filing of returns, then interest at 18% per annum is applicable to you. You have to pay interest at 18% per annum. And this interest is required to be paid from the date following the due date of payment till the date of actual payment of tax. Date following the due date means, so whenever you were liable to pay the taxes, next day. Whenever you were liable to pay the taxes next day, till the date when you are actually paying the taxes, till the date of payment of taxes. Now, interest is payable on what amount, sir? Interest is payable on net GST, which is payable in cash. So, you take your output tax liability. From that, subtract your total input tax credit, which you can take avail. So, that will give the difference amount. The difference amount, if it is payable, if there is any positive difference, if you have to pay anything, that on that amount, you pay the interest. Interest should be paid on the net GST liability payable in cash. Next, interest for undue or excess claim of input tax credit. Interest for undue or excess claim of input tax credit, meaning if you take extra input tax credit, then also you are liable to pay interest at 18% per annum. From the date of taking the excess input tax credit till the date of reversal of that extra input tax credit. Now, please note, there is one beautiful point over here. What is this point telling is, see, you are paying the tax late because of two reasons. There may be two reasons for you to pay the tax late. One, you have filed the return late. There is a belated return, meaning there is a delay in filing of return. If there is a delay in filing of return, that means you have filed the return late. Because you have filed the return late, you will have to pay interest. In such cases, because there is a delay in payment or filing of returns, the delay was for filing returns only. Now, because there is a delay in filing of returns, now whatever interest you are liable to pay should be paid only on the net GST liability payable in cash. Meaning, you pay only interest on this net amount. Because you have filed your return late, no problem, number of days delay you check and pay the interest on net GST payable. But if the delay in payment of tax is because you have not considered the amount in the return, meaning I knew that my tax liability is 1 lakh rupees, okay, but I had input tax credit only of 80,000 rupees. So what did I do? Instead of showing 1 lakh rupees, I showed my output tax liability as only 1 lakh rupees, and therefore my cash liability became 0. Meaning I purposefully did not show 20,000 rupees. I did not show. So delay is because why, and now this in future I pay. So why was the delay, sir? The delay was because I did not consider the amount only. The delay is because I have not considered the amount while filing the returns. In such cases, if the delay is for not considering the amount in the return, lawmaker says in such cases, if the delay is due to not considering the amount in the return, in such cases, you will have to pay the tax on the full amount. You will have to pay the tax on full amount whenever you, in future when you are paying, no, say I have considered only 80,000 rupees, 20,000 I have not considered because I was liable to pay in cash. Now, after 2 months in September, let us say this is for July month, in the September month, I take this 20,000. I pay the tax of this 20,000 by using utilization of input tax credit. Lawmaker says no. Even if you have taken input tax credit for making the payment of this tax, you will have to pay interest. So if the delay is for not considering the amount in the return, it can be by mistake you have not taken, meaning you had to show sale of 10 lakh rupees, but you showed a sale of 1 lakh rupees. No problem. Mistake is there. So there is a delay. The delay is because you have not considered the amount in the return, or the tax is paid under section 31 or 73 or 74, meaning you have done any fraud and officer has asked you to pay the taxes. In such cases, in the above cases, interest shall be payable on full tax liability, whether paid in cash or through utilization of input tax credit. In these two situations, you will have to pay interest on what amount, sir? The full amount which is liable to be paid by you, whether it is paid by you in cash or credit. Then registration chapter, one good chapter it is, very simple chapter, very easy chapter it is, registration. Section 22 talks about person liable for registration. Who is a person who is liable for registration? They say the supplier of goods or services should obtain registration in the state or union territory in which he makes taxable supplies if his aggregate turnover exceeds 20 lakh rupees. Who should take registration, sir? If you are a supplier of goods or services or both, then you should obtain a registration. You should obtain a registration. Where should you obtain a registration? You should obtain the registration in that state or union territory from where you are making taxable supply. If your aggregate turnover is exceeding 20 lakh rupees. So if your aggregate turnover crosses 20 lakh rupees, you should take registration in that state or union territory from where you are making taxable supplies. Now, this turnover limit of 20 lakh is reduced to 10 lakhs. The turnover limit of 20 lakhs is reduced to 10 lakhs in case of 4 special category states. In case of what, sir? 4 special category states, meaning in case of make my trip to Nagaland, the limit will not be 20 lakhs, the limit will be 10 lakhs. Sir, what is this make my trip to Nagaland? Manipur, Mizoram, Tripura and Nagaland. So if a person is doing business in these states or from these states, then for him the limit will be 10 lakhs instead of 20 lakhs. Okay, the limit of 10 lakhs will be applicable. Now, so if a person is making, say, let us say I have Priya sarees in Karnataka as well as in I have Priya sarees, let us say this example, I'll take first example. I have Priya sarees at 4 different places. Okay, so in Karnataka my turnover crosses 20 lakhs, but in other places my turnover is not crossing 20 lakhs. So does that mean that I should take registration only in Karnataka? Answer is no. Now I should see my aggregate turnover. Aggregate turnover means turnover on all India basis. My aggregate turnover over here is 44 lakhs and I am making taxable supplies everywhere. Though individually the turnover of Kerala, Tamil Nadu, Andhra Pradesh, etc. is not crossing the limit, I will have to take registration in all those 4 states. Then, if I am making taxable supply at one place and exempt supply at one place, I will have to take registration only where I am making taxable supply. Now, there is a notification called as notification number 10/2019. Now, what is this notification number 10/2019 telling? This notification number 10/2019 says, if you are a registered person who is exclusively supplying goods, if you are a person who is exclusively, if you are a person who is only supplying goods, and if your aggregate turnover does not exceed 40 lakh rupees. If you are a person who is exclusively supplying goods and if your aggregate turnover is not exceeding 40 lakh rupees, then you will be exempted from taking registration. You will not have to take registration. So, normally the limit for taking registration is 10 lakh, 20 lakhs, correct? But you will get a limit of 40 lakh rupees if you are supplying only goods. If you are an exclusive supplier of goods, then you will get a limit of 40 lakh rupees. You will get a limit of 40 lakh rupees. However, this 40 lakh limit is not applicable if you are liable for compulsory registration under section 24. If you are liable for what, sir? Compulsory registration. Section 24 talks about different cases wherein a person will have to take registration irrespective of turnover. So if you are that person for whom compulsory registration is applicable, you will have to take compulsory registration. Or if you are a person who is supplying only notified goods, if you are a person who is supplying pati bricks, or if you are a person who is doing business from notified states, or notified states are num must time pass. Num must time pass means if you are doing business in or from these places, Nagaland, Uttarakhand, Manipur, Meghalaya, Mizoram, Arunachal Pradesh, Sikkim, Tripura and Telangana and Puducherry. If you are doing business in these special category, these states, these notified states, then you also, for you, this limit of 40 lakhs is not applicable. Or you are a person who has opted for voluntary registration. Now, I want to take registration irrespective of what my turnover is. No problem, lawmaker says you take the registration. Section 22, subsection 3. Where the business of a taxable person registered is transferred due to succession or otherwise. If the business of a person is transferred because of the succession, because it is taken over by their children, or amalgamation merger as a going concern, then the transferee or the successor, whoever is the new person, he will have to take registration from the date of succession. That new person will have to take registration from the date of succession. Similarly, section 22 clause 4 says, section 22 subsection 4 says, if there is any transfer of business because of High Court order, if there is any transfer of business pursuant to any scheme of amalgamation, merger, demerger by an High Court order. So if there is an amalgamation, merger, demerger happening because of High Court order, then the new company, the transferee, will have to take registration from the date of certificate of incorporation. Now, section 23 talks about who are the persons who are not liable for registration. 22, person liable for registration. 23, persons not liable for registration.
Who are not liable for registration? A person making only exempt supply. If you are a person who is making only exempt supply, then you are not required to take registration. But why, sir? Why? What will you do with the registration? You don't have to pay tax at all. Or if you are a person who is making only non-taxable supplies, if you are a person who is making only supplies which are not taxables, or you are an agriculturist who is supplying produce out of cultivation of land, or you are a person who is an agriculturist and supplying whatever is cultivated by you out of whatever is produced by you out of cultivation of land. Then there are some more people who are exempted by way of a notification. If you are a person who is making interstate taxable supply of goods, interstate taxable supply of services up to 10 lakhs, 20 lakhs, or if you are a person who is making supplies which are taxable under reverse charge. So I am an advocate, my services are always taxable under reverse charge, so I don't have to take registration. If you are a person making interstate supply of notified handicrafted goods, so if I am making interstate supply of goods, they say it is compulsory registration, but if I am supplying handicrafted goods, I don't have to take registration. Or a person who is supplying services through e-commerce operator up to 10 lakhs, 20 lakhs. Section 24 talks about compulsory registration. Sir, are there any person who is required to take registration in the GST law compulsorily? Yes, they have to take registration compulsorily. There is no limit applicable to them. Even 1 rupee sale you make, you will have to take registration. When, sir, if you are a person making interstate taxable supply of goods, if you are a person who is making interstate taxable supply of goods, or you are a casual taxable person making taxable supplies, or if you are a casual taxable person who is making taxable supplies, or you are a person who is liable to pay tax under reverse charge, or you are any person who is required to pay tax under reverse charge, because you as a recipient have to pay tax. How will you pay taxes? Only when you take registration. Or you are a non-resident taxable person making taxable supplies, or you are an e-commerce operator who is required to collect tax under section 52, or you are a person who is supplying through an e-commerce operator liable to collect tax under 52, or you are an e-commerce operator who is required to pay tax under section 9 subsection 5, or you are a person who is required to deduct taxes under section 51, or you are an input service distributor, OIDAR service provider, online information database access and retrieval service provider, or you are any person who is making taxable supplies on behalf of another person, or you are a person who is supplying online money game services, and such other persons as will be notified by government. So basically this question, if they ask, it will be theory question. List any 8%, 6% who are liable to take registration compulsory. Now, what is the procedure for registration? One point which normally they ask is this point. If you are a person who is liable for registration, section 25 subsection 1 says, if you are a person who is liable for registration, you should apply for registration within 30 days of becoming liable. Within 30 days of becoming liable, you should apply for registration. Now, if you are a casual taxable person or a non-resident taxable person, you should apply for registration 5 days prior to commencement of business. So whenever you are going to going and commencing the business over there, 5 days before that, you should take the registration. And normally single registration will be granted to you for the entire state or union territory. For the entire state, how many registration will be given to you? One single registration will be given to you. But however, if you have place of business at multiple locations, then you can always apply for more than one registration. If a person has an unit at SEZ location, then he should obtain separate registration for such SEZ unit. So if you have a business at SEZ location, then for that SEZ unit you should obtain compulsory separate registration. A person can apply for registration on voluntary basis. Please note, normally single registration is given to you, correct? But if you have a place of business in SEZ, for non-SEZ location you apply one single registration, for SEZ you apply separate registration. Now sir, I am not liable at all for registration, sir, but still I want to apply for registration. Yes, you can apply. This point says, section 25 subsection 3 says, a person may apply for registration on voluntary basis even if he is not liable for registration. Then 25.4 and 25.5, deemed distinct person. Deemed distinct person we discussed in chapter number 1. Deemed distinct person. Then PAN is a document which is mandatorily required for taking registration. But if you are taking registration as a TDS or TCS person, for you instead of PAN you should give TAN. Then a non-resident taxable person, there are some other documents specified for taking registration, and registration will be granted to only after proper verification. Once the registration is granted, you will get your GSTN, and if you are a United Nations organizations, you will get UIN. Sir, what is the registration application called? Sir, registration application is called as GST REG 01, and the GST certificate will be given to you in GST REG 06. Once you get your GST number will be 15 digit, wherein first 2 digit will be the state code, then next 10 digit is your PAN number, then your registration number of that, how many registrations you have taken in that state. Depending on that, it will be 1, 2, 3, 4, etc. And one just a common number called as Z, and last digit will be checksum digit. Now, one important point which they normally test you in the examination is what is the effective date of registration. What do you mean by effective date of registration? What is the date from which you your registration is valid from? From which date will it be called that your registration is valid from? The effective date of registration. Now, I have applied for registration because I am liable for registration all on voluntary basis. So, we are discussing what, sir? What is the effective date of registration? They say to check what is the effective date of registration, tell me why did you apply for registration? Lawmakers are tell me why did you apply for registration? I have applied for registration because I was liable for registration, or I applied for registration on voluntary basis. So I applied for registration because I was liable for registration, meaning I was liable for registration because my turnover cost 20 lakhs, 10 lakhs, or because of compulsory registration. So I was liable for registration either under section 22 or 24. Now I have applied for registration within 30 days of becoming liable. I was liable and I applied for registration within 30 days of becoming liable. Lawmaker says in such cases, if you are liable for registration and you apply for registration within 30 days of becoming liable, your effective date of registration will be the date of grant of registration. The date on which the registration is granted to you, that will be the effective date of registration. No, sir, I have applied for, I was liable for registration by, I applied after 30 days. See, normally as per law, if you are liable for registration, you should apply within how many days? 30 days. And if you have applied within 30 days, the date when you were liable, that date will be taken as effective date of registration. Now, but if you are a person who is liable for registration and if you have applied after 30 days of becoming liable, for you the effective date of registration will be the date of grant of registration, the date when registration is granted to you. Sir, what if I am a person who has obtained registration on voluntary basis? Then for you the effective date of registration will be date of grant of registration. So if you are a person who is liable and if you apply after 30 days or you are applying for voluntary registration, for you the effective date of registration will be date of grant of registration. Sir, what do you mean by effective date of registration, sir? The date from which your registration shall be valid from. For example, on 1st of April I started my business, my turnover crossed 20 lakhs on 15th of May. I applied for registration on 26th of May. That means I applied for registration within 30 days and that registration was granted to me on 15th of June. So what is the effective date for me? For me the effective date will be the date I was liable for registration. Why? Because I applied within 30 days and that registration was granted to me. Now I was liable for registration on 15th of May. I applied for registration on 20th of June, meaning after 30 days. And the registration was granted to me on 28th of June. Lawmaker says effective date of registration shall be date of grant of registration. Section 26, they say if you are a person who has obtained registration under SGST Act or CGST Act, it is deemed that you have got registration under CGST Act also. So if you got registration under SGST or UTGST Act, by default you get registration under CGST Act. You don't have to take separate registration act wise. Then section 27, important section. Special provisions for a casual taxable person or a non-resident taxable person. So if you're a casual taxable person or a non-resident taxable person, what are the special provisions applicable to you? Who is a casual taxable person? Casual taxable person is that person who is occasionally undertaking the transaction of supply of goods or services or both at a place which is not his usual place of business. So if you occasionally go and do the business activity at that place which is not your usual place of business, then you will be called as casual taxable person at that place. Similarly, a non-resident person is a non-resident who is coming from outside India and doing business activity in India occasionally. Okay. Now, what are the special provisions applicable for them? Whether you are a casual taxable person or non-resident taxable person, you have to take registration under GST law compulsorily. You will have to take registration under GST law compulsorily and you will have to apply for registration 5 days prior to commencement of business. When should you apply for registration? 5 days before the commencement of business, you should apply for registration. Then, what is the validity of your registration?
See, first you should take compulsory registration and you should apply for registration 5 days before prior to commencement of business. Now, what is the validity of registration, sir? Your registration will be valid for number of days you are applying or 90 days, whichever is earlier. Number of days you have applied for or 90 days, whichever is earlier. Sir, can I extend my registration? Yes, you can extend your registration, but extension is possible only once. You can extend your registration. Extension is possible only once, and that extended registration also shall be valid for number of days you apply or 90 days, whichever is earlier. Then, casual taxable person and non-resident taxable person. If you are a casual taxable person or non-resident taxable person. Now, a casual taxable person or non-resident taxable person has to pay taxes in advance, and he has to pay at the time of registration. A casual taxable person and non-resident taxable person has to pay taxes in advance, and he has to pay taxes at the time of registration only. Now, sir, how will I pay the taxes? On the basis of estimated turnover. You will have to estimate your turnover for that period, whatever validity period, and you will have to pay taxes on that amount. In case of extension of validity, for that extended period, also you will have to pay the taxes in advance. Sir, what if I pay excess amount? Any excess amount paid by you will be refunded. Sir, what if I pay short amount? You will have to pay that balance amount, whatever is not paid by you, while filing your returns. Then, section 28 talks about amendment in registration. Now, I am a person who is registered. Now, I am a person who is registered. Now, I am making changes in the registration which is taken by me. So, if you are making a changes in the registration which is already taken by you, that means you are making an amendment in your registration. So, any amendment or change in the registration should be informed within 15 days of that change. So, if you are making any change in your registration, if you are making any amendment in your registration, about that change or amendment, you should make an information to the government within 15 days of that change. Now, this amendment can be of core fields or non-core fields. If the amendment is of core fields, then the application should be approved by officer. Only then amendment will be reflective. Okay, only then that amendment will be made. But if amendment is of non-core fields, then as soon as you make the changes, no approval is required, the changes will happen. Section 29 talks about cancellation of registration. When can registration of a person be cancelled? So there are 3 situations where the registration can be cancelled by the GST officer, proper officer, or legal heirs of registered person, or the registered person himself. So in 3 cases, the registered person himself can cancel, or his legal heirs can cancel, or the officer can cancel on the request made by registered person. When, sir? If the business is discontinued. If the registered person is discontinuing his business, or if there is a change in constitution of business, meaning I am closing my business, I can cancel my registration, or my business was a sole proprietorship concern, now I am converting it to partnership firm. There is a change in constitution of business, or where the taxable person is no longer liable for registration. I had taken registration because my turnover was 25 lakhs, 30 lakhs, but now I got a new limit of 40 lakhs, so I am not liable for registration. So I'm no longer liable for registration. I can cancel my registration. But there are situations given in section 29 subsection 2 where only the GST officer can cancel the registration. Only the proper officer can cancel the registration. Which are those situations, sir? Those situations are when registration is obtained by means of fraud, misstatement, suppression of facts. You have done some fraud for obtaining the registration. You have not obtained registration genuinely. You have obtained the registration by doing some fraud. Or registration, the registered person has contravened the provisions of GST law. Meaning the registered person who is there, he has contravened. He has not followed the law. He has taken input tax credit though he was not eligible. He has taken input tax credit. Or the person who has applied for voluntary registration has not started the business within 6 months from the date of taking registration. So normally, if you take a voluntary registration, you are supposed to obtain. If you are taking a voluntary registration, you are supposed to start the business within 6 months. If you don't start the business within 6 months of taking voluntary registration, then your registration will be cancelled. Or where the returns are not filed by the registered person for continuously 6 months or 2 quarters. Or such other reasons as may be given in rule number 21A. So what are the other reasons where your registration will be cancelled? If you don't conduct the business at the place where you have taken the registration, or if you issue the invoice without making the supply, or if you violate the provisions of anti-profiteering measures, or if you violate the provision of furnishing bank account details after obtaining registration. So after obtaining registration within 45 days, you are supposed to give bank details. If you don't give that, or he avails input tax credit in violation of section 16, or you're furnishing the details of outward supply in form GSTR 1 as amended in form GSTR 1A for more than one tax periods in excess of outward supply declared by him in the valid return. So normally you are supposed to see GSTR 1 is the return which you are supposed to file. You are making an amendment in GSTR 1. Now in GSTR 1 you have shown a sale of 10 lakh rupees. In amendment of GSTR 1 you have shown a sale of 15 lakh rupees, meaning you are showing sale of more than what was actually declared by you. That means you are cheating, or you are violating the provisos of section 86B. Now, once your registration is cancelled, you can always go for revocation. Revocation means what, sir? Your say officer has cancelled your registration. Now, officer has cancelled your registration. Because the officer has cancelled your registration, you want to know why he has cancelled the registration. Now, if the officer has cancelled the registration because of any wrong reasons, you can always apply for revocation. Revocation means you can ask him to take back his cancellation order. Now, within how many days can you apply for revocation? Within 90 days of cancellation. So, where the registration is cancelled by the proper officer, the taxpayer can apply for revocation. Revocation of cancellation should be done within 90 days from the date of cancellation of registration by proper officer. Now, this 90 days can be extended for further 90 days period. 90 days can be further extended to a period up to 180 days. Total period should be up to 180 days. You can extend it. So, this is all about your registration chapter. Next chapter is tax invoice, debit note, credit note. Very simple and easy chapter. Tax invoice, debit note and credit note. What is this chapter called as tax invoice, debit note and credit note telling? This chapter called as tax invoice, debit note, credit note will tell what is the type of documents there under GST law when you are supposed to issue. That is the only importance of this chapter. And one major discussion which is there in this chapter is what is the due date of issuing invoice. Now, for goods and services, what is the due date of issuing invoice? If you are a person who is supplying goods, and if the goods which is supplied by you involves movement of goods, if the supply which is made by you involves movement of goods, the invoice is required to be issued on or before removal of such goods. If the supply which you are making does not involve movement of goods, in such cases, invoice is required to be issued on or before delivery of such goods. And if it is a case of continuous supply of goods, invoice is required to be issued on successive statement date or successive payment date, whichever is earlier. And if it is a case of sale on approval basis, invoice is required to be issued on the date of approval or 6 months from the date of removal, whichever is earlier. So this basically talks about what, sir? What is the due date for issuing invoice? Due date for issuing invoice. Then for services, what is the due date for issuing invoice for services, sir? The due date for issuing invoice for services is, in normal cases, you should issue on or before completion or within 30 days from the date of completion. For services, on or before completing the provision of service or within 30 days from the date of completion. Now, this 30 days will be replaced by 45 days in case of banking company, financial institution and NBFC. And in case of continuous supply of services, invoice, if the due date of payment is ascertainable from the contract which is entered between the supplier and recipient on or before that date. Please note, we have discussed this part in which chapter, sir? Time of supply chapter. And if the due date of payment is not ascertainable on or before the date of receipt of payment, and if the payment is linked to completion on or before completion, the invoice is required to be issued. Okay. Now, what are the different types of document? The first type of document which is there is called as tax invoice. Now, who has to issue tax invoice? Tax invoice is required to be issued by a supplier who is making taxable supplies. Who has to issue tax invoice? That person who is making taxable supplies to issue tax invoice. Now, how many copies of tax invoice is required to be issued by you? You are required to issue 3 copies of tax invoice. Number of copies of tax invoice which are required to be issued is for goods 3 copies and for services 2 copies. Goods 3 copies, supplier, recipient and transporter. Services only 2 copies. One is for the supplier, one is for the recipient. Now, what are the contents of tax invoice? One of the examination attempt they have asked what is the content of tax invoice. You should have name, address and GST number of supplier, name, address and GST number of recipient, the document number, then date of issue of that document, then description of those goods and services, HSN code. HSN code is what, sir? HSN code is the code which you are supposed to give. The code which you are supposed to give, I will discuss about that. And quantity of the goods, unique quantity code. What is the code of that goods? Whether it is kgs, meters, numbers, etc. What is the unique quantity code? Then rate per unit, value of supply, the breakup of tax amount, total value of the invoice, etc. And signature, you have to give your signature details also, whether tax is payable under reverse charge or not, and QR code details is also required to be given. Now, some important points are invoice number and HSN code. In that content list, 2 points are very important. One is invoice number and HSN code. Sir, what is this invoice number, sir? The invoice number, they say, invoice number should be unique for every financial year. For every year, the invoice number which you are giving should be unique. It should not be same. And they should be consecutively serially numbered and should not have more than 16 characteristics. This invoice number which is there, they should be consecutively serially numbered and it should not have more than 15 characteristics. It can contain alphabets or it can be alphanumeric, and it should not contain any special characteristics except forward slash and hyphen. It should not have any special characteristics in the invoice number which is there. Whatever invoice number you are having, it should not have any special characteristics except forward slash and hyphen dash. Then HSN code details. See, HSN is what, sir? HSN is a system of system of identification or classification of different goods and services. So it is a system which is adopted for classifying the goods and services. What is the full form of HSN? Harmonized system of nomenclature. HSN means what, sir? Harmonized system of nomenclature. It is an 8-digit code which is used for classification of goods and services. If you want to classify the different goods and services, you use this. And HSN code you are supposed to give in your tax invoice. Now, how many digits am I supposed to give? It depends on, see, there are totally 8 digits, but you are not supposed to give total 8 digits. Depends on what is your aggregate turnover. If your aggregate turnover is up to, if your aggregate turnover is up to 5 crore rupees, you have to give 4-digit HSN code. And if your aggregate turnover for B2B supplies, and if your aggregate turnover is up to 5 crores, then you have to give 4-digit HSN code for B2C. But for B2C, it is completely optional. Sir, repeat. See, HSN code is an 8-digit code. You have to give how many digits, sir? You have to give only 4-digit code. You have to give only 4-digit code. When should I give 4-digit code? If my turnover is up to 5 crore rupees. So if I am a person who is registered under the GST law, I should compulsorily give 4-digit code for B2B supplies. If my turnover is more than 5 crores, sir, that will become 6-digit. Now for B2C, it is optional in case your turnover is up to 5 crores. If your turnover is more than 5 crores, you have to compulsorily give for B2C supplies also. So basically for B2B supplies, 4-digit, and for B2C supplies also 4-digit if the turnover is up to 5 crores. But for B2C, it is optional. And if the turnover is more than 5 crores, whether it is B2B or B2C, it does not matter. Always give 5-digit code. Now, no tax invoice is required to be issued by you if you are making a supply to an unregistered person and that unregistered person to whom you have made the supply is not asking for invoice. You don't have to give tax invoice when the supply is made to an unregistered person, the value of supply is less than 200 rupees and that unregistered person does not require any invoice. So if these 3 conditions should be satisfied, compulsorily all the 3 conditions should be satisfied. What are these 3 conditions which are required to be satisfied, sir? First condition is the supply should be to an unregistered person. The value of the supply should be less than 200 rupees and that unregistered person should not require, or he says that I don't need any invoices. Now for these supplies made to all this unregistered person, you don't have to give a tax invoice. Then sir, problem will be there. No, you will not record that sales only. No, lawmaker says you don't have to give individual tax invoice. You don't have to give individual tax invoice, but you will have to give one single consolidated tax invoice. Instead of issuing separate tax invoice for above unregistered person, a single consolidated tax invoice can be issued for supplies made to all these unregistered person cover above. So you can issue one single tax invoice for all the supplies made to these people. Now invoice does not require any signature if it is computer generated invoice. Then another important point is with respect to what, sir? E-invoicing provision. E-invoice or invoicing provision. They say, what is e-invoicing? E-invoicing is a system in which B2B invoices generated by a taxpayer are authenticated electronically by GST portal. What is e-invoicing, sir? It is a system in which the B2B invoices which are generated by a taxpayer are authenticated electronically. Basically, it is not generating the invoice online. It is a system by which whatever invoice you have generated, whether it is generated online or offline, whatever invoice you have generated, for that you are supposed to take authentication electronically from the GST portal. Now, under e-invoicing system, an identification number called as invoice reference number will be issued for every invoice which is generated on invoice registration portal. Now, which is managed by whom, sir? This invoice registration portal is managed by GSTN. E-invoice is required to be generated by a registered person whose aggregate turnover in any of the financial year starting from financial year 17-18 exceeds 5 crore rupees. Who has to generate e-invoice? Any person whose turnover crosses 5 crore rupees. Starting from 17-18, in any of the year, if your turnover crosses 5 crore rupees, you have to generate e-invoice. Then, exemption from e-invoicing. In these cases, you are not supposed to generate e-invoice, meaning these people are exempted from generating e-invoice even if their turnover is crossing 5 crore rupees. Who are those people, sir? No e-invoice in following cases. Government CPICs. In case of government CPICs, e-invoice is not required to be generated at all. What do you mean by government CPICs? If you are a government department or a local authority, if you are a cinema, hall or multiplexes, if you are a passenger transport service provider, if you are an insurance company, banking company or a financial institution, or if you are a GTA transporting the goods by road, or if you are an SEZ unit. So if you fall under these categories, you don't have to generate the e-invoice at all. Now there is one more concept called as dynamic QR code. Just like e-invoicing, there is one more concept called as dynamic QR code. For whom is this dynamic QR code applicable? Dynamic QR code says all the B2B supplies issued by all the B2C invoices issued by a registered person whose aggregate turnover is more than 500 crores. So this provision, what provision, sir? This provision of dynamic QR code will come to that person whose aggregate turnover is more than 500 crores. To that person whose aggregate turnover is more than 500 crores. Now, for whatever B2C supplies which they are making, for the purpose of enabling and increasing digital payment, say for us, we are B2C customers, for us to make digital payments, to enable us to make digital payments, we are supposed to give our QR code details. Now, the QR code is not applicable. The QR code is not applicable in this e-invoicing provision or QR code provision, QR code provision and e-invoicing provision, both are not applicable to government CPICs. Who are government CPICs? These people. Now, what are the different parameters you are supposed to capture in this QR code? QR code, sir. You should have supplier ka GST number, supplier ka UPI ID, then pay's bank account details, the person whom you are paying, that is supplier's bank account details, invoice number and invoice date, total invoice value and GST amount ka breakup should be compulsorily there. These are the information which are mandatory required to be present in invoice. This dynamic QR code. Then what is the next document which you are supposed to issue, sir? The next document which is required to be issued by you is called as what, sir? Revised tax invoice. The next document which you are required to be issued by you is called as what, sir? Revised tax invoice. Sir, what is revised tax invoice? See, basically, if you are a person who is liable for registration, from the date you are liable for registration till the date of grant of registration, you have made some supply. So for that supply made by you from the date you are liable for registration till the date of grant of registration, you are supposed to issue a document called as revised tax invoice. So revised tax invoice is a document which is required to be issued by a person for the supply made by him from the date when he is liable for registration till the date of grant of registration. Then bill of supply. Bill of supply is now this revised tax invoice is required to be issued within 1 month from the date of grant of registration. Now, then next document is what, sir? Bill of supply. What is a bill of supply? Bill of supply is a document issued by a person who is making exempted supply. So if you are a person who is making only exempt supply, or if you are a person who is making supply on which tax is required to be paid under section 10, meaning if you are a composition dealer making the supplies on which tax is required to be paid under section 10, then in such cases for you this provision is applicable. Bill of supply. Bill of supply, it is issued by a person who is making exempt supply or a person who is paying tax under section 10. Where a registered person makes taxable as well as exempt supply, in such cases he will issue a single document called as invoice cum bill of supply. Then receipt voucher is required to be issued by you. When are you supposed to issue receipt voucher? You are supposed to issue receipt voucher if you are supposed to issue document called as receipt voucher if you receive any payment before making the supply. If you receive any money if you receive any money before making the supply, you are required to issue a document called as receipt voucher. Receipt voucher is required to be issued if you receive any advance for supply of goods or services, you should issue a receipt voucher. Now, where at the time of receipt voucher, if the rate of tax is not determinable, the rate of tax will be 18%. If the nature of supply is not determinable, the nature of supply will be interstate supply. What is refund voucher? Refund voucher means what, sir? Now you have received the money, you have to refund that money. At the time of receipt of money, you give receipt voucher. At the time of refund of money, you give refund voucher, provided you have not made any supply or you have not issued any invoice. Refund voucher, where any advance is received for supply of goods or services or both, and subsequently no supply is made or no tax invoice is issued, then the registered person shall issue a refund voucher to refund the amount. To refund that amount, he has to issue a refund voucher. Then payment voucher, a registered person who receives supply taxable under reverse charge. If you are a registered person who is receiving that supply which is taxable under reverse charge, you, while making the payment for such supplier, issue a document called as payment voucher. Then we have something called as delivery challan. Delivery challan means what, sir? It is a document which is required to be given by you for as a proof that you have delivered the goods or there is a movement of goods happening. When is delivery challan required to be issued? When you are supplying liquid gas where the quantity is not known at the time of transportation, or transportation of goods or goods. You are transporting the goods for job work purpose, or transportation of goods for any reasons other than supply, or for such other cases as may be notified by the board. Delivery challan, how many copies is required to be issued? Serial number to be declared in delivery challan. You should declare 16-digit number, same like invoice, not more than 16-digit number, and it should be in multiple series, and it should be issued at the time of removal of goods. Now, goods transported in semi-knocked down condition and completely knocked down condition. Sometimes what happens is goods are transported in parts, semi-knocked down conditions and completely knocked down conditions. In case the goods are transported in parts or lots or installment, what is the procedure you are supposed to follow? Then the supplier shall issue a complete tax invoice before the dispatch of first consignment. Before the first consignment is going, the supplier should issue or generate the delivery challan, and the supplier shall issue a delivery challan for each and every subsequent consignment giving reference to the invoice. For each and every subsequent supply which is happening, you are supposed to attached with that whatever delivery challan is required to be given by you. So first issue the invoice for complete value. For every consignment which is going, give a delivery challan, and copies of delivery challan should be accompanied with the copy of certified invoice. Now every delivery challan which is going, with that you should attach the copy of invoice, and original copy of invoice should be given only at the time of when the last consignment is sent. Only when last consignment is sent. Next, what, sir? See, a GTA is required to issue a document called as consignment note. Now, what are the contents of consignment note? Good question. Examination, it is asked, so it is good question. What are the contents of consignment note? Gross vehicle weight of consignment should be there. Name of the consignor and name of the consignee should be there. Registration number of goods carriage, the vehicle in which goods are going, that registration number. Details of goods transported, details of place of supply and place of origin and place of destination. Then GST number of the person who is liable to pay tax, whether it is consignor or consignee, or any other information as may be prescribed under Rule 46. Then credit. Credit note and debit note. Just understand the simple logic. Credit note is required to be issued by you to reduce the value of invoice which is already issued, and debit note is required to be issued by you to increase the value of invoice which is already issued by you. Credit note shall be issued. When it shall be issued, sir? When the taxable supply is declared by you in the invoice is more than the actual supplies. So the amount which is declared by you in the invoice is actually less. When the taxable supply declared in the invoice is more than whatever actual, when the supply which is made by you is worth rupees 5 lakhs, but in the invoice you have shown 6 lakhs, to reduce credit note. the tax rate declared by you in the invoice is more than the actual tax rate applicable for that goods and services. Okay, or the quantity received is less than the actual quantity declared on the invoice, or the value of goods or services, the quality of goods and services are deficient, or the goods are returned. So what are the situations, sir? 5 situations. When you have shown more value, when you have shown more tax rate, when the quantity sent by you is less than the actual quantity, meaning when the quality of the goods are deficient, or there is sales return happening. Now, what is the time limit within which this credit note is required to be declared, sir? 30th November of following year, or date of filing annual return, whichever is earlier. Debit note, sir. Debit note. Debit note is issued to increase the value of invoice. Meaning, if the taxable value declared on the invoice is less than the actual taxable value, then give a debit note. If the tax rate declared by you in the invoice is less than the actual tax rate, debit note. If the quantity received is more than the actual quantity, give the debit note. Then, time limit for declaring the details of debit note. Any registered person who issues a debit note shall declare the details of such debit note in the return for the month during which such debit note has been issued. So when should I declare the details of the debit note, sir? You should declare in that return in the return for the month for which the debit note was issued. Now here, unlike your credit note, you don't have an option debit note, because it will increase your tax liability. Officer wants the tax from you immediately. So you don't have an option to declare the debit note till 30th November. Compulsory you should declare in that month only for which you have issued it. Sir, what if I declare late? Interest you'll have to pay. Next, e-way bill. E-way bill is a document which is required to be issued for movement of goods. So before the movement of the goods is happening, you are required to issue a document called as e-way bill. So when is e-way bill required to be issued, sir? Whenever there is a movement of goods whose consignment value is more than 50,000, whether that movement is because of supply for any reasons other than supply, or you are making a supply to an unregistered person. It does not matter what is the reason. For any of these reasons, you are required to give a document called as e-way bill. You are required to give a document called as what, sir? E-way bill. E-way bill is required to be generated by you in a form called as Form GST EWB 01. Form GST EWB 01 is the form. Now, who will cause the movement of goods? Please note, when the consignment value is more than 50,000, then only e-way bill is required to be given by you. Now, what do you mean by consignment value, sir? Consignment value means the value of the goods declared. Consignment value of the goods shall be the value determined as per section 15, which is mentioned by you in the invoice, bill of supply, delivery challan, etc. So whatever value is there, and also includes GST. So value as per section 15, including GST amount, but it shall not include the value of exempt supply. Now, who causes the movement? Who should generate, sir? The person who is causing the movement of goods should generate e-way bill. Who causes the movement of goods? If supplier is registered and undertakes the movement of goods, the movement is caused by supplier. If the recipient is registered and he says that I will move the goods, then the movement is caused by recipient. And if the goods are supplied by an unregistered supplier to a registered recipient, then the movement will be caused by such registered recipient. Then in case of bill to ship to concept, only one e-way bill is required to be generated. Now, information, see, e-way bill has two parts. E-way bill GST EWB 01 has two parts, part A and part B. Part A comprises about your sale car related details such as GST number of supplier, GST number of recipient, place of supply, place of delivery, document number, then document number, document date, value of goods, HSN codes, etc. Reason why you are supplying. And part B will contain your transport car related details. Who is the transporter? What is the vehicle number, etc. When is it mandatory to furnish the details of a conveyance in part B? E-way bill is valid for, this point is not required. And okay, when you transfer the goods from one conveyance to another conveyance, what is the procedure which you have to follow? Where the goods are transferred from one conveyance to another conveyance, say for example, you are supplying the goods, and in between what happens, sir, there was an accident of that vehicle in which the goods were transported. So you are going to transfer the goods from one vehicle at that accident vehicle to another vehicle. So where the goods are transferred from one conveyance to another conveyance, the consignor or the recipient who has given the information in part A, or the transporter shall, before the transfer of the goods and further movement, before transferring the goods and further movement of goods, update the details of conveyance in part B. They should update the details of the new conveyance in part B. However, once the details of the conveyance has been updated by the transporter in part B, the consignor or the recipient, as the case may be, who has furnished the information in part A, shall not be allowed to assign e-way bill to any other person. Now, e-way bill cannot be edited by you. It can be cancelled within 24 hours. Then you are, if you want to generate, if more than one goods are going in a same vehicle, you can generate a consolidated e-way bill. Then validity of e-way bill. E-way bill will be valid for 1 day for every 220 kilometers or part thereof in case of over dimension cargo, and in case of other than over dimension cargo, 200 kilometer. For every 200 kilometer or part of 200 kilometer, the validity is 1 day. You can extend the validity 8 hours before or after the expiry of validity period. Now, other points with respect to e-way bill is what, sir? In case of the goods are transported by railway, you are not required to give that railway vehicle number, etc. Okay, but delivery will happen only when you display the e-way bill at the time of delivery of the goods. E-way bill can be generated even if the value is less than 50,000. E-way bill of one state is valid for another state also. Once e-way bill is generated, it cannot be edited for any mistakes. Now, you will be blocked from generating e-way bill if e-way bill cannot be generated in following cases: if composition dealer has not paid taxes for 2 consecutive quarters, regular registered person has not filed the return for 2 consecutive tax period, regular registered person has not filed GSTR1 for 2 consecutive quarters, or you are a person whose registration has been suspended because of any reason. Sir, are there any reasons where e-way bill is not required to be generated? Yes, there are some reasons when e-way bill is not required to be generated by you. What are those reasons, sir? Where the goods are transported are LPG, kerosene, or jewelry, currency you are transporting, where you are transporting goods in non-motorized vehicle, where the goods being transported by you are going to customs port, to inland container depot, and the goods transported by you are alcoholic liquor for human consumption or HP man, etc. Or where the supply which you are making is not a supply as per schedule number 3, or where the consignor is the central government, state government, union territory, local authority, etc. Then returns under GST. Returns under GST basically talks about what are the different types of returns under GST, who has to file it. Now, normally for regular dealer, whatever return is there, that return is important. Okay, for a regular dealer, there is a return called as GSTR1. This is a return which he has to file for making the outward supply. And he has to file a return called as GSTR3B for taking input tax credit and payment of taxes. GSTR1 normally is required to be filed by 11th of next month, and GSTR3B is required to be filed by 20th of next month. GSTR1 and 3B is required to be filed by all the registered person except non-resident taxable person, input service distributor, then TDS person, TCS person, OIDAR service provider, and composition dealer, because for these people there is a separate return. The contents of GSTR3B, GSTR1 is that it will have the supplier GST number, month, what is this, financial year, due date, trade name, legal name, what are the different types of supplies you are making, etc. That content will be there. Now, due date of GSTR1, see, basically, though the due date I told you is 11th and 20th of next month, actual due date of GSTR1 is what, sir? GSTR1, the actual due date of filing GSTR1 can be filed by you either on monthly basis or on quarterly basis. Now, if you are a person who is filing GSTR1 on monthly basis, for you the due date will be 11th of next month. Now, who should file it on monthly basis? Those people whose turnover is more than 5 crores should compulsorily file the return on monthly basis. Those people whose turnover is more than 5 crores. And quarterly basis is an optional. For those people whose turnover is less than or equal to 5 crores, they have an option to file on quarterly basis. Now, if you are opting for quarterly filing of returns, then you have to select an option called as QRMP scheme. There is a scheme applicable for you called as QRMP scheme, which is called as quarterly return monthly payment, wherein 13th of next month following the quarter, you are required to file your return. When, sir? 13th of next month following the quarter. Now, GSTR3B is a summary return. This is a return which will take the details of outward supply and output tax from your GSTR1 and total input tax credit from your GSTR3B. Based on this, whatever tax is required to be paid is required to be paid by you. The due date of GSTR3B for monthly people, it is 20th of next month, and for quarterly people, it can be 22nd or 24th of next month following the quarter. QRMP scheme for quarterly people. See, there is something called as QRMP scheme. QRMP scheme, Under QRMP scheme, the return GSTR1 is required to be filed by you on quarterly basis by 13th of next month and 3B by 22nd or 24th of next month. Now, but you have to make the payment of taxes. See, what is the scheme telling? Quarterly return. Return to we know. Monthly payment. You will have to make the payment of taxes on monthly basis. You have to pay the taxes every month. The due date of paying taxes is what's the 25th of next month for first 2 quarters of the month, and last month of the quarter you have to pay along with GSTR 3. How much to pay, sir? How much tax to pay? You can pay tax either on self-assessment basis or you can pay tax on fixed sum basis. Self-assessment basis means what, sir? Compute your tax liability and check how much you are required to pay in cash. That amount you have to pay. So pay the tax liability in cash for that month. The tax liability in cash will be output tax minus input tax difference amount. Or pay a fixed sum. Fixed sum is what, sir? 35% of taxes paid by you in last quarter. Whatever tax is paid by you in last quarter, 35% of that is required to be paid for first 2 quarters. Now, for those people who are opting for QRMP scheme, because they are required to file the return once in 3 months, for them there is a facility which they have given called as IFF, Invoice Furnishing Facility. IFF, it is not an invoice, it is just a facility. It is just a facility given to quarterly filers to upload the details of B2B supplies which is made by them on monthly basis. So it is a facility which is given by them to upload all those B2B supplies which is made by them on monthly basis. The due date is 13th of next month, every month 13th. Now this is not a return, okay, it is just a facility. All the invoices, debit note and credit note, the details of which is uploaded in Invoice Furnishing Facility IFF, they will automatically be imported to GSTR1. You don't have to re-upload everything in GSTR1. Now, amendment and rectification of returns, that amendment and rectification is required to be made by 30th November of next year. Then what are the other types of return? If you're a composition dealer, you have to file a return called as GSTR4. And if you're a non-resident taxable person, you have to file a return called as GSTR5. Due date of filing GSTR5 is 20th of next month or within 7 days of expiry of validity. Or if you are an input service distributor, GSTR6, TDS person GSTR7, and TCS person GSTR8. Annual return is there called as GSTR9. And then final return is recorded filed by you. This is important. Final return is recorded filed by you called as GSTR10. This final return is recorded filed within 3 months from the date of cancellation or from the date of order of cancellation, whichever is later. And first return is a return which is recorded filed by you if you are a person for the supplies made by you from the date you are liable for registration till the date of grant of registration. Now, last point we'll see customs law. Customs law basic, major important topic under customs law is your valuation. So entry number 83 of Union List of 7th schedule of Indian Constitution has given the power to central government to levy duties of customs. Customs Act 1962 provides for levy of customs duty. Now, the customs, I'll complete discuss this point on brief only, okay. So, territorial jurisdiction and applicability. The Customs Act applies to whole of India. India includes what's the territorial waters of India, meaning Customs Act applies not only to Indian part but also up to 12 nautical miles from India, and up to 200 nautical miles area is called as exclusive economic zone. Now, what do you mean by goods? Goods includes vessel, vehicle, aircraft, baggage, currency and negotiable instrument, currency and other movable property. Import means bringing goods into India from a place outside India. Imported goods means goods which are brought into India from a place outside India but which are not cleared for home consumption, meaning you have not taken delivery of that goods. Dutiable goods means those goods on which custom duty is applicable. Then importer is the person who is calling himself to be an importer. Export is taking goods out of India to any country outside India. Export goods means goods that are intended for export. Exporter means same, a person who calls himself to be exporter. Prohibited goods means the import or export of which cannot be done at all. Stores is the goods which are used in vessel, vehicle, including the fuel, spare parts, etc. Now, charging section is section 12 of Customs Act. Custom duty is levied on goods imported into India or exported from India at the rate prescribed in Custom Tariff Act, and the duties of customs will be levied on goods and not on the person. There is something which is important point, something called as transit goods and transship goods. Transit goods means goods which pass through India to another country. meaning the goods are coming, they're passing through India. Meaning, for example, you're going from one place to another place. Let us say I'm going from Bangalore to Delhi. So from Karnataka, I'll have to go to Delhi. I will have to pass through different states like Maharashtra, Madhya Pradesh, Uttar Pradesh, etc. So this is called as what? Transit goods. Meaning in the same vehicle I am going. With me there is one more person. My friend is there. He got down in Maharashtra and from there he took a bus to Hyderabad. That is called as transshipment. Transship goods arrive at Indian port and are transferred to another vessel or aircraft. Movement happens through Indian territory. Here, movement remains within the same port, but it is shifted to another carrier. Dutiability, no custom duty is required to be paid on transit goods and transship goods. Monitoring goods are transported under customer supervision and goods are remain in customs controlled area. Pilferage, duty remission, etc. There are different types of duties. See, the custom duty rate for imported goods. See, custom duty rates, if you want to know, you should go to Customs Tariff Area 1975. For all the import duty, the custom duty rate is given in Schedule 1 of Custom Tariff Act. And for all the exported goods, the export duty rates are given in Schedule 2 of Custom Tariff Act. Okay, basic custom duty is normally the basic custom duty. Where is the basic custom duty related information given in first schedule of Custom Tariff Act. Now, social welfare surcharge is a surcharge which you have to levy on. See, basic custom duty is required to be levied on assessable value. Social welfare surcharge is levied on basic custom duty ka 10%, compulsory 10% on basic custom duty. IGST is levied as per IGST law on goods imported into India. If there is any product which you are importing into India and on that imported product, if there is IGST applicable in India, then you have to levy IGST whenever you are importing. Anti-dumping duty is levied and it is levied for 5 years, can be extended for 5 years. Safeguarding duty is levied, it can be levied for 4 years, can be extended for 10 years completely. Now in examination, one question will be asked is, when will you not be liable for paying this safeguarding duty? When you are importing from a single country and the total import from that country is less than 3% of the total imports. When you are importing from more than one country and the total import is less than 9%, no safeguarding duty is levied. Or the person who is importing is an export oriented unit, 100% EOU, or you are an SEZ or EEZ unit. Then custom duty, for export duty, the rates are given in second schedule of Customs Tariff Act. Now valuations under customs, very important. You see this point, this is the basic important point. Custom duties are levied on what value, sir? The value on which custom duty is levied is called as assessable value. Assessable value you have to find. On that you will levy basic custom duty, whatever rate is there. Then you will levy 10% of basic custom duty will be levied as social welfare surcharge. And if there is any other type of custom duty like protective duty, safeguarding duty, anti-dumping duty, whatever assessable value is there, into that rate of that duty should be levied. Now the total of assessable value and these custom duties is called as landed value. On this landed value you should levy IGST and GST compensation cess. The total value which you get is the total value of imported goods. Now in the question they will ask you what is the total custom duty, which is nothing but total value of imported goods minus assessable value is the total of custom duty which is paid by you. Then what do you mean by assessable value? Assessable value is the value on which tax is levied. Assessable value is also called as CIF value. The assessable value or CIF value for imported goods, you take the value of the goods at exporters ka factory price and see the freight charges paid from exporter ka country. See at exporter ka factory what is the value, from that factory to that port, whatever transportation you have paid, then it will be loaded in the ship, loading and unloading charges you add, then that goods will be moving to India. Now after adding all these things, you take value of the goods at exporter ka factory price, freight and insurance from exporter ka factory to exporter ka port, then handling and loading charges, that will give you FOB value. Please note, FOB value is not important, FOB value for customs is important. Sometimes FOB value for customs and FOB value may be same if these additions are not there. Okay. Now to this FOB value, what are you supposed to do, sir? To this FOB value, you will have to make some Rule 10(1) additions. You will have to add commission, except buying commission. You will have to add packing charges, except cost of durable and returnable packing. meaning you will have to add commission, whatever commission is paid by you to any person, except buying commission. In the question, if they say it is a buying commission, don't add. Whatever type of packing charges you are paying, that also should be added, except durable and returnable packing. In the question, if they say that this is the packing for this packing is durable and it is required to be returned, then don't add it. Design and engineering charges should be added if it is undertaken outside India. Royalty and fees, license fees is required to be added. Free materials which are supplied by you, the free material value should be added, etc. Value of subsequent resale if you are paying anything to the exporter. Now the total of these things will be called as FOB for customs. On this, you should add actual freight charges and actual insurance charges that will give you assessable value, also called as cost insurance freight. Sometimes what may happen is actual freight charges and actual insurance charges may not be available. So if cost of freight, if the goods are imported through sea route, normally take the freight charges to be actual freight charges, whatever is given in the question. And if the goods are imported through air route, then for freight charges, what will you do, sir? If the goods are imported through air route, you take the actual freight charges or take 20% of FOB for customs, whichever is less. Meaning for goods coming through air route, the freight charges should not be more than 20% of FOB for, value for customs. Sir, freight information is not given at all. Then freight charges should be taken. If the freight charges are not ascertainable, freight charges will be 20% of FOB value for customs. Now, insurance cost. Insurance cost, normally take your actual insurance cost. Sir, actual insurance cost is not given, sir. Then take insurance cost to be equal to 1.125% of FOB value for customs. Now, the major question which is asked is, sir, what is the exchange rate which I have to take? What is the exchange rate which I have to take whenever I am importing any goods? What is the exchange rate I have to take for converting the foreign currency into Indian rupees? The exchange rate which is notified by CBIC only should be taken. Exchange rate notified by whom, sir? Exchange rate notified by CBIC should be taken. CBIC, exchange rate notified by CBIC should be taken. For imported goods, you take the exchange rate as on the date of submission of bill of entry. Whenever you are submitting the bill of entry, that exchange rate you should take. And for exported goods, the exchange rate as on the date of submission of shipping bill, or also called as bill of export, should be taken. Then, sir, exchange rate I understood, sir. My question to you is, what is the custom duty rate which I should take? The custom duty rate which you are supposed to take is, for imported goods, the custom duty rate which should be taken by you should be the rate mentioned, custom duty rate as on the date of bill of entry or as on the date of grant of entry inwards, whichever is later. Whenever you are submitting bill of entry or whenever the officer has given entry inwards, now in that whatever is late, that date ka custom duty rate should be taken. And for exported goods, custom duty rate as on the date of grant of let export order, that date ka custom duty rate should be taken. Now, assessable value for exported goods. For exported goods, you should take FOB value. What is FOB value, sir? FOB value is FOB value is what, sir? Take the value of the goods at ex factory price. Then to that add freight charges, add handling charges. You will get your FOB value for customs. Yeah, that is all about your customs law, and that is all about your marathon also. I hope you enjoyed learning marathon. I would say all the very best for your examination. Definitely you are going to clear your examination with great marks. Undoubtedly you are going to clear your examination with great marks. Okay, so all the very best for your examination. Take care, enjoy, happy learning. Bye. And please check out our other marathons also. There are other marathons also which are uploaded by our other faculties. I mean, I think costing is already uploaded, accounts will be uploaded, and yeah, law will be uploaded by Karthik sir, Akhilesh sir will upload, and Ashish sir has already uploaded. So you can please watch this marathon also. So yeah, enjoy. Bye.